compared to the inter level, final level should be easy. Okay, here also it is easy only. But what makes it complicated, or what is needed from you, how should be your approach? So all those things we'll talk little detailedly. Then we'll go into the basics here. Okay. So first of all, this batch which you are starting, so all the face-to-face students as well as the online students also, the topics or the amendments which we are discussing are applicable only for December 2025 exams. Okay. Every year, sir, in income tax, how the amendments will come means based on the Finance Act. Before the commencement of a financial year, usually on Feb 1st, central government will introduce a budget. Through that budget, whatever the changes they want to bring, that could be incorporated or they will be introduced. But this time, there is elections also there. So I mean, last time 2024, there is elections. Whenever there's elections, that time, there'll be two budgets. Okay, one is like, sir, usually for us, like the central government related, the parliament elections will go in like April, May, June, that time. So in February, they'll introduce one budget. Okay, but the government which has came into power will introduce again one more budget. The first one is an interim budget. For the meanwhile, for the time being, they'll introduce one budget. Once the new government has formed, then again they'll come up with a second budget, a second Finance Act. Okay, so for us currently, Finance Act 2 is applicable. Okay, which was came in like 23rd July 2024. So 23rd July 2024, Finance Act 2 has been introduced. And one more thing, whenever every 5 years we'll have elections, usually, unless, I mean, the government has collapsed, otherwise there will be elections for 5 years. Whenever there is a change in government, the upcoming government introduces a budget, right? That time they'll make more amendments because the new government has recently or just now came the power. So they have the flexibility to do something new there that time. So that's why whenever they bring Finance Act 2, it will be there in 2019, maybe there it was there in 2014. So there will be two Finance Acts that time. So in Finance Act 2, usually they bring more amendments. That's why comparatively, considering the past attempts and all, for the recent June 2025 attempt and for this December 2025 attempt, we'll be having some more amendments. Okay. So considering your inter-level DT preparation, compared to now, you'll see certain structural basic amendments also because there is this Finance Act 2 came in between. Okay. Are you able to understand, right, sir? Whenever, I mean, if you're thinking about like, if at all, what I need to take, if at all, I'll write my attempt in June 2026 and all. If at all, you students are having any doubt, na? So understand, this many amendments may not be there for June 2026. Okay? Compared to the December 2024 and June 2025, there are more amendments. But December 2025 and June 2026, there will not be that many amendments, which will be few only. And one more thing, whenever you think of amendments, see, fundamentally, it will not change every time. The rate might get changed. Or in a particular place, the method of computation might get changed. The whole DT will not change, right? Whatever you learnt in inter-level only, that basics, that fundamentals will be here also. Okay, whatever the changes will come, or only to a little extent, so you need not to bother much about that. Okay? If you are conceptually strong, if you learn here conceptually strong also, if at all there's a need of learning amendments also, you could easily understand them. It's not a big problem. See, for us like amendments made in Finance Act 2024-25 will be discussed. So if you're a student specifically looking for June 2026 exams only, then this might not be the suitable batch for you because the workbooks, the questions which we solve, everything will be in line with the December 2025 exams only. Okay. Now coming to our paper, sir, DT, it has two parts, section A and section B. Okay. Let me address you one more thing, sir. Every one of you watched Pushpa movie? Pushpa 2. Okay. See, you and your friend went to Pushpa movie, Pushpa 2. Okay. Assuming there is no stampede that day. You went safely and watched the movie. You have watched Pushpa 1, whereas your friend didn't watch Pushpa 1. He straight away came to Pushpa 2. See, in between, in the half of the movie, like where Rashmika is going to temple. Okay, Srivalli went to temple. There, one person randomly, tall guy, came to there and he'll be looking differently at Rashmika. Okay, so assume me as that friend asking you like, who is that guy? Why he is looking at Rashmika like that? Then you will be saying like what? He is brother of Pushpa. Okay, that and all already explained in the Pushpa 1, you will say. Okay, first time done. Then afterwards, like Mangalam Sinu will come. Okay, he'll be again having some conflict with Pushpa, Allu Arjun. Again, I'm asking like, what happened? Why there is a conflict between this guy and Pushpa? I'm again asking. Again, you same question. Okay, you might have watched first part and have came to here. Okay, don't ask me all these questions again and again and again. So, for the sake again, you will be explaining me what? Okay, this has happened in the part 1. So, that's why they are having a conflict. Again, third instance. Now, this time, okay, I have watched till interval. Then again, I'm asking, what is the main conflict between this Fahad Fazil and Pushpa? Okay, hey, that's the main cinema. That if you didn't watch part 1, how do you understand part 2? So first go and watch part 1, then only come to me, or otherwise shut your mouth and watch the movie. That's what you'll say, right? The same problem is here also. Okay, here final DT starts as it is like Pushpa 2. Okay, in interlevel DT ends there, it's the continuation part here. Okay, it's the continuation part. So the characters in first part, you need, you like, you don't like, whatever it is like, they'll be keep on coming. Okay, and we don't know when they will come also. Okay, you cannot again, every time you cannot have a question mark face. Just like as how you could able to connect the movie, this came in the first part, this came in the second part, especially with the fans of this like Avengers series fans. Okay, so they, when we ask like Iron Man, that happened in third part, that happened in second part and all, they'll be connecting. Okay, so like that, so here the first interlevel chapters will be keep on overlapping here. Okay, that made DT part as tricky. Okay, if at all there is a separate differentiation between first chapter and second chapter and there is no interconnection, if it is, then the final level DT would have been very easy. Okay, but the problem is like those interconnections will only make it as tough. And one more thing, the questions also, sir, the framing of questions, the problem is like, let's say many of you have listened to my IDT classes also. If at all we have learnt value of supply, most probably on that particular chapter, the question is only relevant to those particular topics only. They will not link time of supply, they will not link ITC, only to that specific chapter the question will be. Here the problem is, if at all they ask a question in PGBP, they can straight away ask on PGBP, na? They will not ask like that. They link deductions. Okay, they link TDS. Okay, so like that, I mean, if it is a total income problem, na, then again he'll mix the whole syllabus and all he'll mix. So that makes it complicated. Okay, if you look at like individual chapter wise, it seems to be easy only. But when they ask a question, they link other chapters also. What is our approach like? We'll be reading this chapter and expecting a question only on this, but they link other 2 or 3 chapters also. So that's the main thing. Especially when you are beginning your classes now, you should have clarity over all the chapters which you have discussed now. But coming to the exams, when the exams are nearby, then you need not to revise the whole subject. The problem or the approach of the problem with the student is like, I'll teach here 30 chapters here. Day before exam, you cannot read 30 chapters. That also I'll be again explaining. Like these 12 chapters are of very important. So these 12 chapters you should be focusing on your day before exam or 3 days or 5 days before exam. See, if I say this now, and from the beginning onwards, if you start and revise only those 12 and 13 chapters, na, then you will not understand the connections. So first time when you are learning, you should have knowledge about all those chapters. But once you go into a serious preparation or day before exam and all, the basic part anyhow, you'll understand, right? So that's why those 13, 14 chapters only will be revising number of times to make the subject easy. Okay? If you miss this, like, if you start first itself only with the important chapters, like only those 13, 14 chapters, you will never understand those interlinkages and all. You need to by heart at some point of time, if a new point comes. That's a problem. If at all you want to revise the whole 30 chapters day before exam, na, you cannot cover that. That is also again a problem. So we should be learning here smart. In classroom, for the first time, we'll be learning the whole syllabus. But thereon, we'll be prioritizing the day before exam what we need to read, or 1 month before exam what we need to read. That prioritization is important. Okay. See, sir, we have two sections here. Section B, Section A. Section B is about, sir, international taxation. Okay, Section B is about international taxation. Whereas Section A is about normal income tax law. Income tax law. If you look at the institute material, sir, the institute study material, there they will clearly say like 60% weightage is to the Section A and 40% weightage is only to the Section B. Then so this is a detailed analysis I did before this particular June 2025 attempt, and the same way the paper has been came even in the June 2025 also. So this helps us in understanding question number 2. I mean under the slot question number 2, which chapters can be asked usually. Question number 3A, which are the chapters that could be asked. Question number 3B, 4A, 4B, like this for every question I have detailed analysis I have made, and I had a clarity for us like which chapters can be there under which particular chapter. Okay. Now, if you come to the international taxation, 40% weightage means our paper is for how many marks, sir? 128 marks, right? 128 marks into 40% do. How many marks you should have come? 128 into 40%. 50 marks. But in exam, we are having only 45 marks, sir. We are having only 45 marks from international taxation. That also how 7 marks questions are coming from international taxation. 7 marks questions. So 5 into 7, 35 marks. And out of 15 MCQs, 5 MCQs will be there from international taxation. So total 35 plus 10. How much it is? 45 marks. So out of 128 marks, 45 marks are only from international taxation. That is effectively how much is the percentage, sir? 35.15. So round off also if you do, 35% is the actual weightage of international taxation. The balance is from income tax law. But this 45 marks is very key, sir. Okay. This 45 marks is key. So usually what happens means this 45 marks, if we study at last, so usually for us like it's not learning curve. Usually for us learning curve should come into picture, but for us law of diminishing marginal utility will come into picture. First 10-20 classes, whether you watch recorded classes, live classes, face-to-face, whatever it is, first 20-30 classes you'll have that enthusiasm. Without any leave you'll be coming to classes. But then it slowly decreases. Towards the end of, the last 5 classes, 10 classes, the number of students will be drastically coming down. So usually will not listen to the last chapters properly. Okay, that's why you didn't learn PGBP also in interlevel properly. Because any faculty will teach PGBP towards the end only, deductions towards the end only, TDS, TCS towards the end only. From interlevel, those 3 are only the main important chapters which were very much linked to final level. Okay, PGBP, deductions, TDS and TCS. Here also same problem. Okay, international taxation is very important. If I teach at last, you will be again missing them and ending up with reading the whole income tax law again and again, you will not be able to score. So that's why what you will do means, for the first 7 or 8 classes, till the point, so I'm planning to provide you the hard copy of materials by July 3rd or 4th. Okay, so till that point of time, every day we'll be having a single slot only. But then we'll be having every day 2 slots, sir. The moment we start a double slot, then one session will be discussing about international taxation and the other slot will be continuing with the income tax law. Okay, so then towards the beginning only we'll be covering international taxes also, so that you'll be quite confident regarding the subject, sir. Okay, so this 45 marks is key. Okay, so many of you are having a question, sir, that interlevel syllabus and all we cannot learn now. Tell some kind of resort, so where we could clear final level without learning all those things, then the focus is only on international taxation. This is, yes, there also some basics are needed, but still completely at final level only this thing is going to come. Now coming to the other income tax, sir, the weightage is how much? 60%, but the marks are like 83 marks are coming from income tax law. The weightage remains to be somewhere 65%. Then question paper pattern. We have 15 MCQs, sir. You already know, right? 15 MCQs. Is there any choice in MCQs, sir? Okay, we have only choice to select answer. No choice to select a question. So there are 15 MCQs. Each MCQ is for 2 marks. Each MCQ is for 2 marks. So total we are having 30 marks. So majorly, 1 or 2 cases it may differ, but majorly 90% of the times how the paper is going to be there means 1 to 10 MCQs are being asked directly from the income tax. So okay, I shouldn't write direct tax. I should write here income tax. Whereas 11 to 15 are being from international tax. Sometimes maybe they may shuffle also, but we could come to a conclusion like 5 MCQs are from international taxation, 10 MCQs are from direct taxation. Coming to descriptive. Question number 2 to question number 8. 2, 3, 4, 5, 6, 7, 8. Question number 2 alone is a straight 14 marks question, sir. Other than question number 2, either it is question number 3, 4, 5, 6, 7, 8. All these questions will have sub questions. 2A, 2B, 3A, 3B, 4A, 4B, like that. Okay. So from question number 2 to 8, there are totally 7 questions are there. Out of 7, we should write any 5 questions. Okay. So only 2 is a 14 mark lengthy question. Others are like sub questions will be there. Each A or B will be having 7 marks, 7 marks. Then so the benefit you students having currently is like good morning all. Okay, the benefit currently we are having is like online students. Okay, the benefit currently we are having is like, sir, actually institute weightage or where, I mean, from which chapter they are asking question number 2, from which chapter they are asking question number 3. All these are actually linking up with CMA final study material. Okay, but previously when I used to teach IDT also, till like 3 or 4, 2 batches before also, what we used to do, which is wrong actually, but what we used to do is like, we used to align this with CA final as well. Okay, even though we prepared exclusive CMA final materials, the problem is like somewhere with the index or with the chapter proportion, categorizations, all these things we used to align with CA final. But the thing we need to do, or now what we have started doing is like we are aligning only with the CMA study material. The benefit of is like, see, this 2A, 2B, this analysis I have shown you, right? So like under which particular question, which chapter they are asking. This categorization, sir, they will be giving like 2 or 3 chapters, the categorizations. Like let's say under 7A, there could be from 3 chapters the probability. Out of these 3 chapters, 1 chapter they might ask a question. So how they are structuring that is based on the institute study material. So maybe for BCCA material, we might divide the whole chapters into some 30 chapters. But institute material might not have 30 chapters. Okay, so you might be getting confused like which chapters has to be grouped. For that you need to understand the institute study material, how the chapters has been given. So look at this, sir. Our institute study material, the module 1, if you look at there, first itself it starts with assessment of individuals including non-resident. But non-resident will teach towards the like almost end of the classes only will be teaching the non-resident. But our institute material, if you open, they'll be first they'll be starting with assessment of individuals including non-resident. No tax rates, no basics, nothing they'll discuss. Straight away they'll start with assessment of individual, assuming you have watched already Pushpa 1. Okay, so you know everything at the inter level, and It's okay, they are assuming like you are prepared and ready. Okay, that's the main problem. But to understand this chapter, you should definitely know the tax rates and deductions. The basic first chapter, tax rates and all will be there, that we need to discuss, and then deductions. Then the second one, sir, company assessment of company. There are something like MAT provisions will come. MAT means for companies, sir, what we have learned in inter-level means the tax rate would be 30% or 25%. Foreign company, different tax rate. So like that we might have learned. But here, there is an alternative taxation model for companies also. Okay? If they have high profits, then they follow one approach. Where if they are having very low profits, then they follow another approach like MAT. So two approaches we need to compare. Simple one only. But they straight away give like this MAT provisions and calculate tax for company. Sir, company, usually what a company will do? For what purpose companies will be created? Profit. When you earn profit, on doing what you will earn profit? Business. Okay? So the main thing is about what? Business. But there is no PGBP head in our institute material. Okay, they didn't even discuss about, there is no chapter like PGBP in our institute material. But to do that particular question, you need to know PGBP provision. So we need to learn PGBP. Okay, and now at final level, sir, you should have this clarity. Even if you clear semi-final, you'll go to job, or else you go to practice. Okay, if you go to practice, who will be your clients? Okay, majorly business people only, right? Salaried people, even though they are your clients also, they'll not pay you much. They'll be asking you only one question: how much refund I'll get? Okay, will I get 1 lakh refund? Will I get 50,000 refund? That's the only question they'll ask. So majorly you'll be dealing with whom? Business people. So I mean, which head is important? PGBP. Again, let's say you're employed. For whom you are working? A company, something. What it will be doing? Business only. So again, what is needed? PGBP only needed. So PGBP is like, it's needed for us for living also. Okay, we are at that particular point of time. PGBP is not needed only to clear exams. It's needed for living as well. So that's why to understand the assessment of companies, we should need PGBP. Then trust assessment of trust, and next mutual associations. I mean AOP and BOI. How a trust will be formed. For trust to get income exemptions related to incomes and all, what conditions they need to fulfill, what procedures they need to follow, all this will be discussing there. So okay, 3 and 4 doesn't require much prior knowledge, but whereas first chapter, to understand that one, we should know tax rates and deductions. For second chapter, we should know PGBP. Then module 2. Module 2, sir, it's about return of income. Your computed tax. Okay, sir, understand, inter-level, the basic expectation of examiner is like, if some person who is carrying out business doesn't have a tax knowledge, came to you, you should be in a position to calculate his tax liability and tell him. Okay, inter-level, the institute expectation is like, when a person comes to you and tells his income details, you should be in a position to tell his income tax. Okay, you need to pay this much amount and all. But now at final level, not only about income tax computation, you need to compute tax, and you should make all the submissions which you need to make to the income tax department. If at all there arises any problem, let's say the department again recomputes his particular income. There might be certain differences between what you have reported and what the income tax people compute. There are differences. How the differences has to be answered, addressed. Okay, if you accept a difference, how to pay? If you didn't accept differences, what you should do? Understand, sir? Sorry, there are between two parties. You are the person who are paying taxes. I am the department. I am saying like, whatever you did is wrong, you need to pay additionally 3 lakhs as tax. If you accept now, then there is no problem. You'll pay tax. But you are not accepting. You are arguing with me, like saying whatever you did is only correct. Then where we could go, how this issue can be settled. So there are like appeals process, like there will be appellate authorities, tribunals. So there is a process of appeals. Okay, you'll go to my superior and complain about me. It's not merely like complain, but you'll escalate issue. Like this is happening, you just look into the matter and sort it out. So those things we'll be discussing, like return of income assessment procedure. Then if you don't file return on time, Okay? If you don't file return on time, if you don't pay tax on time, what happens? Interest will come. That we'll be discussing here. Then, you're not cooperating with the assessment. Something like, you are reported your tax as like 10 lakhs. Department has some information based on your bank transactions, based on your GST transactions. They have a doubt like you are reported or misreported certain income. Then obviously they want to come and check your premises. If you have any undisclosed incomes, if you have any, how much stock you are having or how much stock you have been reporting. So further they'll be coming to your premises, search, and if they found anything suspicious, they'll even seize, such seizure procedure. And then finally, the disputed amount or the assessed amount, how they will collect. You are not even cooperating even that also. Okay. So income tax officer said like you need to pay additional 5 lakhs as tax. You are not cooperating. You are not paying that additional 5 lakhs. Then how do they recover? Recovery proceedings are there. They can seize your properties. They can auction your properties. All those recourses we'll be discussing in the recovery of taxes chapter. Then module 3. Sir, for these chapters, interest advance tax. See, the question may be straight away regarding compute the advance tax. Sir, but on what tax will be computed? Incomes only, right? For that you should know the basics again. If it is rental income, taxable under which head? House property head. Salary income, salary side. Interest, other sources. Business income, business. If there is a sale of house property, capital gains. So that and all you should have already known to compute the advance tax. The question at final level, they may ask you to compute advance tax. But again, they will not teach you at final level actually how to compute rental income, how to compute capital gain income. So for this again, you should have knowledge about tax rates and deductions. And then collection and recovery of taxes. Why TDS here? TDS means what, sir? Tax deducted at source. I mean, it's a way of collecting taxes. So through TDS also they are collecting tax. So TDS is a method of collection of, or it's a process of collection of taxes. That's why you should have even understanding of TDS. Then module 3, I already said about appeals. Then settlement commission. Okay, so dispute even with the appeal process with different things also. Sir, you are going to the higher authority. Okay, let's say, first of all, you went for appeal with the appellate authority. Then again you went with the tribunal. Still the issue didn't got solved. You went to High Court. Again the issue didn't solve. You went to Supreme Court. Again the issue didn't. I mean, they are giving verdicts. But one of the party is not convincing with the verdict. So the issue is not getting settled. So there is something called settlement commission here. What's the point here is, instead of going to this appeal process, you'll go there. So they'll not try to find out who is right, who is wrong. Okay, so they'll try to compromise the issue by making like you pay this much amount, this much penalty, will close the case. So like that there is something called settlement commission. Then the 14th one is like advance ruling. You are going to start business now. You want to know how it has to be taxed. Okay, after doing the business, the benefit of advance ruling is like you will be having a prior understanding of what is the law, what the lawmaker or what the department is going to do. Based on that, if it is viable, you will do business. If it's not viable, you can drop the business at the initial stage itself. Okay, sir, you want to merge with a company, sir. You want to merge with a company. You are in a assumption like there will not be any capital gains if you merge with that companies. So based on that, you merged into that particular company. But post-merger, income tax department came and saying like there will be capital gains on this merger. So you'll be ending up paying 20% as taxes. Whatever the synergy benefit you should come because of that merger, you're losing because of that particular tax implications. So that's why, first itself you'll apply to the advanced ruling. I'm going to do this. What would be my tax implications? So now you'll understand what the tax structure is going to be there. If you like it, you'll follow. If it is viable to it, then you'll follow. Otherwise, you'll drop there itself. So that's the benefit of advanced ruling. So we'll be discussing the whole chapter, when to apply for advanced ruling, what conditions, when to do, all those. Then penalties and prosecutions. If you are did any violations of tax law, what are the penalties applicable, what is the prosecution. Then module 5. This is wholly about the chapter business restructuring, sir. Business restructuring now, when there is a amalgamation, capital gain implications or tax implication, not just the capital gain. If there is an amalgamation, tax implications. If there is a demerger, what is called demerger? If one company is splitting into two or more companies, then that is called as demerger. So what are the tax implications on demerger? Or you learn partnership, right? Okay, when there is a retirement of partner, what to do? When there a partnership firm is converting into company, what to do? Okay, so all those type of restructurings in businesses, what are the tax implications? Those, that particular point chapter will be learning. But again, for this chapter, you should have prior knowledge of what? Capital gains and PGBP, at least depreciation part. So this prior knowledge is again needed to understand this chapter. Then module 6, different aspects of tax planning. He'll give you two alternatives, sir. Let's say you want to start a factory or you want to start a particular business. You have two options. One is like leasing the plant and machinery. Second option is like buying the plant and machinery. So he'll give you two options and he'll ask you to decide which alternative is better considering the taxation aspect that you need to decide. Or else another thing, like you are joining in a company, the company provides you two facilities. Two particular kind of offers. One offer is like they'll give you HRA. The other option is like they'll give you rent-free accommodation. Okay, such kind of things. The one option they'll provide you travel allowance. You come in whatever the transport facility you want, they'll pay monthly 5,000, 6,000 like that. The other option is like they will only provide cab. Like that they'll give alternatives. You should decide which is better. Okay, that's about different aspects of tax planning. Again, for this chapter, you should have the complete understanding of the tax, but not interlevel, sir. Again, this module 6 requires interlevel chapters proper understanding. Then module 7, CBDT and other authorities. How CBDT is constituted. Who are the different authorities? Who will be commissioner, assistant commissioner, deputy commissioner, those authorities that would be there in the 18. Then, so these days, we are seeing so many e-commerce transactions. How Facebook is earning income? Meta, especially Meta. Facebook, Instagram, WhatsApp. For installing Facebook, do we pay anything? Are we paying anything to upload a post or upload to a reel in Instagram? Nothing. WhatsApp, do we pay anything? But then how that company values that many crores? What is their income source? Okay, they promote your reels, they promote your posters, through that they will be earning incomes, and also they are creating a place where they could again generate income. They are giving a platform where you could boost your business, promote your businesses, all those. So how do we tax e-commerce transactions, especially if you are a YouTuber? How your income will be taxed? So all those we'll be learning in this particular chapter called e-commerce and liability in special cases, which is nothing but even equalization. Then ICDS. ICDS means income computation and disclosure standards. Income computation and disclosure standards. Just like as in accounts we have standards, even in income tax also, especially to compute income under that PGBP and IFOS, certain standards has been given. There are only 10 standards are here, ICDS. Most similar to that of accounting standards only. Here and there, 1 or 2% they will be changing. So those 10 standards will be there in that particular chapter. Then there's an act called Black Money Act 2015. Black Money Act. See, black money means what, sir? Income on which you don't pay tax is called as black money. If you suppress income and on that if you don't pay tax, that is called black money. Black money is different, illegal money is different. Illegal money is also black money. Understand, sir? But all the black money need not to be illegal. It may be from a legitimate source only. But still, if they don't pay tax, if they didn't report to the tax authorities, then it is what? Black money. So we'll be understanding about this Black Money Act. Not detailedly, sir. The fundamentals of this act, the highlights of this act, that we'll be discussing. And there's a separate chapter given talking about case studies, different chapters related, recent pronouncements, judgments, which were important. Those will be there in the case studies. So this is our whole income tax. I mean, for that 85 marks, these are the chapters applicable. Okay. So see from where it is starting, sir. They are not much focused on how to compute tax. The focus is much on how do you file return, how do you address when there are difference between your computation and income tax authorities computation, how the disputes will be resolved and all. Okay, the basic focus is on that only, and even on special cases which we don't much focus on inter level. Then the next part is, sir, international taxation, sir. There are only 3 chapters. One is DTAA, double taxation avoidance agreement. So basic things, sir, which are learnt in inter level only. If you are a resident, of India, what incomes are taxable? See, you are a resident of India, you have income in India as well as USA. Both the incomes are taxable, only Indian income is taxable. If you are a resident, global income is taxable. The same income even taxed in US also, right? For that person, if the source is USA, USA will tax him based on source rule. India is taxing based on resident rule. Now the same income is getting taxed twice. There is double taxation. Okay, not only under indirect taxes, even under direct taxes also, double taxation is not good to the economy. So they should avoid double taxation. How do they avoid this kind of double taxations? For that, there is DTAA, double taxation avoidance agreements. With some countries we'll have DTAAs, agreements, whereas with some countries we might not have agreements. Then what to do? All those things we'll be learning in this particular chapter, DTAA. Again, for this also we should have understanding of basic tax rates and deductions. Then there is a chapter called transfer pricing. There is a chapter called transfer pricing. Sir, simple logic, sir. You have started a company, multinational company. You have branches in India, USA, and even in Mauritius. There is a country called Mauritius. India, USA, Mauritius. Assume the tax rate in India is 30%. USA is 20%. Mauritius only 5%. Now, your multinational company, you have branches in all these 3 branches. Now, as a company as a whole, where you want to have more profits? In India, na, USA, na, Mauritius? Why? There the tax rate is 5% only. Let's say, understand, from India you will supply raw materials to the Mauritius company. From India you will supply raw materials to the Mauritius company. To get more profits in Mauritius, what you will do? Indian raw material selling price you will decrease. So that, actually you will sell Indian raw material for 100 rupees. But to the Mauritius company, your subsidiary company or holding company only, you will sell it for only 70 rupees. So what happens? Indian selling price you decrease. So Indian profits will come down. But whereas Mauritius company will getting it for a lower cost. 70 rupees only it is getting. So the profit of Mauritius will increase. Indian profit will decrease. Okay. If you do such kind of transactions, as a company you are benefiting. But Indian government is losing tax revenue. To curb those practices, there is something called transfer pricing. And the last one is like general anti-avoidance agreements. I mean, to avoid this tax. Okay, so in the name of double taxation, sir, you cannot even escape from taxing at all. You shouldn't even be escaping like, I'll pay tax in India, and you cannot even, at least at one place you should be paying taxes. You cannot escape from all those places. Further, there are general anti-avoidance relief. Okay, so there are even GAR provisions. So these are the whole chapters, sir. From institute material, if you take how many chapters we are having? 25 chapters, but they are divided into 14 modules. But additionally, we should learn these chapters also, even though they are not there in institute study material. First one is like about what? Basics and tax rates. Next one is about deductions, PGBP, capital gains, IFOS, TDS. Sir, these 3 at least, like partly you learn also fine, but 26, 27, 28 we should learn thoroughly. Okay. Now we'll see from which chapter, under which question, which chapter is being asked. Question number 2, sir. There's a 14 marks question. Assessment of company. Maximum this question is from PGBP only. I mean, if you learn PGBP only, you would answer question number 2. Okay, so that's why PGBP is very much important. Okay, but the only difference is like they'll ask it from company perspective. One more difference, sir, at inter level, always the question framing will be from individual point of view only. But at final level, some questions will be from company perspective, some may be from individual perspective, some may be from firm perspective also. Why like this now? Simple thing, sir. On clearing final, you are a professional. Any SSC will come to you. He may be an individual, he may be a company. You cannot simply say like, I know only for individuals, I don't know for companies. So that's why assessment of company, the major chapter you need to learn here is what? PGBP. Then question number 3A and 3B, sir. So 3A and 3B is the only place where there is lot of shuffling is being happened. 3A and 3B. But those questions are easy. But shuffling is being happened a lot of much, sir. I mean, to understand 3A and 3B, the basics you should be strong. If at all your basics are not strong, then you cannot answer 3A and 3B. Basics na, tax rates computations, deductions, okay. Randomly they may ask something about house property. You should know at least the basic house property format. What is the house property format? GAV. From there you subtract municipal taxes, NAV. From NAV you should subtract like 30% standard deduction. Interest you should reduce. So that's the basic thing. But at final level you don't expect like there will be a house property adjustment. But suddenly they'll ask that. See, if you are into articleship and you have filed these individual returns and all, house property and all, those things might have already registered to you. Then you could do it easily. Okay, that thing will come. Recent items are very recent return. The 3-year question is simple. They are given income from interest income they have given, salary income they have given, house property income. So like that 4 or 5 source of incomes they have given. 2-3 deductions they have given. You should compute tax rates under both the methods. Under default regime, normal regime. Both the methods you should compute the tax computation. That's it. Basic tax computation only they have asked question from 3A. Certain times they will even ask a theory question, sir. What is that theory question? If at all you have studied old syllabus CMA inter DT, sir, there used to be a question about, first question in inter level they used to ask about, write about difference between tax planning and tax avoidance. Okay, tax planning and tax management. So like that there used to be theory questions. Okay, here actually in this chapter called different aspects of tax planning, they will be talking about like what is called tax planning, what is called tax management, what is called tax avoidance. Sir, simple thing, sir. If you have an LIC policy, if you pay to LIC premium, you will get deduction, right? Based on that, your total income will come down and your tax will also come down. So if you invest in LIC policy, that is called what? Tax planning. But you don't have LIC policy. You want to reduce your taxable income. So even though you don't invest in LIC policy, you claimed there. That's called what? Tax avoidance. So based on such conditions, there used to be a question. So basic things only. But you should have understanding, overall fundamentals understanding you should have. Okay, 3A and 3B. So 3A and 3B, sir, both the questions will be such thing kind of only. We cannot specifically say like this is on salaries, this is on capital gains, but overall understanding you should have there to write 3A and 3B. But fundamentally they are easy questions only. But we cannot predict or we cannot tell in the workbook sources or in the material sources like here from these 4 questions it will come, from these 5 questions it will come, such kind of prediction and all we cannot do. The problem is what? You should have overall understanding. Then 4A. Question number 4A is about business restructuring. What is business restructuring, sir? Company, LLP converting into company, firm converting into company, when there is amalgamation, when there is demerger, what are those implications? So that particular chapter related question is always from 4A. 4B, sir. 4B, the question is always about non-resident taxation. You are an individual, non-resident, they'll give certain incomes to you. You should find out is tax liability. Non-resident, and most probably the SSC will also be whom? Individual only. Okay, then 5A, it is from which chapter, sir? Appeals chapter. Okay. Then 5B, it is about what? Advance tax. Okay. Sir, I am not saying it randomly for you to have that particular trust only. I have been, did all this, you could see. 5A, December 23 exam, they have given from appeals. December 23 MTP, they have asked from appeals. June 24 exam, again from appeals. June 24 MTP, appeals. December 24 exam, appeals. 24, there are 2 MTPs, again appeals chapter. June 25 MTP1, appeals chapter. MTP2 also from appeals chapter only. Exam question also again from appeals chapter only. So, okay, from whatever the past sources we have, in all those chapters, it is there standardly from which chapter, sir? Appeals chapter. And again, if you see 4B, again, which chapter, sir? Non-resident, consistently. You could see here, business restructuring. You see like set off and carry forward, but again, I kept in bracket. Which chapter? Business restructuring only. So, standardly, this question is from what? Business restructuring. And again, 3B and 3A, sir, you could see one attempt, it would be from one particular chapter like that. Okay, there is no standard prediction. If you go to question number 2, it's always PGBP. Sometimes they include MAT, sometimes they will not even include MAT. Then, question number 6A is from DTAA. I mean international. Sir, 6 and 7 both are from international taxation only, sir. 6 and 7. 6A DTAA or transfer pricing. 6B standard DTAA. 7A transfer pricing. 7B again from transfer pricing only. 8A. Sir, 8A, again to answer 8A, you should have overall understanding. What they are doing now, usually 8A or 8B, case studies, if anything are there, they are picking directly the case studies and asking one particular question. And 8B, also the same thing. If you have thorough understanding, then you could answer 8A and 8B. So out of the whole paper, one question which they are asking very tricky is 8th question. Usually, 8th question will be tricky. But 3rd question, sir, I'm not saying like it's tricky, but cannot be predicted. If you have fundamentals, proper understanding, then you could even easily answer question number 3. But question number 8, usually it will be a hard question. Understand, right? Okay. Even for MCQs also we could do, sir. Out of 15 MCQs, minimum 8 MCQs we could say like from these chapters they will be coming. Like DTAA, always there will be 2 MCQs. There is a chapter called GAR, from always there will be 1 MCQ. Out of 5 MCQs, these 3 are minimum. From these areas they will be coming. The other 2, they may come in DTA only, or they may be even in transfer pricing. And even in income tax also. On MAT, there will be one particular MCQ. Penalties, 1 MCQ. Return of income, 2 MCQs. And again, assessment, we can expect minimum 1 MCQ. So if you see 2, 4, 5 MCQs, sir, and here 3. 8 MCQs, we can usually predict like from these areas can be the MCQs. The other 7 MCQs, they can ask randomly from any of those chapters. See, now what should be our approach, sir? Listening to the classes, sir, any student, if you believe like looking at all these analysis, sir, some students feel like, okay, then straight away I'll read business restructuring from study material. Straight away I'll go and read DTA transfer pricing. The problem is like, they're always linked with the other chapters. Okay? It's like, you'll understand, but you'll be by-hearting things there. In exam, it's not like they'll ask only the same point. They may ask different point, then again you cannot answer. So my advice or suggestion is like, for the classroom understanding or for the first time revision, you should cover the whole syllabus. But then on, okay, you need not to focus all the chapters with the same importance. Okay, so these chapters which were linked with the questions and all, those will be giving more importance once we progress, I mean, the last minute, like last 1.5 month or 1 month, we'll be focusing only on those chapters. Okay. So if at all, sir, online students, if you are having any differentiation between a fast track batch or regular batch, fast track batch will straight away cover these chapters. Okay. Assuming what? You know everything. Just you are ready to go for the final level, assuming you have watched Pushpavan. But now, here at regular class, our approach will be what? You don't know anything. Even if you know, that was long time back. You are Gajini. You forgot everything. Okay? Maybe only few points you will be remembering. Or that time, you are not much dedicated. Now only that Gnanodayam came. You went and sat that beneath that particular tree. Banyan tree or something. Okay? Recently you got Gnanodayam, and from now on you want to study properly. So okay, we cannot demotivate you by staying like this and all. Already you might have learnt and came. So that's why we'll be starting from the regular batch. We'll be starting here, assuming you don't know anything. Okay, don't know anything. It's not like capital gains means this. Okay, salary means this. Not that much basic, but you know little extent only. Okay. So we'll be starting with the first chapter, sir. First chapter is about the basics, sir. Basics. Then we'll learn deductions. Then we'll start with PGBP. Basics, deductions. Okay. Then we'll go to the chapter called PGBP. Okay. So don't carry that past trauma regarding PGBP into final level, sir. I'll make it easy. Sir, I always have this question. Why only government has to levy tax? Why don't we? Okay, I had that question from the time I watched the Businessman movie. Okay, thing is like there, the hero, Suryabai, on every transaction he'll take 2%. Why can't we? Okay, so only thing is like we also need to hire some rowdies, gundas, and some kind of production we need to be there. Then we can start up. The problem is like, sir, we cannot do that. Okay, then you should link it with KGF. What happened even in KGF also, the hero Ash will be extracting gold and all, whatever he want. Till one particular point of time only government will tolerate. Then they'll enforce army. There's a dialogue also, I'm enforcing army. Okay, so you cannot go top of the government, sir. The point is like, why only government? Where it was said? It was said in the Constitution. Article 265 says like, only the authority of law, I mean the government can collect taxes. It's not any one of us. Write down, sir. Article 265. Article 265. Says like, no tax shall be levied, no tax shall be levied or collected. No tax shall be levied or collected except by authority of law. Except by authority of law. Authority of law, nothing but there are three authorities of law, sir. Central government, state government, local authorities. Only they can collect taxes, they can levy taxes. Others cannot do. Okay, if at all me has to levy taxes or Vishnu has to levy taxes. Where it has to be changed? In constitution it has to be changed, and there we should keep like no tax shall be levied or collected except by authority of law and Vishnu or Vishnu. So like that if you change there, then he has the power to levy taxes. Otherwise we don't have the power to levy taxes. Then there is a conflict. Authority of law will levy taxes, but which authority of law will levy tax on which source? Now there are again central government, state government, local authorities. Now on the same particular source, central government is saying like I will levy tax because I am authority of law. State government is saying like it will levy tax. Again it is also a authority of law. Local authority is also saying, okay, so here let's say BCCA, now it is in Hyderabad, right? GHMC coming and saying like since BCCA is in Hyderabad, you need to pay income tax to GHMC. Authority of law, need to pay tax. Telangana government coming and saying like it's there in Telangana, authority of law I can levy tax, pay tax to me. Then central government representative came and asked like you are in India, you need to pay again tax to central government. Then nothing will be there. Your fees 30% will go to GHMC, 30% will go to state government, 30% will go to central government. The other 10% first itself went GST. So nothing is there. So the point is like, again, there cannot be double taxation or there cannot be conflict. So that's why Article 246. Article 246. It consists of, Article 246, under Article 246 there is 7th schedule. Consists of 3 lists. What are those 3 lists? Union list, state list, concurrent list. Union list, state list, concurrent list. Seventh schedule consists of 3 lists: union list, state list, concurrent list. Sir, we need not to write again everything in detail. Union list now. Sir, Article 246 has divided them. Okay, the matters has been divided between central, state, and for both of them. If at all something is mentioned under union list, with respect to those matters, the law can be formed by central government. And even the tax, if at all they are related to tax, the tax can be levied and collected by central government. If at all they are under the state list, then the tax can be levied and collected by state government. Concurrent list. Sir, under concurrent list, there is no taxation related matters. Okay. Other matters are there in concurrent list. Let's say the traffic rules related. Okay. So with respect to traffic rules, state can also form a law. Central can also form a law. Okay, but the central law can be as it is adopted by state government, or they can adopt it with modifications also. So there are certain areas where central also can frame a law, states can also frame a law. You might be having a question. Sir, if all the states are having different laws, what's the purpose of again central law? Under concurrent list, let's say related to traffic only, if every state forms a different law, what's the purpose of having central law again? Sir, usually central law acts as like a format, okay, which would be adopted by number of states. If at all they feel like these are irrelevant or these are too harsh in that particular state, that alone they will be amending. And next thing, for union territories and all, the central law will only be applicable again. Understand? So that's why concurrent list also there. Even the civil procedures and all those things will be there under the concurrent law. Next, components of income tax law. This and all, I mean, this part also you might have learnt in the inter level only, sir. Components of income tax law. So talking about the sources, from BCCA you'll get a concept book, printed color format, concept book you will get for the whole DT. Then we'll be providing you a workbook. Okay, so workbook will be somewhat not in the usual format we'll be designing, sir. So I mean, what we are planning and how it will be coming is like, the index itself will be 2A, 2B, 3A, 3B, 4A, 4B. So like that the index will be. So that means instead of the question you should pick, those relevant questions will be there. Okay, there also, like how the material is going to be, workbook is especially, sir, let's say 4B, assume you are doing 4B chapter, there is non-resident, but maybe in one particular attempt or one MTP there may be other chapter question also. That means under 4B the possibility of asking is for 2 chapters. The chapter which comes frequently they are under the first priority, A, and the chapter which comes in the like very less priority na, then it will be in the B. Okay, B category or afterwards. Like that it will be there within the chapter. Again there will be A, B. Okay, so based on time, if you have less time you could only go with the A's. You have plenty of time, then you could go with the A and B's as well. In classroom we'll cover both. Okay, for preparation also, to make it convenient, it would be in such a way. So that workbook we are going to provide and concept book we are going to provide. Coming to this handwritten, sir, I'll share this with you, the PDF soft copy only, chapter by chapter, I'll share. Okay, so for almost, sir, my plan is to write notes for at least these important chapters. Write notes for these important chapters. If at all it's taking more time, then maybe for other chapters also, I'll write notes and come to class. That I'll be sharing to the PDF directly to you, and I'll explaining from the soft copy. Okay, handwritten notes. Okay, otherwise we'll be usually writing notes in the classroom. And our target completion of syllabus is like by August 20. August 20. Okay, I said like SCM, I mean Rajesh sir already said like he'll be completing by August 5th. I'll be completing by August 20. So till this June month end, you'll be having only single sessions only, like DT 1 session, SCM 1 session. From July 1st or 2nd, then you'll be having multiple sessions. SCM you'll be having 2 sessions, DT also you'll be having 2 sessions. Okay, so whatever the time I promised, I'll be completing the syllabus within that time only. Post completion of SCM, then again I need to drop one of my session, like I'll be only going with one particular session, then SFM and law will get added. Okay, so the target completion date is like, internally we had one date, what we are communicating is also one date, like what we are saying going to say is like September 30, but we have a much more earlier completion date to us. Okay, but considering the past completions and all, if at all 1 or 2 days if we take it delayed na, then you guys will be questioning. That's why September 30, in any case, we are going to complete the whole syllabus. But don't worry, the face-to-face students also, it would be minimum of 10 days prior to that only, they will be completing. Components of income tax law. Components of income tax law. See, to understand or to read income tax, does only the act is enough for us to read? That's the point. Okay, what totally is called as income tax, or what we'll be studying here totally. So there is an Income Tax Act 1961. That's the base. But to that act, every year there will be amendments coming to that. So how the amendments will be introduced? Through Finance Act. I mean, in layman language, we may call it as like budget. But still it is called as what? Annual Finance Act. So Income Tax Act is a component of Income Tax Law. Annual Finance Act is a part of Income Tax Law. Third one, time to time government will be issuing circulars and notifications. Circulars and notifications. What are called circulars? If there is any ambiguous situation means, like let's say, sir, at one place, like gift 50,000 is exempted. In IFRS chapter under 56 subsection 2 clause 10, they have said like gift 50,000 is exempted. Now there is an ambiguity here. You are having 51,000 as gift. Now the question is, the only 1,000 is taxable. Total 50,000 is taxable. So in these cases, they may be issuing circulars. If there are such kind of ambiguities, they may be issuing circulars. Circulars are usually clarificatory in nature. If there is any confusion, they try to bring clarity. And then notifications. If at all any changes has to be made, they cannot wait always till the Annual Finance Act. Or even though they have made it amended in the Annual Finance Act, but they didn't made it effective. To make a provision effective, they will be again notifying it by way of issuing the notifications. So circulars and notifications. First one is what? Income Tax Law, Income Tax Act 1961. Second one is Annual Finance Act. Third one is like circulars and notifications. The fourth ones are income tax rules. Rules. I'll tell you a simple example for rules, sir. For filing a return, you should have a PAN card. Your PAN number is needed. PAN is nothing but your registration number under income tax. Just like as driving license, you will be having a number, right? Who will be issuing driving license? RTO, Road Transport Authorities will be giving. Same as for income tax, a registration is nothing but what? PAN number. See, under income tax law, they will be talking about you should have a PAN number only. But to get PAN number, where you should go? Which form you should apply? What details you should provide? Like the proof of what proofs you need to provide. All those they didn't mention it in the act. All those they'll be covering where? In the rules. So income tax rules are step-by-step guidelines or the step-by-step approach to implement the act. So act says like this has to be done or this has to be done in this way. But whereas rules gives the step-by-step approach. What has to be done here? How it has to be done. So all those step-by-step guidelines are given where? In the rules. The last one is like the case laws. Time to time, the courts will be giving various pronouncements. Okay, those court pronouncements are also part of income tax law. So there are total 5 components of income tax law, sir. First one is Income Tax Act 1961, Annual Finance Act. Third one is income tax rules. Fourth one, circulars and notification. Fifth one is like case laws. So write down. Income Tax Act 1961. Sir, Income Tax Act applicable to whole of India except Jammu and Kashmir. Whole of India, including the state of Jammu and Kashmir. Okay, so we need not to tell that one again. It consists of total 298 sections divided into 14 chapters. Okay, there won't be any MCQ like asking how many sections are there in Income Tax Act. But to know, there will be how many, sir? 298 sections and 14 chapters. Okay, need not to write here. Then Annual Finance Act. Annual Finance Act. Sir, Annual Finance Act means budget. So usually budget means what? Under costing FM you learned, right? What is called budget? Estimate. Budget means nothing but an estimate. Why income tax is linked with that particular budget? Sir, understand, the purpose of Annual Finance Act is not to bring amendments to Income Tax Act. Okay? The basic necessity to introduce budget is like the government wants to tell the public representatives, I mean MPs, that in the coming year, this is our income sources and this is our expenses. It want to tell that to the houses. I mean houses na upper house, lower house. To the MPs, it want to tell this is the income source and this is what we are going to spend. Based on their approval only, government can spend. Okay, that's why they'll usually introduce budget. But then why income tax they are involved in between? Sir, understand, in India, there are thousands of laws. Okay, all those laws needs to be changed year by year. Otherwise, they'll become outdated. One among them which requires rapid updations is income tax law. Because maybe in 1961, the basic exemption limit is only 100 rupees. That time, below 100, no tax. Above 100 only, it might got taxed. In 1961, 100 or 500, something, the basic exemption limit would be. But if you keep the same 500 as basic exemption limit now, then everybody is going to pay tax. So those has to be updated. So year after year, considering inflation, global factors, all those things, it needs to be updated every year. So every year they cannot again introduce, okay, for income tax updations one time, GST updations one time, there are 1,000 laws again. All these needs to be updated. So every time they cannot pass a bill in the parliament. That's why once the bill is passed, we already accepted income tax, right? Updations, for updations related, again they need not to put something separately for income tax. That's why all the acts in India which requires these updations will be bundled along with the budget. Okay? Once the Finance Act is approved, it means what? All those amendments which they are bringing to those acts is also gets amended or it also gets approved. Okay? So Annual Finance Act is not wholly relevant for income tax. A part of it is relevant to income tax. Why Annual Finance Act, sir? Why it is relevant? Amendments are made through it. Amendments are made through it. Then Income Tax Rules 1962. Who will make rules, sir? Usually CBDT is empowered to make rules. Who is called CBDT? What's the purpose of CBDT? Full form of CBDT, sir? Central Board of Direct Taxes. So central government is there na, to implement or to levy income tax. Why again this CBDT is needed? Sir, one more thing here, above point. Income tax is under which list, sir? Clear na? You have a question regarding that as well. Income tax is there under the union list. Okay. GST? First of all, GST is not there under Article 246 itself. Okay, that confusion will come. That's why they have inserted what? Article 246A for the purpose of GST. So it will not even come under the 246. For GST, there is Article 246A because GST, both central will frame laws, state will also frame laws. Okay, which is a unique, different kind of model altogether. That's why they have brought, they have introduced under Article 246A. Okay. See, now, central government is the one empowered to levy income tax, right? Now, if central government is there, now why again CBDT is needed? Sir, it's as simple as like, if CM is there, now police department is not needed. Huh? See, chief minister cannot give you protection, right? He is the one who oversees or who looks after the government. But still there should be something like what? Police department, who will actually take care of the day-to-day activities. The same way, central government, it comes under central government only. But it's not like the finance minister will come and check our income tax returns. There would be someone here who will be checking after the day-to-day activities, all these procedural aspects and all. So that's why they have formed a department called CBDT. Under that department, there are various officers working there who will be looking after the administration day-to-day activities of income tax. So CBDT, income tax rules will be issued by whom, sir? CBDT. So issued by CBDT. Issued by CBDT. And these are what? Step-by-step guidelines. Rules are like what? Step-by-step guidelines. Step-by-step guidelines. Then circulars and notifications. Circulars and notifications. Circulars and notifications. Sir, circulars are issued by CBDT. Circulars are issued by CBDT. For what? To clarify doubts. Sir, SSE is not bound to follow circulars, sir. He can question the circulars. SSE is not bound to circulars. Let's say there is an ambiguity, and with just like as I said, like gift related example, 50,000 is exempted. That's what the provision says. Like you are having a question like above 50,000 is taxable, whole amount is taxable. They issued a circular stating like whole amount is taxable, which you are not convincing. So now you cannot follow the circular. Okay. Then what department has to, if at all, even against to department also circular, department has to follow circular because they are issued by CBDT, their department only. But SSE, if it is against to them, they are not bound to do that. So then everybody will not be following that. Then what they'll do next year in the law itself, they'll make amendment. That's what they can do. Understand? So issued by CBDT to clarify doubts. Circulars are binding only on department. Binding only on department. Then again, notification, sir. Related to notifications, sir. Sir, notifications means what? They already said us like they have made such change. Let's say, for example, TDS rate on 194C, assume take a transaction like 194C is about contracts. On contracts, the TDS has to be deducted at a rate of, let's say, 1%. They want to increase it to 5%. They want to increase it to 5%. They have said that like the amendment has been mentioned in the Finance Act only that 194C related TDS rate has been increased to 5%. But then once the budget is introduced, the business communities and all went and approached to finance department. They wrote letters and they went to income tax officers and said like, you cannot implement this immediately. We need some time. Because 5% and all, it creates pressure on our working capital. So we need some time. So government is given a time of 6 months. See, I mean, actually the amendment should come into effect from 1st April. But they are giving how much time? 6 months. That means it would be applicable from when? 1st September. So to notify, to make it effect from 1st September, that time they will issue a notification. I mean, notification is nothing but just like as our mobile notification. It's an alert kind of. Okay, this is becoming effective from now on. So on 1st September, what they'll do? They'll again issue a notification in the official gazette, nothing but communicating everyone from now, this particular amendment is into force. That is called notification. If the notification is related to act, central government will issue notification. If the notification is related to rules, then CBDT will issue notification. Notification is nothing but just telling the public at large, this is effective from now. This has been come into effective. This provision has come into effective. That's what. Okay. Notifications with respect to rules. Sorry. With respect to rules, issued by CBDT. With respect to act issued by central government. Issued by central government. Why these are introduced? Why these will be issued? To give effect to provisions. To give effect to provisions. The next fifth one is about case laws. Case laws, sir. Case laws, na, it's not like every court law, every case law will consider, like decisions of Supreme Court or High Court. Decisions of High Court and Supreme Court only will consider. Tribunals and all, not much impact. But High Court decisions and Supreme Court decisions will have lot of importance. So, okay, since we are writing notes, have a separate notes for it. Income tax also. Already you have spent somewhere 7 to 10,000 on buying these classes. So spent additionally another 70 rupees in buying a good quality notebook. So tomorrow our major focus will be charging section we'll discuss, and then majorly we'll be discussing about the tax rates, surcharge rates, rebate, marginal relief. So maximum tomorrow our focus is like from individual perspective only. I'll not touch company tax rates and surcharge rates. Tomorrow our focus is more on individual related. Tax rates, special tax rates, surcharge, marginal relief, all those things we'll be discussing tomorrow. Okay? Thank you all. Hello, all. Good morning. See, we are in the basic concepts discussion. So, yesterday, just we have started regarding the constitutional provisions. Article 265 empowers that only an authority of law can levy taxes. Then Article 246 under the 7th schedule consists of three lists: union list, state list, concurrent list. The items or the matters which were contained in union list, with respect to them, a law can be framed only by central government. So understand, income tax is also a law. That's why I'm referring it as law. So with respect to the matters contained in union list, the law can be formed by central government. With respect to matters contained in state list, state government can form laws. With respect to concurrent list, both central can form laws, states also can form laws with respect to those kind of matters. Then examples you already know, union listener, the best example is like income tax only, and then customs, state list, VAT, those kind of state levies, and then concurrent list, sir. Concurrent list is about basically these traffic related acts and certain civil procedures. So those things are under the concurrent list. Then we have discussed about components of income tax law. What are the components of income tax law, sir? What does it mean by components of income tax law? So it's not enough that we study only income tax act here. So income tax is not just the act, it consists of other things also, which altogether is called as the income tax law. So what are those other things? First one is like, as we said, Income Tax Act 1961. Additionally, year after year, the amendments will be brought through Annual Finance Act. So the second component is Annual Finance Act. Third one, everything cannot be explained step by step in act. So that's why act gives you the overall how it has to be operated, or how it has to be collected, or how it has to be levied, whereas rules gives us the step by step guidelines. Okay, so that's why income tax rules are also part of income tax law. Fourth one, circulars and notification. Time to time the CBDT will be issuing circulars with respect to various matters there where there is ambiguity or doubts. Okay, these are clarificatory in nature. Then notifications. Notifications are introduced or will be introduced to make effect to a provision. See, amendments are brought, but it doesn't mean always the amendment will be made effective from 1st April only. Okay, so even though it is made effective from 1st April also, it has to be communicated to the public. It's not just passing an act, it has to be communicated to the public. So how it will be communicated? By way of publishing it in an official gazette. So like that, notifications will be issued. If at all act related point has to be made effective, then notification will be issued by central government. If they are related to rules, then CBDT will be issuing the notification. Then time to time, so even after all these rules, clarifications, circulars, notifications, there will be still lot of debatable points will be there, where courts will involve, and they will be settling the issues. So those those court decisions, case laws which were given by High Court and Supreme Court will also form part of our syllabus, or form part of our income tax law. So all these are the components of income tax law. Okay, then before, okay, now we'll be starting with section 1 of Income Tax Act. Section 1 of Income Tax Act. So Section 1 in any act, in any rules, Section 1 will talk about its name, applicability. So Section 1 here talks about the title. What is the title of this act, sir? Income Tax Act 1961. Came into force. When it is came into force, sir? 1st April 1962. It talks about title, then applicability, came into force on 1st April 1962. This is about the Section 1. Then Section 2. So Section 2 we cannot refer or we cannot discuss the whole Section 2 now, because Section 2 usually consists of what? Definitions. So whenever they are needed, those definitions will be discussing. But Section 2 is about what? Definitions. Then Section 3. Section 3 is about previous year. Section 3 defines what is called a previous year. So previous year, na, the year behind. Sir, previous year, see, at inter-level, how we used to say, like, so the people, the students used to think previous year, na, the already, okay, which was completed that year, they used to think. So let's say if I give financial year 25-26, they'll say what is called previous year, na? They'll say 24-25, okay, because they'll be looking it from financial year perspective. But now we should understand previous year means, yes, the year behind an year, but that has to be checked from which points are assessment year. The year immediately behind or immediately preceding to that of assessment year is called as previous year, okay, not to that of financial year. In other words, for us to understand, the year in which we earn income is called as previous year. Okay, see, we are much used to accounting, right? Financial year concept, accounting we are used to, right? See, for an year, if you prepare P&L, that particular financial year is only considered as what? Previous year. Because when you are doing a P&L for a financial year, that year you are earning income. So that itself is called as what? Previous year. Okay, the year in which you earn income is called as previous year. In other words, okay, for us to make it simple, the previous year and financial year are one and the same. Okay, instead of financial year, here we are referring the word what? Previous year. So previous year means what? Financial year only. What is called assessment year? The year immediately succeeding to financial year or nothing but the previous year is called as assessment year. Okay, so previous year, write down, sir, the year in which income is earned is called previous year. The year in which income is earned is called previous year. The year in which income is earned is called what? Previous year. Okay. Previous year, sir, usually a period of 12 months, starting from 1st April, ending on 31st March. But it does not happen always. Let's say you cleared your CMA final in the, so let's say you cleared your CMA final attempt, CMA final in the February. Okay, then immediately you got job. That means for the first time you started earning income from which date? Let's say February 15th result came, you started earning from February 20th. For the first time you are having a source of income from when? 20th February only, right? So then in that case, the previous year starts for you only from 20th February. When the source of income you are having for the first time, then that day, when you start earning income or when you are having that income, that day will be considered as the start of previous year. Or else you commence a new business in the middle of the year. Let's say you have commenced a business on September 1st. Then for the first time, then the previous year for that business will be considered as when, sir? From 1st September only it will be considered as started, and it ends till 31st March. So that is only for the first year. From the next year onwards, previous year means it starts from 1st April, ends on 31st March. Okay. So write down, sir. Sorry. Previous year means usually a period of 12 months starting from 1st April. However, there are exceptions. First one, where there is a new source of income, the day it started is the commencement of previous year. In case of new business or profession, the day such business commenced, is the start of previous year. If the business is started on 1st September, then for that particular year, the previous year will be from which day? 1st September. Where there is a new source of income for the first time, let's say you are having the salary for the first time only from 1st October. Then the previous year has been started from which date, sir? 1st October. See, previous year assessment year will be usually seeing in our problems and all. See, let me make you clear. The applicable previous year for our exams is, sir, let's say the P&L prepared for financial year 24-25. P&L prepared for financial year 24-25. That means what is the financial year, sir? 24-25. For the financial year 24-25, we need to understand, because for us financial year related we don't have any confusion, because the question itself will tell clearly, or else even in accounts also we understood it clearly only what is called financial year. Now to understand what is called previous year and what is called assessment year, Make it clear, sir. The financial year and previous year are one and the same. The year which you earn income is the financial year. Okay, that itself is also what? Previous year. So here previous year is what? 24, 25 only. Whereas assessment year is what? 25, 26. Okay, sir, I am not writing assessment year definition here because section 3 defines exclusively only previous year. Okay, but since the concept came, I'll explain at least for you to understand what is called assessment year. The year in which this income is assessed to tax. Sir, assessed means computed. Assessment means computation, in other words. Okay, on the income you earned in 24-25, you will be computing the tax, not paying tax, sir. Sir, paying tax is wrong. Why? Because paying tax, there are different modes of paying taxes under income tax. One is like TDS and TCS is a mode of payment of tax. Advance tax is a mode of payment of tax. Third is self-assessed tax. Sir, TDS and TCS will be deducted in the same year in which you earn income. That means for 24-25 income, the tax will be deducted in which year? 24-25 only. Advance tax also for 24-25 income, you will be paying tax when? 24-25 only. Only the self-assessed tax only you will be paying in 25-26. So it's not, I cannot say you the definition like assessment year means the year in which you pay tax. That at inter level it's fine, but at final level you should understand it like the year in which you compute your tax liability. Okay, computing means you will be ascertaining how much tax you need to pay. That ascertaining you will be doing in the assessment year. Okay, out of such computed tax, already a part might have been paid already. See, let's say for financial year 24-25, you have 30 lakhs income. In 25-26, you have computed the tax as 9 lakhs. 24-25, you have income how much? 30 lakhs. 25-26, assessment year, you computed tax 9 lakhs. Now it doesn't mean 9 lakhs should be paid in 25-26 only. Already out of that 9 lakhs, some part might have already been paid in 24-25 only by way of TDS or by way of advance tax. Okay, that means assessment year means the year in which you assess the income to tax. Assess means what? Computing the income to tax or computing the income tax is called as assessment year. Okay, and for us to understand which assessment year is applicable for our exams, which previous year is applicable for our exams, sir, remember it clearly. When you are writing exam, if you look at the questions also, what the question will be asking, like the question they frame it as like, as if some person is having a problem with computing taxes, you are the one to solve and to compute the taxes. So usually tax when we will compute? Previous year or assessment year? Assessment year. So in exam also what you are doing? You are computing tax only. That means the exam whenever you are writing that particular year, that going on year is always what? Assessment year. So when you write exams, December 2025. Which year December 2025 means? 25-26. That is the assessment year. Okay. Let's say you write in June 2026. June 26, na, which year is running that time? 26-27. So the assessment year is what? 26-27. Applicable previous year is 25-26. Okay. Whenever you are writing exam, that a particular exam term is going on, that year is called as what? Assessment year. Okay. So you will be calculating income tax for the previous year. Understand? So for your exam, the applicable assessment year is what? 25-26. If at all June 2026, 26-27 is the assessment year. Okay. This is applicable for this particular previous year is applicable for December 25. Sir, even though it has to be discussed afterwards, but I am writing here the definition of assessment year as well. Assessment year. Assessment year. The year in which income is assessed na computed, assessed to tax. The year in which income is assessed to tax. In other words, it is what? Immediately succeeding to which year, sir? Previous year. Immediately succeeding to previous year. It's always a period of 12 months. Previous year might be some cases 1 month, 2 months or 6 months also. But assessment year is always a period of 12 months. Always a period of 12 months. Starts from 1st April. Always a period of 12 months. Starts from 1st April. Then, so now we are moving on to section 4, sir. Section 4 is what? మర్చిపోయారండి అది కూడా. Section 4 of Income Tax Act. Interlevel, like whoever the faculty comes, they'll like repeat it for as many times as possible. Section 4 is the charging section of Income Tax Act. Okay, don't forget at least the charging sections. Okay, section 9 is the charging section of CGST Act. Section 9, they are charging section, GST. Okay, section 9. Here it is like what? Section 4. Okay, at least section charging sections. Okay, sir, I said like in GST, section numbers are not much important. Like if you remember, it's fine. But under DT, there are certain section numbers which you need to remember for sure. There is no other option because we don't know their names also. See, for those sections or for those concepts, we cannot name them. We'll only referring to them with the numbers. So like TDS, like deductions, like these tax rates, optional tax rates like 115 BAC, BAH, okay, BB. So all these things, we need to remember the section numbers only. Okay, so you cannot say like I'm weak in memory. You need to revise it as many times as possible only. No other way. We need to by heart only. Okay. So the only subjects are it whole like CA or CMA. The only subject like the problem is like where you should understand conceptually and even you should do by hearting. Okay, the other subjects and all, if you at least understand the logic or the concept, you can do it properly. But here you should do both. You should by heart as well as you should understand it conceptually as well. So section 4, sir, it's the charging section. Section 4, charging section. So what does it say? Means income tax shall be levied, shall be charged. Income tax shall be charged for every assessment year. Income tax shall be charged for every assessment year. Now the question, what is called charged? Charged means what? Levy. Now the question is, what is called levy? Levy means impose. So income tax shall be imposed for every assessment year. So On you, every assessment year, what they will do? They'll impose tax. Sir, on everyone, if they'll impose tax, sir. So I'm just eating, sleeping. So on me also, they'll impose tax, sir. Okay. So for imposing tax, there should be some act or something should have been done. That would be explained in the next point, sir. First, they are saying like every assessment year, income tax shall be what? Imposed. Okay. On what they will impose, when they will impose, as per what? As per the provisions of this act. As per provisions of this act. So it's not like the way they want, as per the provisions of this act. So if this act says like certain exemptions has to be given, that would be considered. If this act says like certain people has to be excluded, then it has to be considered. As per the provisions of this act, okay. As per rates given in annual finance act. As per rates given in annual finance act. As per rates given in annual finance act. Okay. So you will be imposing tax when? Every assessment year. By using what rates? The rates given in annual finance act. On what this tax rate will be multiplied or will be applied? On total income. On the total income. On the total income. On the total income. Sir, income will be earned in which year? Previous year or assessment year? The year in which we earn income is called as what? Previous year. So the total income of which year? Previous year. On the total income of previous year. The total income of previous year on every person. On every person. Okay. So to summarize it, tax charge is imposed on every person. Okay. So to impose tax, he should be fit into the definition of person. Then just being a person is not a problem. The person should have what? Total income. Okay. Total income. And the total income also, they will be levying tax as per what? As per the rates mentioned in annual finance act. Okay, so see here, the important things are like these rates we should understand as per the rates given in finance act. These rates we should know. Then here total income they are referred. So total income we should understand what is called total income. Then they referred here the name what? Person. So we should understand who is called this person. Previous year also we should learn, but already we learned about what is called previous year. And here we should learn what is called assessment year. Assessment year we already learned. So assessment year done. Previous year done. So we should learn what? Rates, total income, person. Person definition, I think at least you have by hearted it, this definition at least in the interlevel. Person includes what, sir? Individual, HUF, firm, company, AOP, BOI, local authority, artificial, judicial person. Okay. Write down, sir, at least without looking at the projector or the screen. Write down the definition of person. Self-check. Person includes individual, HUF, firm, company, AOP, BOI, local authority, artificial judicial person. Artificial judicial person. Person includes. See now, who is called individual? We human beings are called as individuals. We need not to define or describe it once again. Human beings, individual means, okay, it could be male, female, irrespective of gender, irrespective of age. Okay, they are called as what? Individuals, human beings. Then HUF, Hindu undivided family. It's okay, when a family business is going on, then we refer it as what? HUF. Sir, these days HUF is just used as a tax planning tool only. HUF has been used as only a tax planning tool. Maybe at least somewhere in some north part of India there may be HUFs, but at least the southern states, you look at Tamil Nadu, Karnataka, Andhra Pradesh, Telangana, we cannot see these HUF businesses anymore. Okay, even if they are family, they'll again convert into a partnership firm or else they float a company, but not as HUF. But when HUF will be used means, so let's say, we already understanding here HUF is a different kind of, is a different person here. See, my father has some properties. Okay, my father has already some properties. Let's say he has some land, buildings. On that he'll be earning some rental income and all. So now he'll be transferring it to me. I already have my income. So I'm taking classes or I'm having practice. I'm having my own income. I already exceeded the slab rates. Okay, I already exceeded the slab rates. My income is already in 30% slab. Okay, now if my father transfers any property to me, that additional income will be taxing at what rate? 30% slab only. Now what I'll do? Me, my wife, my children, I'll float a HUF. We'll form as a family. And I'll ask my father not to transfer the properties to me. I'll ask him to transfer to whom? To the HUF. Okay, so now the properties will be on whose name? HUF name. Now, being on HUF name, my HUF will again enjoy what? The slab rate benefit, the additional like 5% slab benefit, 20% slab benefit, all those things can be enjoyed even by my HUF. So then to that extent, at least to the extent of 1,12,500 or so to some extent, I can enjoy what? The tax benefit if by way of creating an HUF. Okay. So as a tax planning tool only, we'll be using these days HUF. Okay, even though they are family businesses, but still these days they are under the partnership firms or under the LLPs or under the companies only because of the legalities. See, because the family business now, there won't be any agreements and all. But now, even within the family also, there will be so many conflicts. So that's why they'll be agreeing as like they'll be having partnership deeds and all. Okay, understand? HUF. There are two school of thoughts under HUF, Mitakshara, Dayabaga. Okay, so all these are irrelevant only for us. Firm. Sir, here they didn't specify specifically LLP because firm even includes LLP. Then company includes domestic company as well as foreign company. Then AOP, BOI. AOP means what? Association of persons. BOI means body of individuals. So by looking at the names only, what is the fundamental difference between AOP and BOI? Any person can be member of AOP because association means what? Group of persons. Person, it could be again individual, HUF, AOP, anything. Okay, so any of these category group can be called as what? AOP. But BOI, the name itself says what? Body of individuals. So BOI is just a group of individuals. AOP is what? Group of different persons. It could be individual or it could be a company or firm. Okay, then AOP, sir, voluntarily AOP will be formed, but usually BOI is formed out of compulsion. BOI is formed out of compulsion. Let's say, for example, you have watched the movie, Rajnikant acted movie called Arunachalam. So there the movie concept is like his father will be giving him 30 crores. He need to spend that 30 crores in 30 days. Then he'll get the whole estate. So there, what his father will do, his father, so he is having some problem, so some illness. So, but he cannot find his son. So he'll create a trust and some people will be appointed as trustees. Okay, so they'll be looking after the property until they find his son and his son fulfills this particular requirement. Now those trustees, they are the ones who are responsible to pay tax on that particular estate because father is not there. They couldn't find who is the son. Then all these days also they are earning incomes. On that income, who are responsible to pay tax, sir? That particular trustees. So trustees are a group of individuals, but they are formed out of compulsion. Okay, so they don't want to form as a group voluntarily, but out of the compulsion which was kept by some other person or by some trust act, they have been forming or being acting as a group. So another way or another example, there are 4 brothers, sir. These 4 brothers are having dispute regarding their father property. All these 4 people went to court. Now, to decide it, it is taking somewhere like 6 to 7 years. All these 6 to 7 years on that property income will be earning now. So now on that income, who has to pay the tax? All those 4 people are jointly and severally responsible for those taxes. Now, even though they are in dispute, they were formed as a what? Group. All the 4 members are responsible to pay the tax. So they were formed as a group. Out of what? Compulsion by the statute, they were treated as a group. So all the 4 brothers are not in talking terms also. But still, they were formed as a group for the purpose of levying tax or assessing the tax. So they are called as what? Body of individuals. Majorly, body of individuals is formed out of compulsion, because there is no other way to tax them. That's why they are created as what? Body of individuals. Then local authorities, municipalities, district boards, those things. Then artificial judicial person. What are called artificial judicial persons, sir? Universities. Okay, all these autonomous universities, ideals of God. If they didn't form as a trust, if they form as a trust, then they may form under the AOP or BOI. Okay, ideals of God, these courts, all these will come under what? Artificial judicial person. So person includes individual, HUF, firm, company, AOP, BOI, local authority, artificial judicial person. Then person definition done, sir. Then we'll go to which definition? Total income. We'll go to total income. Total income. So tell the 5 heads of income tax. Salaries, house property. Okay. Let me check. Like, which head will come first? Second one, house property. Third one, PGBP. Fourth one, capital gains. And the 5th one is IFOS. Okay. Thank you, sir. Income from salaries. Income from salaries. Then income from house property. Income from salaries, income from house property. Profits and gains from business or profession. Profits and gains from business or profession. Income from salaries, income from house property, profit and gains from business or profession. Then capital gains. Then income from other sources. Okay. Then we'll arrive what? Sir, if you remember the inter-level chapters, so tell me the income tax chapters you are having at inter-level. These 5 heads done. First chapter is basics. Okay. Second chapter is about residential status. Third chapter is about exemptions. Okay. Then we'll go into heads. All the 5 heads we covered. Then after heads, which chapter will come? TDS, clubbing, then set off and carry forward. So then we need to apply what? First we'll take incomes under these 5 heads. Then we'll check for clubbing provisions. If at all his son income has to be clubbed in his hands, or his wife income has to be clubbed in his hands, that we'll be checking, and then we'll add those incomes also. So we'll apply what then? Clubbing provisions. clubbing provisions. Then we'll check about what set off or carry forward of losses. So we'll be checking about set off and carry forward. We'll be checking about set off and carry forward. After doing these, then we'll arrive at gross total income. Gross total income. Gross total income. From gross total income, then we'll be subtracting chapter 6A deductions. Chapter 6A deductions. If you subtract chapter 6A deductions, then you will arrive net total income, or simply it can be called as even total income or the taxable income. It can be referred with any of these names: net total income, taxable income. Okay, so this is what the net total income. Sir, at any place where they refer total income, it means always what? Net total income only. So don't again get confused. Let's say if you go to the point where rebate. Rebate na they'll say what? Up to 5 lakhs rebate is applicable under 87A, like 12,500 or tax payable, whichever is lower can be taken as rebate. There, the total income 5 lakhs they said. So you'll be having a doubt. I mean, in classroom you'll not get all these kind of doubts. When you're writing exam or when you're solving on your own, then you'll get these doubts like 5 lakhs na gross total income or net total income, because gross total income will be somewhere 5 lakh 30,000. Net total income will be 4 lakh 80,000. Then you'll have a question whether rebate is applicable or not. So always, sir, if at all they want to refer gross total income, they'll clearly say gross total income. If they used only total income, that means they are referring to what? Net total income only. Okay. Then, sir, in this total income, all the different heads incomes are included or not? It includes salaries income, capital gains income, IFOS income. But the problem is all these are not taxed at a common rates. There are certain incomes which are chargeable to tax at special rates. There are certain incomes which are chargeable to tax at special rates. For example, capital gains. Long-term capital gains are now taxable at 12.5% without indexation, whereas short-term capital gains are now taxable at a rate of 20%. Okay, lottery income is taxable at 30%. So all these are special rate incomes. So now this net total income, let's say for example, if you take 10 lakhs, this 10 lakhs on straight away we cannot apply slab rates. Some incomes are taxable at special rates, some incomes are taxable at the slab or the normal default rates. Okay. So now how do we compute tax now? That also I am continuing, sir, here tax computation as well. Beneath the net total income only, sir. First what we'll do now, compute tax on total income excluding special rate incomes. Excluding special rate incomes. Special rate incomes. So let us take it as A. Compute tax on total income excluding special rate incomes. Let us take it as what? A. See, out of my 10 lakhs income, 4 lakhs are special rate incomes. Only 6 lakhs is there. Now what I'll do? On 6 lakhs, I'll calculate the tax normally by applying the slab rates. Assuming he is individual. If at all company na, then company also not slab rates, but for these incomes we need to calculate separately. So that's why I'm not writing the rates here, slab rates or only the flat rates also, because slab rates are applicable only to individuals only. Flat rates applicable to company, firm and all. So that's why we cannot write that particularly. So first we'll compute the income which is taxable to tax normally. On that we'll calculate tax. Then we'll take the special rate incomes. So what are those? Let's say capital gains. Capital gains under section 112, 112A and 111A. 111, sir. 111 is chargeable to tax at normal rates only. That's why I'm not taking like 111. Only 111A, 112A and 112. Lottery income. So these are the common special rate incomes. There might be some other special rate incomes also, but commonly these things will come. Lottery income or capital gains. Now we'll take the subtotal of this and we'll take it here. So we have calculated tax on what now? Tax on total income excluding special rate income and even on special rate incomes also. Now total tax equals to A plus B. Now on this we'll apply surcharge or rebate. Sir, surcharge or rebate will be applying. Sir, surcharge or rebate has to be levied on what? Tax. We'll write down them clearly. Then if surcharge is SENA, then cess, HEC, health and education cess. At what percentage, sir? 4%. And what it has to be levied? A plus B plus C. This is the total tax payable. Total tax payable. Total tax payable. So I am writing here, sir, for you to have clarity. Surcharge has to be levied on what? Tax. Surcharge has to be levied on tax. Surcharge has to be levied on tax. Whereas HEC has to be levied on tax plus surcharge. Sir, here plus or minus, sir. Keep like A plus B plus or minus C, because C could be rebate also. If it is rebate, now we'll do what? Minus. Understand? Why plus or minus? Surcharge na will add. Rebate na will be subtracting. That's why. So now we are entering into the tax rate, sir, because we have completed the total income. We have completed the person also. Then the only thing pending is what? Rates. Rates are very important, sir. The biggest problem is like rates in every chapter we may not again interlink rates, but in the main examination questions, it could be any chapter, they'll ask you to compute tax payable. So tax rates at any point of time you cannot forget. So from today onwards, start mugging up. There's no other option, sir. So we cannot remember tax rates like just like that. We need to remember, I mean, we need to revise them so many times, recall them so many times, then only we can remember the tax rates, because currently there is like a default regime, which is like the 115 BSE, and there is a other old regime as well. Okay. So both regimes are there. Both regimes, how much is the tax rate, how much is the surcharge rate, how to calculate under the normal regime, how to calculate under the default 115 BSE regime. So all these things we should have proper clarity. So first I'm starting with individual, HUF, AOP, POI, those things. Okay. Tax rates. Tax rates for whom we'll be discussing, sir? First, individual, HUF, AOP, BOI, artificial judicial person. That also under the default regime. First we are discussing default regime. What is called the default regime? Sir, currently the default regime is nothing but the new regime. Okay, previously when you are written inter-level and all, 115 BSE used to be the optional regime. But from the assessment year 25-26, default regime is nothing but the 115 BSE. The old regime is nothing but a optional regime now. Optional regime now, old regime now. Default regime is what? The new regime. Okay, so default regime, new regime, which we'll be discussing under the 115B AC 1A. This is the default regime or normal regime. Total income, tax rates. Total income, tax rates. What is the total income? 0 to 3 lakhs. Where the total income. So total income line here, gross or net? Net only. So don't have that confusion also. Total income means always net total income. 0 to 3 lakhs. How much? Nil. I mean on first 3 lakhs, there is no tax. If it is between 3 lakhs to 7 lakhs, if it is between 3 lakhs to 7 lakhs, sir, these also, like the slabs also has been changed. In inter-level, there might be a different slabs for you, but the slabs also got changed. 0 to 3 lakhs, nil. If it is 3 to 7 lakhs, then the tax rate is 5%. When it is like 7 lakhs to 10 lakhs, when it is 7 lakhs to 10 lakhs, the tax rate is 10%. When it is 10 lakhs to 12 lakhs, then the tax rate is 15%. 10 lakhs to 12 lakhs, then the tax rate is how much? 15%. 12 lakhs to 15 lakhs, 20%. So greater than 15 lakhs, 30%. Okay, so now you guys need to calculate the taxes or the tax rates. I'll be giving examples without using calculators. Without using calculators. Let us depreciate our brain also, not just the calculators. Sir, if the income is exactly 5 lakhs, so how do we calculate tax? First 3 lakhs nil. Okay, above, I mean in between 3 lakhs to 7 lakhs slab, how much income is there? 2 lakhs. So what percentage we should apply? 5%. How much? 10,000. 2 lakhs into 5% na 10,000. Sir, I don't know 2 lakhs table na. 2 lakhs table is not required. 2 table is enough. 2 5s are 10. Okay, so it is like 10,000. 2 lakhs into 5%, it is how much? 10,000. Okay. Sir, particularly we'll learn at these slabs. Okay. So not like inter level also, not that slabs also not needed. At least we should remember at 15 lakhs. Okay. At inter level, I mean in the old regime, how do we used to remember means like at 5 lakhs what is the tax? At 10 lakhs what is the tax? That we used to remember. That also we'll do once we go to the old regime also. But here sir, you need not to remember the tax liability at each slab. At 7 lakhs, what would be the liability? At 10 lakhs, what would be the liability? At 12 lakhs, what would be the liability? That is not much important. It's better to calculate only. Okay. But to have a practice, because these are new slabs, right? For you also. So do sir, what is the tax when the income is 11 lakhs? Use calculators now. What is the tax when the income is 11 lakhs? Sir, in almost all the questions, sir, institute material, they have given step by step actually in answers also. Because since there is a change in the slabs and all, right? So that's why in institute answers also, they have properly computed stepwise and given. Okay, total income 11 lakhs on first 3 lakhs. What is the tax rate, sir? Nil. So the tax is also nil. Then in between 3 lakhs to 7 lakhs, how much income is there, sir? 4 lakhs. 4 lakhs into what percentage? 5%, which equals to how much? 20,000. Then 7 lakhs to 10 lakhs, how much income is there? Into how much? 10%, 30,000. Then 10 lakhs to 12 lakhs is the next slab. But in this slab, you have income of how much only? 1 lakh. So you don't take 10 to 12 lakh, 2 lakhs is there. In between 10 to 12 lakh slab, how much income we are having, that we need to check. In between 10 to 12 lakh slab, how much income we have? 1 lakh into 15%. How much it is? 15,000. So the answer is how much? 65,000. The answer is 65,000. Okay. Then next example, sir, where the total income equals to 15 lakhs. Calculate and tell total income equals to 15 lakhs. If you cannot do it on calculator only straight away, you could write and do also. But don't do silly mistakes even in this tax rate computations also. 1 lakh? 1,40,000. Okay, let me do. For slow learners like me, sir, if you could do it like in one go also, it's fine. But some people will be there who will be learning slowly like me. On first 3 lakhs, nil. Okay, on first 3 lakhs, there is income is nil, 3 lakhs is there. But the tax rate is how much? Nil. So that equals to 0. Then 3 lakhs to 7 lakhs. In between 3 lakhs to 7 lakhs, how much income is there? 4 lakhs is there. What is the tax rate, sir? 5%, which equals to 20,000. And then 7 lakhs to 10 lakhs, how much is there, sir? 3 lakhs. 3 lakhs into how much? Sorry, 10%, how much it is? 30,000. 30,000. And then 10 lakhs to 12 lakhs. How much is there? 2 lakhs into how much? 15%, 30,000. Then again in between 12 lakhs to 15 lakhs. How much is there? 3 lakhs. Into what rate? 20%. How much? 60,000. So if you do total, how much, sir? 1,40,000. This you should remember, sir. On 15 lakhs under default regime or the new regime where you have total income of 15 lakhs, the tax liability would be how much? 1,40,000. If you remember this, then while solving other questions and all, you could do it much more simply. Let's say if you need to compute on 20 lakhs, what you will do? First 15 lakhs you already know, 1 lakh 40,000. On the balance 5 lakh, 30%. 5 lakhs into 30 now 1 lakh 50, and you add 1 lakh 40, 2 lakh 90,000. Okay, sir, this saves you a lot of time. Okay, and at 15 lakhs you should remember the tax rate. So, okay, on the first 15 lakhs, if you are under the default regime, what is your tax liability? 1 lakh 40,000. Right. Okay. So now don't use calculators and tell, sir, what is the tax on 25 lakhs? Don't use calculators. Tell what is the tax on 25 lakhs. Correct only, yeah. Check. Okay, don't. How do we do? 25 lakhs. First 15 lakhs, 1 lakh 40. Balance 10 lakhs. 10 lakhs into 30% na? 3 lakhs and 1 lakh 40. 4 lakh 40,000. Then, if it is like 40 lakhs, again 25 lakh, out of 40 lakhs, remove 15 lakhs. You have how much? 25 lakhs. 25 lakhs into 30%. Okay, 7 lakh 50,000 plus 1 lakh 40,000. 8 lakh 90,000. Understand? It doesn't mean you will do always with your brain only, but at least in your calculator also, all these 4 steps you can eliminate, right? Let's say if it is like 50 lakhs, what you can do straight away, 35 lakhs into 30% you will do, and you'll add 1 lakh 40,000. So for that simplicity, that minute seconds will be saved for you. Okay, so that's why remember 1 lakh 40,000. Okay, and here, sir, these tax rates are applicable for individual, HUF, AOP, BOI, and AJP, irrespective of whether they are resident or non-resident. These rates are applicable irrespective of resident or non-resident. Then second one, individuals, now there will be age, senior citizen, super senior citizen and all. Anyhow, for HUF, AOP, BOI, AJP will not consider all those. Only for individuals will consider senior citizen, super senior citizen. We remember in the old regime and all, there used to be different slabs for senior citizen and super senior citizen. Here there is only one particular category, whether it is senior citizen, super senior citizen, resident, non-resident, anything, only these slabs only. So no much confusion here. Okay, same slabs, slab rates irrespective of same slab rates irrespective of resident or non-resident. Same slab rates irrespective of resident or non-resident. Normal individual or senior citizen. So that doesn't even impact here. Same slab rates, resident or non-resident, individual or senior citizen. Then here only we'll discuss even the surcharge rates as well. Surcharge rates. Sir, we are under which regimes are currently? New regime only. Okay, new or default regime only we are discussing. Okay, even the surcharge rates will change considering the default regime and the old regime. Okay, so that's why surcharge rates here. So again, total income surcharge rate. Total income, then surcharge rate. First one, where the total income is less than or equal to 50 lakhs. Where the total income is less than or equal to 50 lakhs, then the surcharge rate is nil. Where the total income is greater than 50 lakhs but less than or equal to 1 crore, then the surcharge rate is 10% of income tax. So on the tax you calculated, you should levy how much? 10% of income tax. If it is greater than 1 crore but less than or equal to 2 crores, then the surcharge rate is 15% of income tax. If it is greater than 2 crores, then the surcharge rate is how much? 25% of income tax. Sir, for this 25%, I am writing here, will not understand it properly. The examples with respect to what we are writing with that arrow, will understand that only in capital gains only. 25% restricted to %15 only in case of capital gains and dividend income. Capital gains also, sir, not all capital gains. 111A, 112A. 111A, 112A. With respect to capital gains under 111A, 112A, and then dividend income. Nothing but, sir, 111A, 112A na listed equity shares. Okay, so understand the surcharge rate, sir. Up to 50 lakhs is, if your total income is up to 50 lakhs, there is no surcharge at all. But your total income is between 50 lakhs to 1 crore, then the surcharge rate is 10%. 1 crore to 2 crores, then the surcharge rate is 15%. Above 2 crores, the surcharge rate is 25%, assuming there is no special rate incomes. Only all are normal taxable incomes only. Okay. Whenever surcharge comes, the next point that should come into your mind is marginal relief. Whenever there is surcharge, you should think of what? Marginal relief. Many times, sir, will forget about marginal relief and will be picking a wrong option, wrong MCQ and doing a wrong answer and come. Marginal relief, you should check whenever there is a surcharge. So when surcharge is coming in the question, obviously your mind should think of what? Whether marginal relief will come or not. And one more hint. Marginal relief, just because there is surcharge, it doesn't mean always there should be marginal relief. Okay? The given total income in the question should be closer to that of surcharge limits here. Sir, here for the surcharge, there are certain total income limits. 50 lakhs, 1 crore, 2 crores. These are the limits. When the given total income is near to those surcharge limits, sir, in question they may say like 1 crore, 1 lakh. Okay? Here one of the surcharge limit is what? 1 crore. So 1 crore, 1 lakh night is nearer to that of surcharge limit. So there is a chance of marginal relief. Okay? 1 crore, 5 lakhs also nearer to surcharge limit only. But there is a chance. You should check and decide whether marginal relief is applicable or not. Let's say, so some people will ask, sir, when I used to take inter badges and all, so I used to say like, take the nearest surcharge limit. Okay, then they'll ask a hypothetical question like, sir, my income is 75 lakhs. Okay, then what should I take, 50 lakhs or 75 lakhs? That's why I'm saying like here, only when the total income is within the nearer range of surcharge limits. I mean 1 crore na, up to some 15-20% variance is enough. 1 crore, up to 1 crore 10 lakhs, 1 crore 20 lakhs, you will be checking the marginal relief. If it is somewhere 1 crore 30, 1 crore 40, marginal relief will not come. Okay, so even if it is like exactly near 2 crore 1 lakh or 2 crore 2 lakhs, then there is a chance of marginal relief. 4 crores, 5 crores, that time there will not be any marginal relief. Okay, when the given total income is nearer to that of surcharge limits. Surcharge limits na here 50 lakhs, 1 crore, 2 crores, those limits are there. where the surcharge rates are going to change. So those are called as the surcharge limits. So first write down here, surcharge limits means, okay, time up. Surcharge limits are like what? 50 lakhs, 1 crore, 2 crore. These are called as surcharge limits. Then write down, sir, marginal relief needs to be checked. Marginal relief needs to be checked only when the total income is nearer to that of surcharge limits. Only total income is nearer to that of surcharge limits. Only total income is nearer to that of surcharge limits. Okay. So let me write down the steps also, sir. We'll discuss the steps. Examples and all we'll do tomorrow. Computation of marginal relief. Step 1, sir. What we'll do means, step 1, compute tax on the given total income. In question, they may be given a total income. On the total income, we'll compute tax. Sir, here, compute tax on given total income. So, total income means here, not just the tax means here, not just the tax, including surcharge. Including surcharge. So compute tax on given total income. Sir, we'll take example also. Parallelly, we'll do one example also so that it would be much more convincing for you. Let us take it as like 1 crore, 1 lakh. 1 crore, 1 lakh. So now compute tax plus surcharge on 1 crore, 1 lakh. Tax plus surcharge on 1 crore, 1 lakh. Very simple, sir. How much you do? Out of 1 crore, 1 lakh, subtract 15 lakhs. How much it would be? 86 lakhs. So 86 lakhs into 30 percentage. 86 lakhs into 30 percentage plus 1 lakh 40,000. 27 lakh 20,000. If the income is 1 crore 1 lakh, what is the surcharge rate applicable? 15%, because 50 lakhs to 1 crore, 10%. 1 crore to 2 crores, the surcharge rate is how much? 15%. So on the tax computed, apply 15% surcharge also and do the total. What is the first tax? How much it came, sir? 27 lakh 20,000. On that you could straight away apply 115%. 115. The total you will come. Okay, or else you could do that grand total and all also. So on tax, you will apply what? 15% surcharge. So tax plus surcharge together, how much we got? 31 lakh 28,000. 31 lakh 28,000. Fine. Then step 2. Compute tax on nearest surcharge limit. Compute tax on nearest surcharge limit to given total income. Sir, for 1 crore 1 lakh, what would be the nearest surcharge limit? 1 crore. Now on 1 crore, you should compute what? Tax plus surcharge. Now on 1 crore, you should compute tax plus surcharge. On 85 lakhs, you should do what? 30% plus 1 lakh, 40,000. How much is the tax, sir? Okay, you calculated tax plus surcharge altogether. Okay. So do until. Everybody, sir, do it until 85 lakhs into 30% plus 1 lakh 40. You will get the tax. 26 lakh 90,000 plus 10%. Why 10% here? Because the nearest surcharge limit to given total income is how much? 1 crore. Sir, if our income is 1 crore 1 lakh, then the surcharge rate is 15%. But in step 2, we are not calculating on our income. We are calculating on the nearest surcharge limit, which are taken as what? 1 crore. So if the income is exactly 1 crore, then the surcharge rate applicable is how much? 10% only. So on tax, if you add 10%, how much it is? 20 lakh? 29 lakh 59,000. Then you should do step 3. Step 3 is difference between given total income. Step 3 is difference between given total income and nearest surcharge limit. And the nearest surcharge limit taken. Between given total income. Given in question given total income and nearest surcharge limit taken. Sir, in first step, sir, what is the given total income we have taken? 1 crore. 1 crore, 1 lakh. Whereas in step 2, what is the nearest surcharge limit we have taken? 1 crore. So step 3, what we are asking? The difference between the given total income 1 crore 1 lakh and the nearest surcharge limit 1 crore. What is the difference between those two? 1 lakh. 1 lakh only. The difference between, sir, I am not asking about tax and all. I am simply asking you between the difference between nearest surcharge limit you have taken 1 crore 1 lakh and the given total income. 1 lakh is the difference. Now marginal relief. Step 1 minus step 2 minus step 3. 1 minus 2 minus, sir, from 1 subtract 2 and 3, you will be getting the marginal relief. From 31 lakh 28,000, subtract 29 lakh 59,000 and 1 lakh. 69,000 is the marginal relief. These steps are same, sir. Once again, I will repeat how to compute marginal relief. Very simple steps only. First, you should compute the tax plus surcharge on the given total income. Don't ask me what if surcharge is not applicable. If surcharge is not applicable, there is no question of marginal relief. Okay, so that's why compute tax plus surcharge. Step 2. What? In step 2, first you should identify the nearest surcharge limit. If it is 51 lakhs, what is the nearest surcharge limit? 50 lakhs. If it is 2 crore 1 lakh, then 2 crore is the nearest surcharge limit. First, compute tax on the given total income. Step 2, identify the nearest surcharge limit and compute tax on it. Step 2. Then step 3, what you will do? You will find out the difference between given total income and the nearest surcharge limit. That's the third one. Whereas the fourth, marginal relief, is what? Step 1 minus step 2 minus step 3. This is called as marginal relief, sir. So in tomorrow's class, I will explain why marginal relief has to be given also. And then what would be the ultimate tax payable in this particular case. Okay. So the MCQs has been asked even with respect to this tax computation questions and all, including marginal relief and all. So it's okay to spend time here because at least 2 7 marks questions are being linked with the tax computations. At least 2 7 marks questions. So there at least 3 3 marks will be allocated only for the tax computation purpose only. So around, even though this chapter doesn't have a specific weightage, but around which is merged with other questions, it is having around 7 to 8 marks weightage. Okay, not a specific question, but stepwise markings if you allocate in the other chapter questions also, this has weightage or not. Okay, so we'll continue tomorrow, sir. Thank you. Hello all, good morning. So in yesterday's class, we have started discussing about the tax rates. We have discussed about the charging section. Based on charging section, we have discussed how to compute total income, then the tax rates. So in tax rates also, we have started specifically about individual, HUF, AOP, BOI and HAP. Okay, so in that also, we are first discussing the default regime. We are first discussing what? Default regime. So under default regime, what are the tax rates applicable? 0 to 3 lakhs, the tax rate is nil. 3 to 7 lakhs, 5%. 7 to 10 lakhs, 10%. 10 to 12 lakhs, 15%. 12 to 15 lakhs, 20%. In excess of 15 lakhs, 30%. If a person if an individual exact total income is 15 lakhs, what would be his tax? 1,40,000. 1,40,000. So under this default regime, we need not to check whether individual is senior citizen or super senior citizen. Age is not a criteria. Irrespective of age, the same slab rates are applicable. And again, irrespective of whether he is resident or non-resident, same slab rates are applicable. Then we have discussed about the surcharge rates, where the total income is less than or equal to 50 lakhs, then the surcharge is nil. If it is 50 lakhs to 1 crore, then the surcharge rate is 10%. Above 1 crore, 1 crore to 2 crores, then the surcharge rate is 15%. In excess of 2 crores, then the surcharge rate is 25%. If the total income is exceeding like 2 crores, then the surcharge rate is 25%. So this part, restricted part and all, we'll discuss in capital gains chapter. Then we have discussed about marginal relief as well. Marginal relief. How to compute marginal relief? Sir, marginal relief, understand, it will come under the default regime as well as under the old regime. It will come under the default regime as well as under the old regime. Next one, it comes even for companies, firms, AOP, BOI. So to any kind of person, if there is surcharge, then we need to check about the marginal relief. That also, when the given total income or when we are solving an answer, the total income we got is nearer to the top surcharge limits. 1 crore, 2 crores, these are the surcharge limits. If it is nearer to those surcharge limits, then we should compute marginal relief. How do we compute marginal relief? First one, step 1, compute tax on the given total income. Okay, given total income. Let's say if a question is specifically about marginal relief, then you will compute tax on that total income. Or else, even if you are solving a normal problem also, the total income you got something. So on that, first you should calculate what? Tax and plus applicable surcharge. Step 2, find out the nearest surcharge limit to that given total income. Nearest surcharge limit to that given total income. On that nearest surcharge limit, again you should calculate tax plus surcharge applicable. Step 2. Step 3, you should find out the difference between given total income and the nearest surcharge limit which you have taken. Okay, third one. Okay, this we did towards the end of the class yesterday. So that's why I'm again explaining you, sir. See, we have taken the given total income in the previous example or in the last class as how much, sir? 1 crore, 1 lakh. 1 crore, 1 lakh. Good morning all. Triveni, Krishnavamsi. 1 crore, 1 lakh. 1 crore, 1 lakh. See, 1 crore, 1 lakh is the given total income. So what we have to do? On 1 crore, 1 lakh, we should calculate tax and surcharge. Okay, how much it is? 31 lakh 28,000. Then for 1 crore, 1 lakh, what is the nearest surcharge limit? 1 crore. Because the surcharge limits are what? 50 lakhs, 1 crore, 2 crores. I mean, at these limits only the surcharge rate is being applicable, or again it's changing the slab. That's why. Okay, so compute the nearest surcharge limit to the given total income. What is the nearest surcharge limit here? 1 crore. So on 1 crore we calculated the tax plus surcharge. Then step 3, we have found out the difference between the given total income 1 crore 1 lakh and the nearest surcharge limit. What is the nearest surcharge limit? 1 crore. The difference is how much? 1 lakh. Then we will be finding out what? Marginal relief. From step 1, you should subtract step 2 and step 3. 69,000 is the marginal relief. Then question, they may not ask us to calculate marginal relief. They may ask us to calculate the tax payable. Sir, 1 crore 1 lakh is the tax total income. You need to find out tax on it. Okay, but since the total income is 1 crore 1 lakh, marginal relief is applicable. You calculated marginal relief. You cannot simply say like marginal relief alone. You need to find out what ultimately tax liability. So what is the tax liability here? Step 4. Tax liability equals to, sir, what is the tax liability na? What is the given total income, sir, for us? On what we need to calculate tax actually? 1 crore 1 lakh. That we already calculated in step 1. So tax liability equals to, take step 1 minus marginal relief. In the name itself it is saying relief. Relief na, it should be added or subtracted. It should reduce our pain. That then only it is called as relief. So that's why we should subtract. Sorry, marginal relief will give step 4, sir, for marginal relief. This will make like step 5. Step 1 minus step 4. Then we'll get the tax liability. What is the tax liability, sir, here? 30 lakh 59,000. $30,59,000. So now understand why marginal relief will be provided. Sir, let's say a person has total income of 1 crore. A person has total income of 1 crore. Okay. Let us take the Raju has total income of how much? 1 crore will take. Okay. Whereas Bhargav has total income of 1 crore 1 lakh. Total income of 1 crore 1 lakh. See, if you see Raju having 1 crore total income, what is the tax he need to pay, sir? 1 crore na, he need to pay only 29 lakh 59,000. Whereas Bhargav is having how much income, sir? 1 crore 1 lakh. If he is having 1 crore 1 lakh, how much is the tax he need to pay? 31 lakh 28,000. So take 31 lakh 28,000. Sir, compared to Raju, how much extra income Bhargav has earned? How much extra income? 1 lakh only the extra income. I mean the difference between this. So 1 lakh is the extra income Bhargav has earned over Raju. But the extra tax Bhargav has to pay for earning 1 lakh extra is 1,69,000. So Bhargav, first of all, he thought like I earned more than Raju, and he thought like he won the race. But actually here, Bhargav is not Bhargav, Raju is only in a better place, because even though he earned only 1 crore, he'll be paying, ending up with 29 lakh 59,000 only as tax. But Raju has to pay only 29 lakh 59,000. But Bhargav has to pay, here it is like Raju, here it is like Bhargav. See, for here, for earning 1 lakh extra income, he is ending up paying 1,69,000 extra tax. If you look at the net earnings after reducing the cash outflow, if you look at only the cash which they are having in their account, Raju will only be in a better place. So it's not justifiable to tax more than what they earn. The incremental revenue is only 1 lakh, but the incremental expense here is 1,69,000. That's why they're restricting this 1,69,000 to the extent of incremental income. What is the incremental income here? 1 lakh. So they're restricting the liability also to the extent of that extra income only. So 69,000 they are giving as relief. 69,000 they are giving as relief. That itself is the marginal relief. So they're restricting our extra liability to the extent of extra income. Okay, but if at all you check at 1 crore 10 lakhs, their income will only be extra. Sir, if you want to check also, you can do. 1 crore 10 lakhs also you can do. Their marginal relief will be applicable or not also. Sir, if you see, instead of 1 crore 1 lakh, if you take 1 crore 10 lakhs, the difference between incomes is how much? 10 lakhs. But the liability will not be 10 lakhs. That's why marginal relief will not come into picture. Okay. Incremental liability shall not exceed incremental income. So clear? Are you able to understand the default regime, sir? The tax liability and surcharge rates? Sir, two simple easy chapters are there, 2 7 marks questions. If you don't understand tax rates, you cannot solve or you cannot get easy 7 marks there. Okay? And I'm saying again and again, those chapters there will not be any twist except you understanding the tax rates computations. Okay, so please be clear with the tax rate computations. Now we are moving on to the old regime. Tax rates applicable to individual, HUF, AOP, BOI, AJP. Tax rates applicable to individual, HUF, AOP, BOI, AJP. We are under the old regime. So old regime. So first, sir, here under old regime, sir, first category or first type, individual irrespective of resident or non-resident. Then HUF, AOP, POI, AJP. All these categories, sir, it's not just about individual. For all these persons, irrespective of resident or non-resident, these slab rates are applicable. First one. Where the total income is, not again keeping the heading, sir, total income is less than or equal to 2.5 lakhs, then the tax rate is nil. Less than or equal to 2.5 lakhs, then the tax rate is nil. If it is between 2.5 lakhs to 5 lakhs, then the tax rate is 5%. Then the tax rate is 5%. If it is between 5 lakhs to 10 lakhs, then the tax rate is 20%. If it is above 10 lakhs, then the tax rate is 30%. If it is above 10 lakhs, then the tax rate is how much? 30%. Up to 2.5 lakhs, nil. 2.5 lakhs to 5 lakhs, 5%. 5 lakhs to 10 lakhs, 20%. Above 10 lakhs, 30%. Here, who will be, especially for individual, I am writing in this box, sir. Individual, if he is resident, age less than 60 is covered. Age less than 60 years is covered. If individual is non-resident, then irrespective of age covered here. If he is non-resident, even though he is senior citizen, these slabs only applicable, irrespective of age. Okay? If he is resident and then senior citizen, there is a different slabs applicable. If he is resident and age less than 60, then these slabs are applicable. If he is resident but senior citizen, I mean age greater than or equal to 60, then these slabs are not applicable. Only to a non-resident only, irrespective of age, these slab rates are applicable. If he is a resident individual, age should be within 60. HUF, AOP, BOI and AJP, anyhow we are not considering the age factor. Sir, here tell me, on first 10 lakhs, what would be the tax liability? If at all a person is having exactly 10 lakhs year income. Calculate and tell for the first time, no problem. Sir, first 2.5 lakhs nil. So, okay, I am calculating, see. Tax where an individual has 10 lakhs total income. 10 lakhs total income. Sir, how do you calculate, sir? 0 to 2.5 lakhs. How much income is there? 2.5 lakhs is there, but the rate is nil. The tax is how much? 0. And between 2.5 to 5 lakhs, how much income is there? 2.5 lakhs into 5%. It is how much? 12,500. 12,500. Then again, 5 lakhs to 10 lakhs if you take, then 5 lakhs into 20%, how much it is? 1 lakh. Then greater than 10 lakhs, then how much is the tax rate, sir? 30%, but we don't have anything here. So the tax to be computed for us is how much, sir? 1,12,500. This we should remember. For default regime at 15 lakhs, 1,40,000. For the old regime at 10 lakhs, it is how much? 1,12,500. This makes our computations much more easier, sir. Let's say if you need to do marginal relief sum only. What you will do at 50 lakhs, you need to calculate tax. First 10 lakhs, we already know. How much? 1,12,500. On the balance 40 lakhs, straight away you multiply it with 30%. Understood, right? Okay. See, if individual is a resident, and age greater than or equal to 60 years. Sir, 60 years now, there is a question here also. Sir, we are having under income tax previous year assessment year. What is the current previous year for us? 24, 25. Assessment year applicable is what? 25, 26. Now attaining age of 16, there are 2 years span here, starting from 1st April 2024 to 31st March 2026. When he should have get the age of 60? That's the question. His birthday, I mean, he is attaining age on 1st April 2025. Then he is senior citizen only. If he attains 60 years age on 1st April 2025. Why 1st April 2025? First day of assessment year. If he is attaining the age of 60, then he is called as what? Senior citizen. On the first day of assessment year, we should check. On that day, is he having 60 years age or not? If he is having 60 years age, then he is called as senior citizen. Age greater than or equal to 60, but less than 80 years. That also right. Age needs to be checked on first day of assessment year. If birthday on 1st April, if birthday on 1st April and attains 60 years, then also senior citizen. Age needs to be checked on first day of assessment year. If birthday is on 1st April and attains 60 years, then also senior citizen. 1st April of assessment year only is birthday. That day only he got 60. Still he will be considered as what? Senior citizen only. See here, the tax rates are like 0 to 3 lakhs. 0 to 3 lakhs. 0 to 3 lakhs, the tax rate is nil. 3 to 5 lakhs, the tax rate is 5%. Greater than 5 lakhs, the tax rate is 5 lakhs to 10 lakhs, not greater than 5 lakhs. 5 lakhs to 10 lakhs, then the tax rate is 20%. Greater than 10 lakhs, then the tax rate is how much? 30%. See, for senior citizens, the basic exemption limit. So first 2.5 lakhs, first 3 lakhs, which we are exempting here, na, that we call it as what? Basic exemption limit. In other words, we can call it as like maximum amount not chargeable to tax. Here, the first 3 lakhs we are not taxing, na. Here, first 2.5 lakhs we are not taxing. Whereas under default regime, we are not taxing again the first 3 lakhs. That is called as basic exemption limit. The other word for it is like maximum amount not chargeable to tax. That is the maximum amount which is not chargeable to tax. Okay. So here understand, this 3 lakh slab is applicable only to a senior citizen who is resident of India. If he is non-resident, then which slabs are applicable? The first one, 2.5 lakhs, that only is applicable. Okay. Then super senior citizen. Sir, again here also, if at all senior citizen is having 10 lakhs exactly income, what is the tax liability? 1,10,000. For 10 lakhs total income, for a senior citizen, tax liability is 1,10,000. Then we are moving on to super senior citizen, sir. Individual resident age greater than or equal to 80 years. I am not writing it again, sir, but same here also. On the first day of assessment year only, we'll be checking. Okay, if age is greater than 80 years, then he is called as what? Super senior citizen. Super senior citizen. Up to 5 lakhs, the tax rate is nil. Up to 5 lakhs, the tax rate is nil. Whereas the income is between 5 lakhs to 10 lakhs, then the tax rate is 20 percentage. Where the income is greater than 10 lakhs, then the tax rate is 30 percentage. Then the tax rate is how much? 30 percentage. Sir, here also tell, if a super senior citizen is having exactly 10 lakhs as income, what is the tax liability? First 5 lakhs nil, the balance 5 lakhs. 5 lakhs into 20%, it would be 1 lakh. Not much relevant also, so I am not writing here. Now we are moving on to surcharge rates under the old regime. Surcharge rates under old regime. Surcharge rates under old regime. So new regime or the default regime, are you able to recall them? First 50 lakhs. 50 lakhs to 1 crore. 10 percentage. 1 crore to 2 crores. About 2 crores. 25 percentage. Okay. Total income, surcharge rate. Sir, surcharge has to be levied on total income or tax? On tax. Okay. Total income less than or equal to 50 lakhs. Under old regime also surcharge is nil. If it is more than 50 lakhs but within 1 crore, less than or equal to 1 crore, then the surcharge rate is like 15 percentage of income tax, since it has to be levied on tax. Then 1 crore to greater than 1 crore but less than or equal to 2 crores, then the surcharge rate is here 50, sorry sir, mistakes are here. 50 lakhs to 1 crore, it is how much? 10 percentage. 1 crore to 2 crores, it is how much? 15 percentage of income tax. Then again there is a next another slab, sir. Whereas under the default regime, about 2 crores straight away it would be there. But whereas here there is another slab, 2 crores to 5 crores. 2 crores to 5 crores, it is how much? 25 percentage of income tax. If it is greater than 5 crores, then it is 37 percentage of income tax. Then it is 37 percentage of income tax. 37 percentage of income tax. Sir, again, under 25 percentage and under 37 percentage, with respect to special rate incomes, so let me put stars here. Restricted to 15 percentage in certain cases. Those certain cases we will discuss in capital gains. Restricted to 15 percentage in certain cases. We'll discuss in which chapter? That also in capital gains chapter. Sir, again, whenever there is surcharge, again there will be what? Marginal relief. Okay. So let us take an example here. Total income of individual is 5 crore 3 lakhs. Compute tax liability excluding cess of individual, tax liability excluding cess under old regime. Excluding cess under old regime. Total income of individual is how much? 5 crore 3 lakhs. Compute tax liability excluding cess under old regime. So again, first, here sir, the given total income nearer to the surcharge limit or away from surcharge limit? Nearer to the surcharge. What are the surcharge limits are here? 50 lakhs, 1 crore, 2 crore, 5 crores. I mean, where there is a change in surcharge rate, those limits are called as what? Surcharge limits. Those limits are called as surcharge limits. Here the given is 5 crore 3 lakhs, which is nearer to the of surcharge limits. So first step 1, marginal if is applicable. So that's why the tax computation, first we'll take what? Step 1. Step 1, what we should do, sir? Compute tax plus surcharge. Compute tax plus surcharge on what? 5 crore 3 lakhs. So calculate and tell what is the tax plus surcharge on 5 crore 3 lakhs. First 10 lakhs, sir, 1 lakh, sir, individual, I am giving age also. Sorry for not mentioning age. Age 40. So age 40, not a senior citizen also. So since 40 years only, resident and non-resident does not have any impact. 5 crore 3 lakhs. How do we calculate, sir? Remove 10 lakhs separately. So 4 crore 93 lakhs into 30% plus 1,12,500. How much it came? On that again we need to apply what? Surcharge at a rate of, what is the surcharge rate applicable? 37%. So simply do, no hurry, take your time and solve. Don't follow others' answers also. You just try on your own. If you don't try, you'll never get it. The problem with all these students who are currently is like, so understand, sir, actually, so we are providing marathons since because you are expecting, but understand one thing, my personal feeling, day before exam, if you watch marathon, how can you clear? I don't understand fundamentally. Okay, day before exam, what you should do? You should on your own, you should take a problem and you should solve and then go to exam. Then you will be knowing where you do mistake or what problems will be coming. Look, I mean, I'll show you the stats also. Just on the day before exam, suddenly every marathon will have 10,000 views hike. Suddenly on the day before exam, 10,000 views. I mean, almost 2,000-3,000 of students, they are not doing anything. Just the day before exam, they are playing a marathon, they are looking it, they are doing watching. You know, watching and verification in audit. So they'll open the answer workbook along with them. So I'll be doing the answer, so they'll just put tick mark. Okay, sir did correct only here. So such kind of watching will not work for you. Okay, you just open the book and solve. So what I am saying is like, practice on your own, then only you learn mistakes. Step 1, compute tax plus surcharge on 5 crore 3 lakhs. Sir, what is the tax plus surcharge on it, sir? 4 crore. Calculated, everyone? How much, sir? 2 crore? 2 crore 4 lakh? 16,425. 2 crore 4 lakh 16,425. Varsha, you got the same answer? Huh? Okay. Then step 2. Step 2, what we should do, sir? What is the nearest surcharge limit here? 5 crores. So compute tax plus surcharge on nearest surcharge limit, which is 5 crores. How much it is? 1 crore 83 lakhs 75,000. 4 crore 90 lakhs into 30 percentage plus 1 lakh 12,500 will get the total. On that again multiply it with or add 37 percentage to it. Sorry, correct only 25 percentage. 5 crores. Okay. So these people already did. Marginal relief is 16 lakh 800. Okay, okay. See what is the tax here? Step 2, 1 crore. 1 crore 85 lakh 16,000. 1 5. Okay, 15th 625. Okay. Then we should do what? Step 3. Step 3 is what? Difference between five crore 3 lakhs and 5 crores. What is the difference amounts are here? 3 lakhs. So what is the marginal relief, sir, then? Marginal relief is like step 1 minus step 1 minus step 2 minus step 3. What is the marginal relief then? 16 lakh 800. Okay. Did the question ask the marginal relief or the tax liability? Tax liability. Tax liability equals to, how do we calculate, sir? Step 1 minus step 4. How much? 1 crore 88 lakh 15,625. So the other way to check it is like, I mean, just to have a cross check, the total of these two will be the tax liability. The total of these two. Why? Because, but why can't we do straight away these things now? First we should identify here there is marginal relief or not. If at all there is marginal relief, why this is correct now? Sir, this is the tax on 5 crores. The incremental revenue over 5 crores is how much? 3 lakhs. What I said in the explanation, the incremental tax also should be restricted to the incremental revenue. That's why 1 crore 85 lakh 15,625 plus this 3 lakhs if you add also, the same thing will come, but that is not correct procedurally. Sometimes you may go wrong also. Okay. Sir, understand here. If this answer comes negative, then there is no marginal relief. Okay, step 1 minus step 2 minus step 3, if it is negative, then there is no marginal relief. Only if it is positive, then there is marginal relief. Okay, let me write down there also. The first step itself, let me write down that one. If it is negative, no marginal relief. If it is negative, no marginal relief. If it is negative now, what does it saying? The incremental tax is only more than that of incremental revenue. When marginal relief will come into picture? When the incremental tax is more than that of incremental revenue. If it is negative now, it's going opposite. So that there is no question of marginal relief. So clear? Are you able to understand? Are you able to recall both the tax rates, right? Under normal regime, under default regime. Normal and default, okay, under default regime, under old regime. Default regime, up to 3 lakhs, 3 to 7 lakhs, 7 to 10 lakhs, 10 to 12 lakhs, and again 12 to 15 lakhs. Okay? 0, 5 percentage, 10 percentage, 15 percentage, 20 percentage, then straight away 30 percentage. Okay? There is no question about senior citizen or super senior citizen. Whereas under the normal old regime, up to 2.5 lakhs, nil. 2.5 to 5 lakhs, 5%. 5 lakhs to 10 lakhs, 20 percentage. Above 10 lakhs, 30 percentage. Okay? Surcharge rates are almost same, but there it ends with the 2 crores. Up to 2 crores, it is what? Nil. Up to, above 2 crores, under the default regime, 25 percentage. Whereas under the old regime, 2 to 5 crores, there is a next slab. 2 to 5 crores, 25 percentage. Above 5 crores, 37 percentage. Okay. So then I am discussing about the special tax rates, sir. Special tax rates. These special tax rates are not like just for only applicable for individuals. These special tax rates are applicable for individuals, HUF, AOP, companies, firms. For all of them, these such special tax rates are applicable. The special tax rates which we are going to discuss are not like slab rates. The slab rates we discussed are applicable only for individual, HUF, AOP, BOI, AJP. But slab rate, but these special rates are applicable to all the categories of persons. Special tax rates. And these special tax rates are same under both the regimes. These special tax rates are old regime or default. Then to all the class of persons. Applicable to all the class of persons. Capital gains. First we are starting with capital gains, sir. Capital gains. So we all know under capital gains, how many types are there, sir? Long term and short term. So long term capital gains, LTCG. And there is even short term capital gains, STCG. Long term capital gains and then short term capital gains, STCG. Under long term also there are two categories again. Under short term also there will be two categories. So under long term, sir, there are one is covered by 112A section, and this is like 112 section. And under short term also there are two sections, 111A and 111. What are covered under 112A? Under 112A, long-term capital gains arising from listed equity shares. Listed equity shares. What does it mean by listed equity shares, sir? The shares which are traded in the stock exchanges are called as listed equity shares. Then units of equity oriented mutual fund. Units of equity oriented mutual fund, EOMF. Units of equity oriented mutual fund. Sir, mutual fund means they'll pool money and invest in other companies. Okay, it's not just, sir, a mutual fund. Out of the money they pool, they can invest in debt instruments like debentures. They can invest in equity as well. But when we call it as equity oriented mutual fund means more than 65% of their investments are in equity shares only. Then it is called as what? Equity oriented mutual fund. Okay, let's say this fund has pooled 100 crores. Out of them, minimum of 65 crores should be invested in equity shares. Not much relevant, need not to write also. Even if you write afterwards, you'll forget. Don't need to write. So equity oriented mutual fund, percentage not required, but just remember, majorly they'll invest in equity shares. That is enough for us. Okay, units of equity oriented mutual fund. Then third one, units of business trust. Units of business trust. Sir, this also operates like a mutual fund. Okay, only as per the name only we'll find out difference. But as a layman, if you like open a demat account and you buy these units and all, you couldn't find any difference between this mutual fund and the business trust. The only difference is like this business trust will not invest directly into the companies. What they will do means this business trust will, let's say if it is a real estate investment trust, this trust will pool money. Okay, just like as mutual fund, it will also pool money. With the money pool, they'll develop certain real estate projects, some commercial complexes, shopping malls, or like all these, like if you look at the Gachipoli, all those buildings and all those majority of buildings are developed by these kind of real estate investment trusts only. Co-working spaces. One floor might be taken by Accenture. One floor might be taken by Deloitte. Okay, so these people will develop those projects and give on rent to those corporate companies. From them, they will be earning rental income. If you buy a unit in this particular trust, the trust will invest your money into developing a project. From the project, they will be getting rental incomes. That rental income share you will be getting. Okay, so these are the units of business trust. Listed equity shares, units of equity oriented fund, units of business trust. These three are covered under section 112A. Section 112A. On this, the tax rate is 10% and exemption 1 lakh. Tax rate 10%, exemption 1 lakh. This is still when, sir? First write down that one. Tax rate 10%, exemption 1 lakh. Whereas there is an amendment here, sir. from 23rd July 2024, this has been amended. I mean, if the sale or if the transfer has been happened from the date 23rd July 2024, on or after 23rd July, on or after 23rd July 2024, then the tax rate is, there is an increase in tax rate, 12.5 percentage, whereas the exemption is like 1.25 lakhs. Whereas the exemption is like 1.25 lakhs. $112, then others are covered under 112. Other long-term capital assets. So long-term capital gains. On what long-term capital gains will come? Long-term capital assets. On transfer of long-term capital assets, long-term capital gains will come. Other than these three long-term capital assets, listed equity shares, units of equity-oriented mutual fund, units of business trust, all the others are covered under 112. So what is the tax rate on these others? It used to be, sir, the tax rate 20%, indexation available. Indexation available. Indexation available. Tax rate used to be 20% and indexation is available. Whereas from 23rd July, whereas from on or after 23rd July 2024, on or after 23rd July 2024. Sir, again, understand, these points require much more detailed explanation also that we'll be discussing again in capital gains chapter. Okay, so don't worry or don't think like everything will understand here only. Just the rates we are understanding now. The detailed explanation, when indexation is available, when indexation is not available, what are the tax rates, how to compute, all those things we'll learn in the capital gains chapter only. On or after 23rd July 2024, then the tax rate is, one option is like 12.5%, indexation not available. Sir, here it is 10% only. First one make it as sorry, correct only. Okay. Again, there is another option also, sir. You can take 20% also, but then indexation is available. We'll understand on which assets it is. After 23rd July 2024, there are two options. Without indexation, 12.5%. With indexation, it is 20%. So majorly, sir, they'll not ask the situation before 23rd July. Probably they'll ask only after 23rd July only they'll ask. Okay. If at all, okay, the examiner that time has some psychic feelings and all, then he may test like, he may give both the instances like before 23rd July, one transaction after 23rd July. Okay. That's why So we don't have any other chancer. We need to by heart these things only. Understand, for the listed equity share, units of equity oriented fund or business trust, it used to be 10% till 23rd July. But from 23rd July, it has increased to how much? 12.5%. Whereas on others, previously it used to be 20% with indexation benefit. Whereas now, 12.5% without indexation. Majorly that is only 12.5% without indexation. This 20% benefit with indexation is available only with a limited scope. That also we'll discuss. Okay. So majorly you should remember this thing only. Okay. The major important one is like this particular one only most important. Okay. In future also this things only is going to continue most probably. Okay. First they introduced that particular rate only 12.5% without indexation. Then people started against the government. I mean, they are saying like, how could you suddenly drop indexation benefit and all? Because a person got a property from their great grandfathers and all. That time his grandfather bought for only 500 rupees. Now that property value is 5 crores. If there is no such indexation benefits and all, on straight away 5 crores you need to pay 12.5% as tax. And you have only that property. Okay, the only property you are having is that house. That house somehow, it was there in Hyderabad only, assume. Okay, from 60, 70 years, that property is there with your father, grandfather, like that only it's coming. Now suddenly they need to pay so much of taxes. Okay, that's why, I mean, if at all for any reason, like for their daughter marriage or for something else, if they sell property, 12.5% they need to pay tax, which is too high. That's why they again started giving what? Indexation benefit, but that is available only to individuals. Whereas to the normal persons and all, it is what? 12.5% only without indexation. Okay, all those we'll discuss detailedly in the capital gains chapter. Then short-term capital gains. 111A. The same assets will come, sir. 112A, what assets came? The same assets will come under the 111A also. What are those? Listed equity shares, units of equity oriented mutual fund. Third, units of business trust. Units of business trust. Listed equity shares, units of equity oriented mutual funds, units of business trust. It used to be 15%, sir. I'm not writing it more clearly. I hope you'll understand now. It was changed to 20%. Which date and all you can easily understand. Which date? 23rd July. It used to be 15%, but now changed to what rate? 20%. Listed equity shares, units of equity oriented mutual fund, units of business trust. Whereas on others, normal tax rates. Normal tax rates, whichever the method you choose. If you choose default regime, then the default rates applicable. If you choose the old method, old regime, then old rates only applicable. Others, normal rates. So usually, sir, when we call special rate incomes, we'll think like a whole capital gains as special rate incomes. But only out of capital gains, there are 4 different types of incomes. 3 are only special rate incomes. The fourth one is not a special rate income. It is taxable just like a salary or business income only. If it is short-term capital gains arising from other than listed equity shares, units of business trust, or units of equity-oriented mutual fund. Understand? Hello? Okay. Then the other special rate income, sir, that also will complete here. Casual incomes. Casual income. What is called casual income, sir? Casual incomes under section 115 BB. Casual. Lottery, betting, gambling. Why they are called as casual? Because you will not put much effort towards them. Okay, they'll come. Okay, there is no effort needed. If randomly also those amounts are going to come. That's why they are called as casual incomes. 115 BB. The tax rate is like flat 30%, taxable at 30%. Taxable at 30%. Then net winnings from online games, because these days the bettings, gamblings, everything are online, so that way net winnings from online game. So don't ask about cricket bettings and all. These people used to promote us, are YouTubers. So from those apps, if I get revenue, that is taxable here. Those are illegal, sir. Cricket betting is illegal. Okay. So, but there are, if at all you get winnings from Dream 11, then it is legal. Okay, Dream Level is different. The other cricket bettings are different. Okay, net winnings from online game under section 115 BBJ. Taxable again at flat 30%. Then undisclosed income under section 115 BBE. Undisclosed income. Undisclosed income, sir. We'll be learning that concept undisclosed income also towards the end of the chapter. So for you now to understand, let's say what is called undisclosed income means, in a particular financial year, in your account there is some 1 crore credits. 1 crore amount has been credited into your bank account. Assessing officer sent you a notice. You said like 1 crore is, so okay, something you got randomly, or else like you give some explanation, or if you didn't give any explanation, you are not explaining properly how you got that 1 crore rupees. If you don't explain the source for that 1 crore rupees, or the explanation is not satisfactory to the assessing officer, he'll call that 1 crore as undisclosed source of income only. Or else, in the current financial year, you purchased a land for 3 crores. Then again, they'll come and ask you the source. If you could explain the source, fine. If you cannot explain the source, nor the explanation is not satisfactory, again, that 3 crores is what? Undisclosed source of income. And then they came for some search operations to your home. And during the search, they found cash, gold, and other some jewelry, such things and all they found. Again, they'll ask, what is the source? If you could explain the source, then no problem. If you cannot explain, nor the explanation is not satisfactory, again, undisclosed source of income. 3 things. 4th one, sir, unexplained expenditure. Unexplained expenditure, na, let's say, or Bardo has a grand wedding. In movies and all we see, not movies, in news and all sometimes we'll see. Like they have spent crores of money for weddings and all, like for everyone who came to marriage, they might have given some gold rings as gift, like those things and all. So something they have spent 50 crores on marriage. Then immediately department people will come, have put there, and then again they'll give notice asking what? For this 50 crores, what is the source? If you provide source, fine. If you cannot provide source nor the explanation, again it is also called as what? Undisclosed source of income. Lastly, sir, 5th one, you are having some undisclosed, you are having 50 crores with you. They are asking you how you got this 50 crores. You are showing them a promissory note. You are showing them a promissory note stating like, I have taken this 50 crores from my friend yesterday only. See, this is the promissory note. But still, they'll go to that person and I'll ask him. If that person cannot explain the source of that 50 crores, again it is undisclosed source of income to you only, because that 50 crores is found with you. That's why you are treated as what? Having undisclosed source of income. So what is the tax rate on undisclosed income? Tax 60% plus surcharge at 25% plus cess at 4%. Sir, the undisclosed income is only 30 lakhs, sir. Then also surcharge is applicable. Yes, irrespective of how much is the undisclosed income, surcharge is mandatory here. Tax 60%, surcharge 25%, cess at 4%. Effectively, the tax rate will come to 78%. Undisclosed income. Then fifth one, transfer of virtual digital assets. Transfer of virtual digital assets. What are these virtual digital assets? Now, these assets will be there only virtually. You cannot find them physically. Example, bitcoins. Transfer of virtual digital assets under section 115 BBH, again taxable at flat rate 30%. Transfer of virtual digital assets. Virtual digital assets, nothing but take the example of bitcoins. In the lockdown trend, so many people used to purchase bitcoins. Some people lost money. And then, if at all, they hold, even in the recent US elections, that time also, if they hold bitcoins, then again they have got so much of earnings. No. Surcharge will levy on tax, right? So 60% plus, okay. Tax 60%. Surcharge will be levying on tax. Cess will be levying on tax plus surcharge. Okay, like that. So 60% plus 25%. I mean 60 on 60 you should apply 25%. Then it is 15. So 60 plus 15, 75. On the total 75 again apply 4%, which will come to 3%. So that's why it is 78%. Okay. So these are the special rates. Now, all these rates are no other option for us. What we should do? Except by hearting, there is no other route also. Okay. Okay. If at all there is something like directly inserting a chip, those things and all will not work. Okay. All these things actually should have landed interlevel only. Okay, but you didn't land there. At least now what you should do? Land. These people not even coming to classes properly. Sir, we'll discuss the concept of rebate, sir, now. Then we could close the session for today. Rebate under section 87A. Rebate under 87A. So DT, I'm again from the beginning I'm saying do cumulative revisions. Cumulative revisions, like till the first 3-4 chapters are going to complete, every day you should revise. And then that also what? Not only today's class you should revise. From the beginning of the class, you should start, keep on revising. After 10 days, you might think like, sir, if you need to revise so many pages, now it will take more time now. No, it will not happen like that. First page, if you open itself, you will remember what is there in first page. Then second page, third page, so immediately it gets strike to you. So it will take only 5-10 minutes only to revise the entire chapter also. Do such kind of cumulative revisions, at least, okay, then only you could recall the provisions exactly. Okay, if you come and ask us something like in mid-November, you'll get tension. Sir, I didn't cover anything in DT, what should I do now? What should you do now? There is no chip installation and all, or direct Bluetooth transfer, share it, all these don't work for us. Okay, so that's why the only option available is like from now on, keep on revising it as many times as possible. One student will come and say like, sir, I have revised 10 times, but still I didn't remember. Then do 20 times. Okay, then do 20 times, then you will remember. Okay, that's the only way we could remember. There is no other alternate way. So that fellow remembered, sir. That fellow remembered na, without telling you, he might have revised more number of times. That's the only thing. Okay. Rebate under section 87A, resident individual. So rebate is applicable only to whom? Resident individual. Other than resident individual, others will not get the rebate. Again, under old regime, sorry, first this side we are writing new regime. Under new regime, since he is individual, now two regimes are there. Under new regime, under old regime. New regime is also called as what, sir? Default regime. Okay. Under new regime, two branches, sir. Total income less than or equal to 7 lakhs. Here total income greater than 7 lakhs. Total income less than 7 lakhs, less than or equal to 7 lakhs. Then the next one is like total income greater than 7 lakhs. If the total income is less than 7 lakhs, less than or equal to 7 lakhs, then the rebate is 25,000 or tax payable. $25,000 or tax payable, whichever is less. 25,000 or tax payable, whichever is less. Sir, understand again, if you remember the format, without cess, this tax payable, because surcharge and rebate will come at the same step. After adjusting rebate only, we will go for cess. So this tax payable is what? Without cess. So the order is like, first total, on total income, tax. On tax, surcharge. Surcharge and rebate will not come at the same time. Okay, either surcharge will come or rebate will come. So after surcharge and rebate step, then the third step is what? Cess one. Okay, that's why here 25,000 are tax payable. So this tax payable without cess. Sir, previously it used to be only 25,000 are tax payable. But under the default regime, I mean the new regime, they made one more amendment here and implemented something like marginal relief here also. Something like the same concept like marginal relief only implemented when the total income is more than 7 lakhs with respect to rebate. Understand? Where the total income is greater than 7 lakhs, then you should calculate the stepwise, sir, it is little complicated, something like marginal relief only. First, step 1. Total income minus 7 lakhs. You should compute total income minus 7 lakhs. Step 2, you should compute tax on total income. So straight away, first step itself, we are finding out the difference. If at all it's like marginal relief, this step 1 which we have taken is what? The difference between the given total income and the nearest surcharge limit. Here what we are doing, we are finding out the difference between the given total income and 7 lakhs. Okay, then we are finding out what? Step 2, we are calculating the tax on given total income. Step 3, or else straight away, if step 2 is greater than step 1, we'll do an example also, sir, don't worry. If step 2 is greater than step 1, then step 2 minus step 1 equals to rebate. If step 2 is greater than step 1, then step 2 minus step 1 is the rebate. Sir, understand? A person is having 7,20,000 as income. A person is having how much? 7,20,000 as income. Will he get rebate or not? Normally, if at all, okay, forget about this particular provision. Only if you look at this provision alone, if he has only, say, if he has 7,20,000 income, then he become ineligible for rebate. Okay, now see. Total income is 7,20,000. Then, sir, assume the default regime only we are calculating. First, calculate the tax. Okay, I'm calculating both the cases. Total income 7,20,000 I taken, and then total income I'll take 7 lakhs also. Just like as previous explanation, sir, there are two people. Assume one as Raju, other one as Bhargav. One is having total income of 7 lakh. The other one is having total income of how much? 7,20,000. If total income is 7,20,000, what is the tax? 3 to 7 lakhs, 5%. How much? 4 lakhs into 5%, 20,000. Plus this 20,000 into 10%. So total tax will be how much here? 22,000. Here the tax is how much, sir? 20,000. But okay, if at all this second adjustment is not there, then what happens here? Here rebate is available. What is the rebate here? Rebate under section 87A, 20,000, 25,000 or tax payable, whichever is lower na. So you'll be getting how much as the rebate, sir? 20,000 rebate you will be getting. So on subtracting, the tax liability is 0. Whereas here there is no rebate available. Yes, now because of this marginal relief concept, rebate is coming. But if at all there is no such marginal relief concept here, there is no rebate available before amendment. So since no rebate available, okay, don't copy this, sir. Okay, since no rebate available, he is ending up with paying how much tax, sir? 22,000. That means he is earning how much extra income? 20,000. But for that, he is paying how much extra? 22,000 extra is paying. That's why they wanted to give rebate. They wanted to give rebate. So in this case, what is the rebate, sir? First, what we are doing? Total income minus 7 lakhs. What is the total income? 7,20,000. From there, if you subtract 7 lakhs, what is the answer here, sir? 20,000. Then compute tax on total income. What is the tax on total income, sir? 22,000. 22,000. So then what we have to check? If step 2 is greater than step 1. If step 2 is greater than step 1. Yes, step 2 only greater than step 1. 22,000 is more than 20,000. Then what is the rebate available in this case? Step 2 minus step 1. That is 2,000 is the rebate available. 2,000 is the rebate available. Okay. Just again, the incremental income should not be more than incremental tax. There surcharge is the factor which is impacting. Here which is impacting? Rebate. That's why an additional rebate has been introduced, sir. This concept is not there in old regime. If at all such loss is there in old regime, there is no counter rebate happening in old regime. Only in new regime, that also from the last previous year, not the immediate amendments. This is there from June 2024 exams only. Okay, from that time this amendment has been introduced. Even your income exceeds 7 lakhs, still you are eligible to get rebate. What is the rebate amount? The rebate amount is like the difference between the 7 lakhs and your total income and the tax liability. Okay, such difference amount. Here 2,000 is only the rebate available. Nothing but the incremental income is the incremental tax is restricted to that of incremental income. That's the logic here. Okay. So here in this case, rebate available. So what is the rebate available, sir, here? Calculate above steps. On doing above steps, we'll get how much as rebate, sir? 2,000. Then the tax payability is how much? 20,000. Okay. Under old regime, sir, it is simple only. Not there is no such concept of this additional rebate under. Okay. Total income should be less than or equal to 5 lakhs. Total income should be what? Less than or equal to 5 lakhs. Then the rebate is 12,500 or tax payable lower. $12,500 or tax payable, whichever is lower. Okay. So please revise all these things and come, sir. So once if you revise this capital gains tax rates also, we'll do 1 or 2 examples tomorrow, including the capital gains income, the special rate incomes, and then we'll try to calculate the tax calculation and all. Okay, just for practice. If you cannot recall the tax rates immediately, then it's of no use we doing such examples. Hi all, good morning, good afternoon. See, yesterday we have discussed the slab rates, surcharge rates, and even the special rates. So 2 minutes, we'll have a quick recap of what we have discussed yesterday. See, I hope you all remember the slab rates under 115 BSE, I mean the new regime. 0 to 3 lakhs, nil for individual HUF, AOP, BOI and AJP. 3 to 7 lakhs, 5%. 7 to 10 lakhs, 10%. 10 to 12 lakhs, 15%. 12 to 15 lakhs, 20%. In excess of 10 lakhs, 30%. In excess of 15 lakhs, 30%. So now, exactly at 10 lakh, exactly at 15 lakhs, what is the tax liability? 1,40,000. Then we have discussed surcharge rates there also. So surcharge rates up to 50 lakhs, total income up to 50 lakhs, nil. Surcharge has to be levied on income tax. Okay, 50 lakhs to 1 crore. 1 crore to 2 crores. Above 2 crores. 25%. Then we'll come to the old regime. Under old regime, individual HUF, AOP, BOI and AJB, assuming individual is not a senior citizen or super senior citizen who is being resident. Okay. So then what are the slab rates? Up to 2.5 lakhs. 2.5 to 5 lakhs. 5 to 10 lakhs. 20%. In excess of 10 lakhs. 30%. Now exactly on 10 lakhs, what would be the tax liability? 1,12,500. Then for senior citizens. For senior citizens, up to 3 lakhs, nil. 3 lakhs to 5 lakhs, 5%. 5 lakhs to 10 lakhs, 20%. In excess of 10 lakhs, 30%. Then super senior citizens, up to 5 lakhs, nil. 5 lakhs to 10 lakhs, 20%. In excess of 10 lakhs, 30%. Exactly at 10 lakhs, it would be 1 lakh. Okay. Then surcharge rates applicable to individual HUF, AOP, BOI and all. Sir, for senior citizens, I said like to get that additional basic exemption limits, they should be residents and the age should be checked on 1st April of assessment year. Surcharge rates applicable in case of individual HUF, AOP, BOI under the old regime. What are the surcharge rates? Up to 50 lakhs, nil. 50 lakhs to 1 crore, 10%. 1 crore to 2 crores, 2 to 5 crores, 25%. Above 5 crores, 37%. Okay. Then we have discussed about marginal relief also. Are you able to remember marginal relief, sir? How do we compute marginal relief? Very simple. Let me tell you. Let me again to get it clear. In the question, first we need to check whether the total income is nearer to that of surcharge limits. Nearer na, somewhat like take it as like some 10% difference. 1 crore up to 1 crore 10 lakhs na, then it is nearer. 1 crore 20 lakhs, 1 crore 30 lakhs, all those cases we need not to check. When it is nearer to surcharge limits, then take the total income and calculate tax plus surcharge. Don't include cess, only tax and surcharge. Then step 2, we'll identify the nearest surcharge limit. If the total income is 2 crore 1 lakh, then what is the nearest surcharge limit? 2 crores. If it is 51 lakhs, 50. If it is 1 crore 3 lakhs, 1 crore. So on that nearest surcharge limit also we'll calculate what? Tax plus surcharge applicable. Then third step we'll do what? The difference between the given or the question related total income or and the nearest surcharge limit. Between them the difference will be identifying. So we got step 1, step 2, step 3. Now marginal relief is 1 minus 2 minus 3. Then you will get the marginal relief. But the question is not at all over by just calculating the marginal relief. Our ultimate objective is to find out the tax liability. Tax liability, how do we calculate? From the step 1 tax liability, reduce marginal relief, you will get the tax liability excluding cess. Excluding cess. On that again we should levy what? Cess at a rate of 4%. Then we have discussed about rebate. Sir, when rebate is applicable, to whom rebate is applicable? Only to a resident individual rebate is applicable. Okay. Under new regime, under old regime. Old regime very simple, sir. 12,500 or tax payable, whichever is lower is the rebate. It is applicable only when the total income na gross or net? Net total income is less than or equal to 5 lakhs. Then under the new regime or the default regime, it is applicable when the total income is up to 7 lakhs. When the total income is up to 7 lakhs. Up to 7 lakhs now, what is the rebate applicable, sir? 25,000 or tax payable, whichever is lower. 25,000 or tax payable, whichever is lower. But there is a new amendment, sir, in Finance Act 2023 that was brought, not 2024 Finance Act. And 1 year back, it was introduced. So what? Even on this total income, I mean, even on this rebate also, something kind of marginal relief concept has been came. So how do we solve that? First, we'll find out the difference between the given total income and 7 lakhs. Then step 2, we'll find out the tax liability on given total income. Then we'll check whether step 2 is greater than step 1. I mean, the incremental tax is greater than incremental income. That we'll check. If incremental tax is only more, then we'll find out the difference between them. That would be given as rebate. That would be given as rebate. So let us solve with an example, then we'll go to the other topics. Compute tax liability of Mr. Dinesh, 20 years, as the following incomes. Under both the regimes. Under both the regimes. Income from house property computed ₹3 lakhs. Income from house property computed 3 lakhs. Then PGBP income. Again, that also take it as like what? Assume as like what? Computed only. Then long-term capital gain under 112A after 23rd July 2024 only. 2 lakhs. After 23rd July 2024 only. 2 lakhs. Short-term capital gains under 111A. This is also will take it as like after 23rd July 2024 only. 1 lakh. Lottery income 75,000. Net of, sorry, 1 second, sir. Lottery income will take as only 70,000. This is net of TDS. Because when they are paying lottery, usually they'll deduct TDS. So the amount we got is what? Net amount. Okay, so on this we'll be calculating the tax liability. So first of all, this net amount lottery income, we should make it what? We should take the gross amount. So on lottery, the TDS rate is 30%. So this 70,000 we received is only how much? 70%. So we should make it to the 100% and then we shall calculate the tax liabilities. Okay, so we'll do together, sir. So first I am doing under the new regime or the default regime. Computation of tax under default regime. Computation of tax under default regime. Income from house property. Sir, need not to write everything fully also. So we could write a shortcut also. 3 lakhs. Then they given what? PGBP. How much, sir? 2 lakhs. Then we got long-term capital gain under 112A, short-term capital gain under 111A. How much these amounts are like? 2 lakhs. Sir, I am not taking 2 lakhs here. What I am doing now, under long-term capital gain under 112A, under new regime, there is an exemption, sir. New regime or old regime, there is an exemption. What is the exemption, sir? 1,25,000 is exempted. So that's why I am taking what? Straight away only 75,000 only I am taking. Then short-term capital gain under 111A. How much, sir? 1 lakh. Then lottery income. How much lottery income? 1 lakh. So now we'll be doing what? Gross total income. How much is the gross total income, sir, here? 5 lakh, 75, 6 lakh, 7 lakh. 7,75,000. There are no chapter 6A deductions given. Okay, so gross itself is what? So chapter 6A, I'm writing here if anything is there, but here nothing is there. So we'll got what? Net total income also 7,75,000. Now, while computing tax here, we have special rate incomes as well as normal rate incomes. So first we should compute tax only on normal rate incomes excluding special rate. Okay, excluding special rate. Now you should subtract what? 2,75,000. So I'm writing here tax on normal incomes. How much it is like? 5 lakhs. On 5 lakhs, what would be the tax liability, sir? 5 lakhs only, na? Yes, 5 lakhs only. 3 and 2 only the normal rate taxable incomes. 5 lakhs. Sir, we are under which regime? New regime. So 0 to 3 lakhs, nil. 3 to 7 lakhs, 5%. How much is there in between 3 to 7 lakhs? 2 lakhs is there. So what is the tax liability here? 2 lakhs into 5%. 10,000 is the tax liability here. Tax on normal incomes. Then we should calculate tax on 112A income. Sir, on 112A income, how much, sir? 75,000 into what is the tax rate? 12.5%. So how much? 75,000 into 12.5% means 9,375. Okay. Then tax on 111A income. So what is the tax on 111A incomes? 20%. So it is how much? 1 lakh into 20%. How much? 20,000. Then lottery income. Okay, 1 lakh into 30%. How much it is like? 30,000. So what is the tax liabilities are here? 69,000. 69,375. Plus on this we need to add what? HEC. Cess at a rate of 4%. How much? 2,775. What is the total? 72,150. Okay. Sir, for now it is done, but actually what we should do means this 72,150 will not pay. Already 30,000 TDS deducted na, so we'll adjust 30,000 and then effectively how much will pay? 42,150 only will be paying. Okay, if any TDS, TCS, advance tax are there, that will be adjusting. So, okay, I don't have any. The page is going to end. Even if I write in the next page, it won't be good. You write there. Okay, under this tax payable, next column write down minus TDS, TCS or advance tax. This is the tax liability. Minus what you should do? You should do the TDS 30,000. TDS, TCS, advance tax. Then the effective tax liability how much? 42,150. Now the same one, sir. Quickly solve it from the tax only, because the total income remains same under the both the regimes. Total income remains same. So calculate tax under the normal regime, or sorry, under the old regime as well, because we already calculated in the default regime. Calculate the tax liability even in the old regime as well quickly. Only the tax, because net total income remains same. So what is the tax on normal income? 12,500. Okay. Tax under the old regime. Net total income remains same. How much is the net total income? 7,75,000. So first we'll be calculating tax on normal incomes. 5 lakhs. So what is the tax, sir? 12,500. Except this, nothing will change. Okay, so it would be how much, sir? Here 112A income, 111A income, and then lottery. On 111A income, what is the tax liability, sir? 10,000. Sorry, 112A how much, sir? 112A related 9,375. Then 111A 20,000. Lottery 30,000. 71,875 plus HEC at a rate of 4 percentage. How much? 2,875. So the total tax liability is how much? 74,750. Okay, minus TDS, TCS, advance tax. How much we are having, sir? TDS, TCS and advance tax we are having 30,000. So if you subtract 30,000, then the liability is how much? 44,750. 44,750 is the tax payable. Tax liability is different, tax payable is different. Sir, even in this case also we can understand like default regime is far better. Because 0 to 3 lakhs we are having 50,000 extra basic exemption limit, and 3 to 7 lakhs it is only 5%, and under the old regime 30% slab starts only from 10 lakhs only, but here it starts from where? 15 lakhs. So in any way default regime seems to be better. Okay, so then why they need to give about, or why there should be a old regime actually? Everybody, if new regime is clear cutly it is better, then why they should continue the old regime completely? They can scrap it, right? So there are other points which we need to consider. It's not just purely on tax computation. Okay, total incomes itself will not be same in the old regime and the new regime. Here in our case the total incomes are same. That's why we feel like which is better? New regime is better. But if but under the new regime or the default regime, we will be not able to claim certain deductions, certain exemptions and all. So the total income under new regime will be comparatively higher than compared to the old regime. Okay, that's why it differs case to case. In some cases it would be better in the new regime, in some cases it would be better in the old regime. Okay, we'll discuss all those also, but before that first we'll go to the we have completed, sir, now individual related tax calculation we have did, surcharge calculation we have did, special tax rates we have understood, rebate we have understood. So now we can go into the companies related. Okay, well now we'll write down about the companies related. Tax rate applicable to companies. Assessment year 25-26. So for companies there will not be slab rates and all, the tax rates would be what? Flat. So I'm taking 3 columns, sir. Particulars, tax rate, and even we can take together the surcharge as well. First ones are normal regime. That also domestic companies. For foreign companies anyhow there is no differentiation, sir. Normal regime and default regime, all those will not there. Only for the companies there is such option. Normal regime, and the company we are discussing is about what? Domestic company. Domestic company means what? The company which is incorporated in India. Turnover in previous year 23-24, turnover in previous year 23-24 is less than or equal to 400 crores. Sorry, one correction, sir, correct it. Previous year 22-23 is less than or equal to 400 crores. It's not 22-23-24, previous year 22-23. If the turnover in previous year 22-23 is less than or equal to 400 crores, then the tax rate is 25%. Then the tax rate is how much? 25%. Then let me write down the other case also. Turnover in previous year 22-23 greater than 400 crores, then the tax rate is 30%. So for domestic companies under the normal regime, there are two options. Sir, normal regime only default for companies. Understand? Okay. Only for individual HUF, AOP, BOI and all, the previous normal one has become now optional. The new regime has become the default one. But for companies, this is the old regime only. What we have discussed is nothing but old regime only. That itself is the default regime for companies. Okay. So this itself is the default. So turnover in previous year 22-23 is less than or equal to 400 crores. The tax rate is how much? 25%. Why the tax rate has been cut down to 25% also? There's a lot of background behind it, sir. Understand? Simply I'll tell. See, say in any developed country, the income tax would be less or nominal, or there will not be even income tax at all. Okay. Why the point is like, sir, usually direct taxes will, when a person is paying direct taxes, he knows the pain. So when a person knows the pain, it would be working against the, he'll have something negative towards the negative mindset towards the government because he's paying so much of taxes. Okay. That's why if at all the government has enough money and they want to cut down one tax, they'll be cutting down income tax only, not indirect taxes. Why not indirect taxes? Because in indirect taxes, the pinch is not known to the customer. It's okay. The same person, sir, he bought a 30 lakhs worth car. There also 10 lakhs went for tax only. GST, compensation charges, all those things will go. 10 lakhs went for tax only. But still he will not feel the pain. But the same 30 lakhs, but the same person, if he has 30 lakhs salary and out of that 10 lakhs has been taken as tax, then he feels the pain more. So that's why, if at all it is a developed country, then they don't need much funds. Developed country already the people's per capita income is more. So they need not to give these free schemes and all. Need not to give the housing related loans and all. Need not to provide the food facilities and all. Okay. And developed country means already infrastructure is there. They already laid roads. They already laid airports, constructed airports, ports. Everything is already built. So they need less money. That's why they don't want much taxes. So they'll cut down income taxes slowly as a move to reduce our income taxes also, as a step to counterbalance our tax rates with all the developed countries. Okay. It's not like we are just aligned with other countries, but as a step, okay, to align with the developed countries' tax rates, they have started to reduce the tax rates, direct tax rates. And the first step is like for small companies, they want to reduce the tax rate to 25% from 30%. Initially, this 400 crores, they kept as 25 crores. For the companies within 25 crores, there used to be 25%, then 50 crores, then 200 crores, then they have now made it to 400 crores. The scope is being extended, okay, slowly. Because at a time, if they bring our revenue will get affected and the government cannot be run. That's why, okay. So now coming to the surcharge, sir, total income, okay, under both the cases, sir, total income less than 1 crore or equal to 1 crore, nil. When it is between 1 crore to 10 crores, 7%. Greater than 10 crores, then 12%. Up to 1 crore, nil. 1 crore to 10 crores, 7%. Greater than 10 crores, then it is 12%. Again, here also, if surcharge comes, marginal relief will come. Okay, we'll do the example afterwards, but let me finish off the optional regimes also. Now, optional. Section 115 BBA. Section 115 sorry 115 BBA, not 115 BA. Section 115 BA. Then the second one is like section 115 BAB, BAA. And the third one is like section 115 BAB. Like this we are having 3 rates, sir. But all these 3 we'll discuss afterwards as well. Okay, so this is a domestic company. 115 BA, sir. Domestic company which is into manufacturing. Domestic company which is into manufacturing. Then 115 BAA, any domestic company. Any domestic company. 115 BA is for domestic company which is into manufacturing. 115 BAA is for any type of domestic company. Let's say BCCA is floated as a company. Okay, can it opt under 115 BA? No, because it's not into manufacturing, it's into service sector. So it can come under only 115 BAA only. Then 115 BAB, sir, again domestic company which is into manufacturing. So now you'll have usually a doubt, when there is already 115 BA, then what is the purpose of having 115 BAB? 115 BAB is much more advanced one, sir. Okay, for the newly formed manufacturing companies. Okay, so newly formed manufacturing companies in the last 4 years till 31st March 2024, from 2019 to 2024, in this 5 years period the company might have been started and it is into manufacturing, then it can opt under the 115 BAB. Okay, so your company started somewhere in 2004, you cannot come under 115 BAB, you will be under the where 115 B only. You started recently 1 month back only, then also you will be under 115 BA only. Okay, so 115 BA, 115 BAA, 115 BAB. So what are the tax rates are here? The tax rate under the first one, 115 BA, is like 25%. 25%. Whereas here it is like 115 BAA, it is like 22%. Then the third one is like 15%. Under the first case, sir, 115 BA, the surcharge remains same. That means greater than 1 crore, 7%. Greater than 10 crores, then it is 12%. It remains same under 115 BA also. It remains same. Domestic company which is into manufacturing, the tax rate is 25%, and the surcharge rates like greater than 1 crore and up to 10 crores 7%, above 10 crores 12%. Then 115 BA for any domestic company, the tax rate is 22%, but whereas the surcharge rate is 10% fixed, irrespective of income. This 10% surcharge is fixed irrespective of income. How much ever the income they have, on the tax has to be levied at 22%, and surcharge also has to be levied at a rate of 10%. Whereas here also the surcharge rate is 10% fixed. Sir, in the first three cases, surcharge may come, may not come based on the total income. But in the last two cases, even though total income is only 20 lakhs, but still 10% surcharge is applicable. Even though total income is 5 crores, the surcharge is how much? Sorry, even though the total income is like above 10 crores, but still the surcharge is fixed to what? 10% only. Then for foreign companies, sir. Then for foreign company, the tax rate is 35%. Then for foreign company, the tax rate is 35%. And the surcharge rate, sir, greater than 1 crore, less than or equal to 10 crores. I mean 1 crore to 10 crores, the range. Then the surcharge rate is 2%. Then greater than 10 crores, then the surcharge rate is 5%. So now let me take an example, sir. We'll do marginal relief from company perspective as well. ABC Private Limited has the total income. ABC Private Limited has the total income of 1 crore 1,50,000. 1 crore 1,50,000. Its previous year turnover, previous year 22-23 turnover, previous year 22-23 turnover equals to 200 crores. ABC Private Limited has the total income of 1 crore 1,50,000, whereas the previous year 22-23 turnover equals to 200 crores. Compute tax liability. Compute tax liability. Under 115, sorry, under normal regime. Under normal regime. So again bracket I am keeping excluding cess for assessment year 25-26. Sir, you calculated, huh? So step 1, what we'll do, sir? Sir, here there is a chance of marginal relief. So we'll calculate what the step wise. Step 1, tax on 1 crore 1,50,000. Tax now, it including what? Tax plus surcharge. So on 1 crore 1,50,000, what is the tax rate, sir? 25%. 1 crore 1,50,000 into 25%. Plus what is the surcharge rate? 7%. How much? 27 lakh 15,125. Then step 2, sir. Tax on nearest surcharge limit. Now what is the nearest surcharge limit? 1 crore. So tax on 1 crore. How much, sir, it is? 1 crore. On 1 crore will there be surcharge? No. Above 1 crore only there is surcharge. So on 1 crore it would be 25 lakhs only. Then step 3. Step 3, what we should do, sir? The difference between total income 1 crore 1,50,000 minus 1 crore will do. The given total income and the nearest surcharge limit will do. How much, sir, it is? 1,50,000. Then step 4, we'll calculate what? Marginal relief. What is the marginal relief here? Marginal relief, step 1 minus step 2 minus step 3. How much it is? 65,125. Okay. Then we'll be calculating the final steps, are step 5, tax payable. The total tax liability. How much is the tax liability, sir? Step 1 minus step 4 if you do. How much, sir, it is? 26,50,000. 26,50,000. Sir, again understand the special rates are applicable even to companies. Special rates are applicable even to companies. If company has 112A income, then it is taxable at what rate? 12.5% only. 111A income taxable at 20% only. So the special rate incomes are applicable even for companies. For all the kinds of SSEs, those are applicable. Then we are now moving on to societies. Tax rates applicable to societies. Tax rates applicable to cooperative societies. Tax rates applicable to cooperative societies. So again, here also there are two regimes. There is normal regime and there is even an optional regime. So under normal regime, sir, so again 3 columns I am taking. Here it is like tax rate and then the last column is like surcharge rate. Tax rate will take and will take surcharge rate as well. Where the income is up to rupees 10,000. Where the income is up to 10,000, then the tax rate is 10%. Where it is like 10,000 greater than 10,000. Greater than 10,000 to 20,000. Greater than 10,000 to 20,000. The tax rate would be 20%. the tax rate would be 20%. Whereas if it is more than 20,000, then it is 30%. Up to 10,000, 10%, up to 20,000, 20%, up to 30,000, 30%. Sorry. Above 20,000, here it is like 30% only. The surcharge rates are the same as like almost like companies only. Okay. This, for all those three, like together only, the surcharge rate is like how much? Up to 1 crore. Nil. Greater than 1 crore, but less than or equal to 10 crore. It is like 7%. Greater than 10 crores, then the rate is like 12%. Greater than 10 crores, then the rate is like 12%. So then we'll be moving on to the D for optional regimes. Optional regime. Optional tax. Optional tax. So under optional tax, 115 BBD. Under optional tax, 115 BAD, not BBD, 115 BAD. Hundred 15 BAD, sir. Here it should be a resident cooperative society. Resident cooperative society other than that covered under 115 BAE. If it is covered under 115 BAE, then it is different. So here any cooperative society which is resident other than 115 BAE. Then the tax rate is, sir, here straight away the tax rate would be 22%. The tax rate would be 22%. And the surcharge rate is also 10% fixed. 22% and 10%. Then 115 BAE, that is for the cooperative societies which were into manufacturing. 115 BAE, cooperative societies which are into manufacturing. Cooperative societies which are into manufacturing. Plus two conditions, sir. Registered on or after 1st April 23. Registered on or after 1st April 2023. And business started, and their business should be started before 31st March 2024. That means effectively within that 1 year only, 23-24, they should have commenced that cooperative society, registered on or after 1st April 2023, but the business should have been commenced before 31st March 2024. Then in that case, the tax rate is only 15% on the surcharge rate at 10% fixed. Sir, under this 115 BAD, 115 BAE, I mean, the places where surcharge rate is fixed, there, including cess also will calculate a together rate. That also will write down. Okay. So, come back here, sir. See, here if you see 115 BAA, there, any domestic company, what is the tax rate? 22%. Surcharge rate is how much? 10%. So, now, we'll find out a cumulative rate as well here. 22%, on that again levy 10%, 2.2%. So total how much? 24.2%. Together again levy cess as well, 4%. So here how much? 25.168%. So this is a cumulative rate, including cess. Okay, sometimes they can ask directly MCQ and the option would be straight away 25.168. So you should not get confused again. So here why we are calculating like this? Because here surcharge rate is fixed anyhow. But whereas in the first cases, above cases, surcharge rate is not fixed. So we cannot conclude like this is only the rate. But whereas here surcharge is fixed, cess is fixed, tax rate is also fixed. So straight away we can take even 25.168% also. Next, second case, sir. Tax rate is how much? 15%. On the 10% na 1.5. Total 16.5. And again on 16.5, 4%. 17.16%. Then here for cooperative society also calculate, sir. 22% plus 10% plus 4%. 25.168%. 25.168%. And the next one is like 17.16%. %. Sir, we have discussed about now as of now individual, HUF, AOP, BOI, AJP, company. So the things pending are like only related to firm and local authority. So okay, there are nothing like firm and local authority. There is no default and optional. There is only one particular tax rates are applicable. So we'll finish off that also. Firm and local authority. Firm including LLP and local authority. Firm including LLP and local authority. Firm including LLP and local authority. So it's only flat rates, so there is no slab rates available. Tax rate equals to 30% flat. Again, surcharge rates. surcharge rates, like if they are like total income surcharge rate, total income up to 1 crore, nil, greater than 1 crore, 12 percentage. There is only one surcharge rate, sir. Greater than 1 crore, it is straight away 12 percentage. Greater than 10 crores also 12 percentage only. Okay, so now we have finished of the tax rate, sir. So tomorrow, sir, I'll take 2 hours class so that we'll completely finish off the first chapter. I mean, the topics to be discussed in the basics chapter are like some basic theory points like what is called average tax rate, what is called maximum marginal tax rate. Okay, those all are like 2 minutes concepts only. Then we need to discuss a theory part regarding undisclosed source of income. What I mean, those cash credits, unexplained investments, unexplained expenditures, that particular point. Then, very briefly, usually the previous year income will be assessed to tax in the assessment year. That's the general rule. But there are certain exceptions to the general rule. You learned in the inter level only. Non-resident shipping business, whereas AOP, POI formed for a purpose and the purpose has been accomplished. Okay, where you are going for employment outside India. So in those cases, the current year related income assessment will be carried out in the current year only. So okay, some basic discussion. That part, and mainly, sir, we need to complete 115 BAC related. PGBP anyhow will discuss again together. I mean, elaborately we'll discuss PGBP. It's okay, I'm not worried about PGBP then. But house property, salaries, these chapters we are not going to discuss again at the final level. But the problem is when they ask 115 BAC, they're asking a basic tax liability question, 7 marks question. There, these house property adjustments or salary adjustments will come. So we'll have a basic comparison. Okay, if you opt 115 BAC, under salaries, what exemptions you are not able to avail? Under house property, can you avail interest deduction or not? Can you avail standard deduction or not? So those basic points under house property, if you avail 115 BAC, what you are going to lose? If you are under normal regime, what you are going to get? So okay, those comparatives we should discuss. Okay, so for 115 BAC only, 1 hour it will take tomorrow. So the other 1 hour to complete all these topics. So anyhow, tomorrow Saturday, so we'll take 2 hours class. Then the first chapter we could have finished in this particular week. Okay. సార్ అక్యూములేట్ చేసుకోవద్దు ట్యాక్స్ని అయితే మాత్రం మీరు అక్యూములేట్ చేస్తున్న కొద్దీ భయం పెరిగిపోతుంది. ఏ రోజు ఆ రోజే మీకు ఏ రోజు ఆ రోజు వచ్చేసింది లేదా గుర్తుంది అని అంటే దెన్ ప్రశాంతంగా నిద్ర పడుతుంది 2 నెలలు అయిన తర్వాత నుంచి, లేదా అప్పుడు నిద్ర పట్టదు. రాత్రి 3 అవుతుంది 4 అవుతుంది, చదవరు నిద్రపోరు, 2 చేయరు. ఓకే, మీకు అనిపించవచ్చు ఈవినింగ్ సరే కన్నప్పలో ప్రభాస్ వస్తున్నాడంట, ప్రభాస్ వరకన్నా చూసొద్దాం వెళ్దాం అని అనిపించవచ్చు. అయినా కానీ ఏం చేయాలి, మీరు బుక్లు తీసుకుని వెళ్ళి ఫస్ట్ హాఫ్ అంతా అదే నేను వెళ్ళొద్దు అన్నట్ల ఫస్ట్ హాఫ్లో మాత్రం ప్రభాస్ వచ్చిన దగ్గర నుంచి బాగుంది.
హలో. ఈరోజు ఆ రోజు ఏ రోజు నా బర్త్డే కాదు, నా బర్త్డే ఎప్పుడో అయిపోయింది. ఆ, నా నా బర్త్డేలో ఈరోజు కూడా నా బర్త్డే. విష్ మీ బర్త్డే, హ్యాపీ బర్త్డే. మరి గిఫ్ట్ ఏది? ఇప్పుడు అడిగాగా. ఓకే, రేపు. సండే రోజు వద్దు, నేను సండే రాను. సాటర్డే తీసుకొచ్చి. ఆన్సరా? ఆన్సర్ 2,65,000. ఎవరు పెట్టారు? అదే. ఓకే, ప్రీ వెడ్డింగ్. ఎగరడం. అబ్బా, అమ్మ అమ్మ. ఏమో అది అంత అబ్జర్వ్ చేయాల. ఇదే మైక్ ఇస్తా, మైక్లో చెప్పు, ఆయన కూడా వస్తాడు. కాదు, ఏమైనా పైప్ గార్డెనింగ్ అక్కడంతా మొక్కలే ఉన్నాయి కదా, గార్డెనింగ్ చేసడానికి ఉంటుంది కదా. ఆ, కాదు ఆయన స్టిఫ్ ఉండిపోయి అసలు ఎగరడం, ఆయన అవ్వడం, అబ్బా 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 అబ్బా.
Hello all, good morning. So yesterday we have discussed about the tax rates applicable to companies. So if you look at the tax rates applicable to companies where the previous year 22-23 turnover is within 400 crores, then the tax rate is 25% under the normal regime. If it is more than 400 crores in previous year 22-23, then the tax rate is 30%. Such charge rates up to 1 crore, nil, 1 crore to 10 crores, 7%, above 10 crores, 12%. Then optional optional tax rates for companies. 115 BA, if it is a domestic company which is into manufacturing, then the tax rate is 25%. Such charge rates, the common thing, I mean, the same as like greater than 1 crore, 7%, greater than 10 crores, 12%. Then 115 BA, 115 BA is what? Any domestic company, the tax rate is 22%, whereas the surcharge rate is like 10%. Then 115 BAB, domestic company, tax rate is 15%, surcharge rate is again 10% fixed. Then foreign company, the tax rate is 35%. Then if you look at the cooperative societies, sir, normal regime up to 10,000, 10%, up to 20,000, I mean 10,000 to 20,000, 20%, greater than 20,000, 30%. The tax rates are like, surcharge rates are like same as like company. Then optional tax rates applicable even to cooperative societies. Under 115 BAD, it should be a resident cooperative society other than 115 BAE. Then the tax rate is 22% and the surcharge rate is like 10% fixed. Then 115 BAE, cooperative societies which is into manufacturing, and the manufacturing has been it has been registered on or after 1st April 2023 and the business started before 31st March 2024. Then the tax rate is like 15%, surcharge rate 10%. For firm, LLP and local authorities, the tax rate is flat 30%. Surcharge rates above 1 crore, it is 12%. Okay. So now we'll discuss some basic points in the theory, sir. Then we'll discuss about the deductions which are available under 115 BSc and not available under 115 BSc. So many comments came in. Kalyan, I don't understand why you are talking about some other faculty, Ashok sir here. I didn't understand that. So we'll be discussing, sir, first few basic points only. We know these things already, but just to have a clear understanding of the terminology. The first one is like maximum amount not chargeable to tax. Maximum amount not chargeable to tax. Maximum amount not chargeable to tax. This is nothing but called as the basic exemption limit also. Maximum amount not chargeable to tax. This we can even call it as like basic exemption limit. Maximum amount not chargeable to tax. This is the basic exemption limit. See, we have two regimes here. There is a old regime as well as a new regime. So that's why we'll take three columns are here. The particulars column will be there as it is, and the default or the new regime, whereas here the old regime. So first, the basic exemption limit. Sir, basic exemption limit comes only when there are slab rates. So that means to whom it is individual, HUF, AOP, BOI, and then AJP. Individual, HUF, AOP, BOI, AJP. Then the then the basic exemption limit under default regime is how much, sir? 3 lakhs. Because up to 3 lakhs, na? Whereas under old regime, it is 2,50,000. It is 2,50,000. Then in case of individual who is a resident and age greater than 60 or equal to 60 but less than 80. So these people we call as what? Senior citizens. For them, under the new regime, the basic exemption limit is 3 lakhs only. Okay, but whereas under the old regime, from 2,50,000 it increased to 3 lakhs. Then individual, again, resident, age greater than 80. In this case, under the new regime, default regime, the same 3 lakhs only. Whereas under the old regime, it is how much, sir? 5 lakhs. It is 5 lakhs. Whereas for firm, company, local authority, are there any maximum amount not chargeable to tax basic exemption limits? Nil. It could be any regime. For them it is what? Nil. So then, sir, how do we calculate tax, sir? First, we'll calculate tax. Then, after tax, we'll do what? We'll plus or minus surcharge. Surcharge, or there could be even rebate as well. Surcharge or rebate. Surcharge or rebate. Then as I already said, this surcharge has to be levied on what? Tax. And the third step is like we should levy HEC, Health and Education Cess. It is how much, sir? How much is the HEC? 4%. On what it has to be levied? 4% on tax plus surcharge. If it is rebate, na, tax minus rebate, whichever is applicable. %4 on tax plus surcharge or 4% on tax minus rebate. Then the next concept is about rounding off. The total income and the tax payable has to be rounded off. So let me explain you about rounding off. Rounding off under the section 288A and 288B. So what does it says? Either it is total income or tax payable. Total income or tax payable should be rounded off to nearest multiples of nearest multiples of rupees 1 or rupees 10. 10. Sir, in GST, remember it is rupee 1. Round off to nearest multiples of rupee 1. But whereas under income tax, you should round off to nearest multiples of rupees 10. Total income or tax payable should be rounded off to nearest multiples of rupees 10. It means, let's say I have 6,75,433. So post rounding off, how much it would be? 430 only. Nearest multiples, na? Understand, sir? 5 and above 5, you should round off to next 10. Below 5, na, then you should be rounding off to the before 10. So here it would be how much? 6,75,430. Then for you to have clarity, 6,75,435. You should round off to 440 only. 6,75,440. If it is 6,75,437, again 440 only. So less than or equal, less than 5, then round it off to the previous 10. If it is 5 or more than 5, na, then round it off to the next multiple of 10. Rounding off. Then the next concept is about average rate of tax. Average rate of tax. There is one chapters are called DTAA, where in every sum we'll be calculating average rate of tax. Okay? So average rate of tax. Sir, average rate of tax is nothing but tax payable. Tax payable. So how do we arrive this tax payable? Means this tax payable is the total, sir. Total, na, it includes like tax plus surcharge plus cess all together divided by total income. So total income, na, if nothing is mentioned, just total income means what? Net total income into 100. If you do, you will get the average rate of tax. Tax payable divided by total income into 100. Example, sir. We need to do quickly, sir, this example. A person has income from house property. Let us take it as like 7 lakhs. He has interest income 25 lakhs. Okay, such person is an individual. Individual, age 45. Individual, age 45. Income from house property 7 lakhs he is having. Interest income 25 lakhs he is having. Then he has long-term capital gain under section 111A, sorry, 112A. 112A, another 15 lakhs. Assuming everything after 23rd July 2024 only. After 23rd July 2024 only. He has dividend income. He has dividend income another 10 lakhs. He has dividend income another 10 lakhs. Okay, so if this is his income, what is his total income, sir? We could straight away do here also. Total income. There are no deductions, so straight away, sir, gross total income, net total income will be same. How much here? 57 lakhs. Sir, 57 lakhs means if you want to check, you can check, but there will not be marginal relief. Okay, because it is not much closer to the surcharge limit. Surcharge limit, if it is closer, surcharge limit is 50 lakhs. If it is closer to 50 lakhs now, I mean somewhere like 52, 53, there is a chance of marginal relief. It is 57 now, there is no question of marginal relief, so forget about marginal relief. Okay, and I am taking it, sir, since currently default rates are only applicable, I am taking what? Default rates only as main. So default rates only, sir. But before that, on what we need to calculate tax, sir? Long-term capital gain is a special rate income. We need to calculate tax on it separately. Okay, sir, this 15 lakhs is after exemption only. After exemption, under long-term capital gains, there is 1,25,000 exemption. So I am taking it after exemption, then that is after 23rd July 2024. So straight away this 15 lakhs is what? Taxable at a rate of 12.5%. So if you exclude this 15 lakhs, what is the other income? Other income is how much? 42 lakhs. Now for this 42 lakhs, we should calculate tax under slab rates. First 15 lakhs, 1,40,000, the balance amount. 27 lakhs into 30%. Don't do surcharge now only, sir. Only tax, how much? 9,15,000. 9,50,000 is the tax on other income. Whereas on long-term capital gain under 112A, sir, how much is the tax rate? 15 lakhs into 12.5%. How much? 1,87,500. So take a total of it. 11,37,500. Okay, this is the tax. But here what is applicable? Surcharge is applicable. What is the surcharge rate, sir? Surcharge at a rate of 10%. Individual above 50 lakhs. Surcharge at a rate of 10 lakhs is applicable. So how much is the surcharge? 1,13,750. So now we need to add what? HEC. HEC at 4% on what? Tax plus surcharge. 50. Okay. Okay, so what is the total now? 13 lakh 1,300. 13 lakh 1,300 is the tax payable or the tax liability. It's tax liability. 13 lakh 1,300. Now we need to find out what? Average tax rate. Simple. This 13 lakh 1,300 divided by 57 lakhs into 100. You will find out what? Average tax rate. Average tax rate equals to 13 lakh 1,300 divided by 57 lakhs into 100. How much? 8%. 22.8%. This is the average tax rate. Average tax rate. So then the next one is like, sir, maximum marginal rate. maximum marginal rate. So this maximum marginal rate we'll see in case of AOP, we'll see in case of TDS provisions. Usually under TDS provisions, they'll tell tax rate. Like 10% has to be deducted, 1% has to be deducted, 2% has to be deducted. But if the deductee, I mean to the amount, to whom the amount has to be paid, okay, such deductee is not given his PAN details. If he has not given his PAN details, then TDS has to be deducted at MMR, maximum marginal tax rate in some cases. Okay, so there. And in case of AOP also, if all the persons didn't provide PAN details and all, then the AOP will also be assessed sometimes with what rate? Maximum marginal rate. Okay, so when they are non-complying certain provisions, then they will be using maximum marginal rate. So how do we compute maximum marginal rate? Now take highest slab rate applicable. Take highest slab rate plus highest surcharge rate plus S. Take highest slab rate, on that what you should levy? Highest surcharge rate applicable and the cess. Sir, then it would be changing in both the regimes. New regime it will be different, old regime it would be different. Okay, so if you take new or default regime, what is the highest tax rate, sir, under the default regime? 30%. On that, what is the highest surcharge rate slab? 25% is only there. So plus 25%. Plus on this what we should do? 4%. So this 25% on tax plus this 4% on tax plus surcharge. So how much it would be? 30 on 30 you should levy 25%. And then again on the total you should levy 4%. How much? 39%. 39%. Whereas under the old regime, so what is the highest tax slab rate applicable, sir? 30%. Plus what is the 37% plus, sir, this 30 you should not add straight away 30 plus 25 plus 4. Okay, 25% on tax. Here also 37% on tax plus 4% on cess. 4% on tax plus surcharge. So together how much? 42.744%. 42.744%. So this is about what? The average rate of tax and maximum marginal rate. Then there is something called revenue receipts versus capital receipts. Revenue receipts versus capital receipts. Sir, you have a building. I mean nothing but in tax language we call it as like what? House property. On house property regularly you will get what? Regularly you will get rent. On house property you will regularly get rent. But on sale, you will get what? Capital gains. On sale also you might get some profit, which we call it as what? Capital gains. So the revenue which comes regularly or the income which comes regularly, the receipts which come regular basis are called as what? Revenue receipts. Okay. On sale of house, it is like one time only. Then that is called as what? Capital receipts. Revenue receipts are always taxable. Capital receipts sometimes taxable, sometimes they are. Mostly they are exempted, but only sometimes they are taxable. Okay. For example, let's say if you have taken a loan, revenue receipt or capital receipt? Capital receipt only. If you have taken a loan, okay, you will not take loan every day, right? So if you have taken a loan, capital receipt, so that is not taxable. Okay, but revenue receipts are usually taxable. Revenue receipts now like interest income, salary, rental income, dividend, okay, which comes regularly. Then those are called as regular receipts. Capital receipts now for us mostly we know about capital gains. Capital gains now it is taxable only. Okay, but it's not like always. Certain capital receipts might get exempted, and that also understands, sir, the whole receipt amount is not taxable. In case of capital receipt, let's say you sell the house for 5 crores. Not 5 crores is taxable. The gain you made alone is taxable. The gain you made alone is taxable. Whereas, okay, even in case of revenue receipts also, if it is a business, only the profit part is only taxable. But in case of salaries, okay, if you are an employee, from salary you cannot again reduce expenses. Okay, for getting job, I have studied this much. All these costs and all I need to set off. And then like you went to go to office properly or decently, you went for shopping, you bought a car, all these things you cannot take. Okay, there is a case law in actually PGBP, sir, related to one lawyer actually, he had a heart surgery. Okay, and then on that heart surgery, he has taken the expense to P&L. Okay, so then the income tax obviously disallowed it. How can you take heart as plant and machinery? Okay, he is saying like heart is my plant and machinery because for my profession, me only the asset. For me, my heart is the plant and machinery. So I'll claim expenses which were incurred for it repairs or something. So I'll be taking it to the P&L. Income tax is disallowing. Since he is a lawyer, he went till Supreme Court. Okay, then Supreme Court said like, maybe it's plant and machinery only, but it was not solely used for the purpose of business. Because it has other operations also, like it pumps blood. Okay, it has other activities also. It's not solely into business, that's why not allowed. And they cannot even divide also how much is for business and how much is not for business. So here, sir, this is what revenue receipts. Revenue receipts. So what are called revenue receipts, sir? Write down income and by way of utilizing the source of income. Income and by way of utilizing source of income. House property is a source of income, sir. By utilizing it, rent has been earned. Income and by way of utilizing source of income. Whereas capital gains or capital receipts, these are capital receipts. Income and by way of sale of source of income. Income and by way of sale of source of income. Capital receipts are mostly exempted. Capital receipts are mostly exempted. Whereas revenue receipts are always taxable. Revenue receipts always taxable. Then we'll talk about the basic general rule of taxability and then the exceptions to it. The general rule is simple, sir. Previous year income is assessable to tax in which year? Assessment year. Okay. The general rule is like previous year income assessable to tax in assessment year. Previous year income assessable to tax in assessment year. Previous year income assessable to tax in assessment year. But for this there are certain exceptions. There are exceptions. The first one is like non-resident shipping business. First one is like non-resident shipping business. Section 172. Non-resident shipping business. Sir, with respect to this shipping company, sir, whatever is the freight they earn for the passengers who are boarded from Indian port, okay, who are boarded, passengers, goods, livestock, whatever is boarded from Indian port, that freight is considered as income from income of India only. Understand, like Australia to India, a ship is moving. But when it comes to Indian port, certain passengers will will be boarding into that particular vessel. Goods will be loaded, livestock will be loaded. The freight earned from Indian ports is called as what? Indian income. That is taxable in India. But the problem is like this ship, once it goes away from India, we don't know when again it will come back. If they leave that, then there might not be a chance to tax that once. There might not be a chance to tax it again. Okay, they may tell that old avu pilgadu untadandi. Okay, cow and tiger story. So okay, a cow will go to forest, sir. Then there will be a tiger there which is waiting to hunt it. Then this cow will go and tell the tiger like, so there at house my child is waiting. I'll go there. I'll give milk to it, and then I'll come back for you. So you can then take me as lunch or dinner, whatever you want. Okay. It will tell the story to the tiger. Then tiger emotionally gets, okay, it cries, and then it understands the pain of that mother, and then it leaves. Okay, but that story does not work here. If the same shipping company also will come here and says like, okay, I'll go now. Afterwards in the assessment year, I'll come back. I'll pay taxes definitely and all. If income tax people listen to that story, na. There is one particular movie where Venu Madhav will tell that story. Okay, cancer and cheppesa, bata. Okay, so like that it will happen. Okay, so that's why income tax don't want to take that chance and all. That's why since you came now, na, pay tax and go. We'll assess your income also now. But the problem is, can they do the P&L now? Sir, shipping business, na, they are into business. When they do P&L, balance sheet, all those things, after the year end only. So how do we calculate their profit? They cannot calculate their profit. That's why they said like, okay, find out your Indian freights total from Indian ports, whatever the freight you earn, take it. From there, 7.5% multiply. That will take it as deemed income. On that calculate tax. That you assess now itself, the tax also, and pay, then you can leave. Okay. So non-resident shipping businesses, section 172. So how's our year? Write down, sir, in bracket. Summary only will write 7.5% of freight. %5 of freight from Indian port. 7.5% of freight from Indian ports is treated as deemed income. So this is not tax, deemed income. On this income again they will be calculating tax. 7.5% of freight from Indian ports is treated as deemed income. Then second one, sir, persons leaving India. For employment, persons leaving India for employment outside India. Sir, here employment na, it doesn't mean literally employment, any work. Here employment means not just you working under someone, under the profession you can go, or as a business person you can go. Person leaving India for employment outside India. And then AO believes, AO na, sir, what does it mean by AO? AO means assessing officer. AO believes person has no intention to come back. Person has no intention to come back. So you are leaving India. Sir, how AO will know that that person is not having intention to come back and all? Will he tell? What he will tell if income tax officer asks also? No sir, I am going for a short visit only. 3 months I'll again coming back to India only, he'll say. Will he listen to all those stories and all? No. How could he determine that he is not coming back? Based on visa. For how much duration or what type of visa is given? Is it a work visa or a tourist visa? What kind of visa it is? How long the visa is there? So based on that he can conclude himself like whether he has an intention to come back or want to permanently stay there only. So based on that, okay, they'll decide. Once they decide that he is not going to come back, then the assessment will be carried in the same year itself. Otherwise, next year, assessment year, if they do assessment and send a notice also, he'll simply say like, I don't pay, do whatever you want. Sir, you watch Lucky Bhaskar movie na? Climax where Bhaskar is there, Lucky Bhaskar is there in the outside India. Okay, now income tax people realized and sent a notice. What he'll do simply, he'll not even care for them. Okay, he'll simply say like, do whatever you want, you can do. I'll not pay anything. So if at all they know that before itself, that he is going to leave India, then what they can do, they can assess that time itself and they can ask him to pay tax then only, then he can leave. So okay, that's why. Person leaving India for employment outside India. Sir, understand, all these exceptions are with an intention that to avoid revenue leakages. Usually, if we are residents now, we cannot go anywhere. So usually we live in India. Even in next year, if the tax is computed also, no problem. We'll be there in India only. They can ask us to pay. But these people are non-residents majorly. Okay, these people go outside India and we cannot find or trace them. That's why they are asking to assess the income in the assessment previous year itself. Third one, sir. AOP, BOI, AJP formed for a purpose. Formed for a purpose or event and it is accomplished. I mean that purpose is done or the event is completed. Once the event is completed, they'll dissolve. Sir, this is a simple thing like in your colony you are formed as a Ganesh association. So Vinayak Chaturthi is coming, so you people started as a AOP. And then you group only has collected some money among yourself, like each one like 10,000, 2,000 like that, and you kept a Ganesh idol there, you celebrated everything. At last, afterwards, there is a deficit of 10,000. Then if you ask the other balance money, nobody will be there because the purpose is served, nobody will be there to share that 10,000. Same here also. AOP formed for a purpose. After accomplishing the purpose, if you need to pay tax in the assessment year, nobody will be there to pay taxes. Okay, there are let's say 30 members. If you ask one person, he'll say other person name. That person will be say the other person name. Last they'll tell whose name, Ganesh name. Okay, so that's why where AOP, BOI, AJP is formed for a purpose and the purpose is accomplished and it is about to dissolve. In such cases also, the previous year income will be assessed in the previous year itself, because it would be so tough for them to recover the taxes in the assessment year. That's why. Then fourth one. Sir, if you want to write section number, sir, this 172 na, the second point is like section 174. Anyhow, you don't remember. I too don't remember. I don't even try to remember also. Unless if it is an important section number, I don't try to recover also. I mean, I don't try to remember also. Persons trying to dispose or pledge property. Persons trying to dispose or pledge property to avoid tax. To avoid tax. To avoid tax. So to avoid tax liability, you are selling that properties. You're selling that properties and you want to give that money to your family members or relatives, and then if income tax people comes now, you simply say like, you'll surrender to them. I don't have anything. If you want to do whatever you want, you can do. Okay, because minimum of like 1 year he'll be getting anyhow bail, even if he is arrested also. So that's why he's ready for that. So he is transferring the properties or he is pledging the property and saying like the property is under pledge, you cannot sell it, or even if he sells it also, the government cannot recover the full money. So that's way to avoid the tax liabilities is with an intention to transfer the property or to pledge the property. Government, I mean the department got such information then itself. So they need not to wait for the next year. What they can do? Now itself they can go and ask him to pay the taxes. I mean they'll assess the taxes and ask him to pay. So the last one, sir, fifth one. Discontinued business. Discontinued business, section 176. Discontinued business, section 176. So discontinued business, simple thing, sir. Company is dissolved. Company went into liquidation and all the assets are sold and the balance amount is given to the shareholders. Now the company didn't pay on the sale of assets and all, company didn't pay any tax, capital gain tax nor the income taxes and all. Now if you want to make someone is responsible, now that company has thousands of shareholders. And now all of them got their money and they were in different places and they are not ready to pay taxes. So when the business is going to discontinue, it is going to dissolve, in such case also they need not to wait till assessment year. The previous year income will be assessed in the previous year itself. So there are 5 instances where the previous year income will be assessed in the previous year itself. First one, non-resident shipping business. Why? The basic thing, he is a non-resident. We don't know whether he'll come back again or not. That's why. Second one, person who is leaving India for employment outside India. Here also same thing, he is going outside India, sir, and he has no present intention to come back. In future he might change his mind, but present he has no intention to come back. Then in such case also, we are not sure whether he'll pay the tax in the next year or not. That's why it will be assessed in the current year only. Third one, I mean previous year only. AOP, BOI or AGP formed for a purpose and the purpose has been attained or accomplished. Then in such cases also, the AOP will dissolve or the BOI will dissolve and the members will be scattered across the country. It's tough for the department to recover the taxes again. In that case also, previous year income will be assessed in the previous year itself. Fourth one, persons trying to dispose the property or pledge the property to avoid taxes. In such case also, previous year income will be assessed in the previous year itself. And the last one is discontinued businesses. Okay. Next one, sir. The next concept is undisclosed source of incomes. undisclosed source of incomes. Sir, we'll understand it. I mean, sir, here there is Bhargav. The other guy is like Raju. Bhargav, sir, sincere student. Regularly he'll come to college campus and he cleared CMA. And then he got a job and he is working in a company. Raju, irregular. Okay, don't even focus on CMA also. Okay, later on he started his own business. No. He started his business and he is into mining, inspired by KGF, and he is also into some mining kind of activities and all. Whereas Bhargav is from childhood they are friends. Bhargav every day goes to school. Okay, every exam he used to get first rank. Okay, first rank Raju is there, na? Raju there, but here it is first rank Bhargav. Okay, but ultimately Raju is into business, Bhargav is doing a job. But they are best friends only. Okay. Then, sir, Raju started mining and all, but he was not bothered about paying taxes and all. He's not bothered about paying taxes and all. He's like mining like anything. Okay, whatever the hill he finds, he's taking JCB there, mining it and selling it. Okay, he's getting lot of money, sir. There are around like 4 or 5 crores he has. Okay, now Bhargav and Raju had a meeting one day, so and they were discussing like how life is going on and all. Raju said like, I'm working so hard. Bhargav is saying like he's working so hard and he's earning only 1 lakh per month. Whereas Raju said like, I had 4 crores I earned in this particular year only. Then Bhargav asked, okay, what you did that money? I didn't plan anything. Currently it's there in my account only, 4 crores and all. Okay, inside and all it's burning. Okay, he went home, thought for the whole night, and early morning 7 o'clock he called income tax officer, saying like, that fellow Raju is having 4 crores of money in his bank account. What you people are doing is not even paying income taxes also. So okay, 9 o'clock they came to his home, asked his bank accounts and checked his bank accounts like, what is this money? Okay, he's not explaining the source, because to explain that source, sir, those were not legal mining. Okay, he is mining whatever the hill he finds. Okay, he doesn't have any license or nothing. Okay, so he just bought a JCB. Okay, then if he finds a hill there, then he started mining. So he cannot explain the source, nor the even if he provides an explanation, that explanation is not satisfactory to the assessing officer. He has 4 crores of deposits or cash credits. Cash credits, I mean account only it got transferred. So total 4 crores of cash credits into his account. He does not provide explanation, nor the explanation provided is not satisfactory to the assessing officer. Then he'll take all the 4 crores as undisclosed source of income and levy 60% as tax. Plus on that 25% surcharge, plus 4% penalty, HEC. So total 78% gone out of that 4 crores. We are not talking about penalties, sir. In penalties chapter again there are 200% penalties also. Okay, only tax itself it will go how much? 78%. Then Bhargav got peaceful sleep and all. Okay, then also, okay, somehow this time Raju managed. Okay, since he is into JCP and all, he given out of 4 crores income tax people, you take 1 crore. Somehow he managed. Okay, and then he continued. Okay, then a year passed. Then in the second year, okay, Bhargav didn't know all this story. He was happy, like income tax people came, caught him, everything. So he is also in the same grounds. Then second year again they met. Okay, then again they asked. Okay, he asked, business is super success. Okay. Not only hills, these days, I started even ponds and lakes also. There also I have started doing mining and all I got. This year I earned another 5 crores. But this time I'm thinking smartly. Last time I kept my money in bank account only. That's why those income tax people came and asked me. That's why I'm not keeping like that. I bought a land now. In the outskirts of Hyderabad only I purchased. Okay, 3 acres of land or 2 acres of land in Cooperative. Okay, he said everything. Okay, and he taken Bhargav also. See, this is the land only. Okay, in 3 years the price will double. Everything he said. Okay, blood also boiling this time. Again he called the income tax officer. When he went to home, again he called income tax officer. Last time if one person got unexplained money, this year also he'll be having now. So what you guys are doing? He said again. And he said even there he is having site. On particular day he got registration, everything he said. Okay, they came back and asked now, okay, congratulations, you purchased a land here for 5 crores. Now again they'll ask, for purchasing this land, how you got this 5 crores? What is the source? And what is he'll ask explanation. If he provides explanation, fine. But he cannot provide explanation. He cannot provide explanation, or the explanation is not satisfactory. So it's an investment. He purchased land, it's an investment which is unexplained. First one is cash credits. Second one is unexplained investment. Again, this will also be treated as what? Undisclosed source of income. Okay, again, 60% tax, 25% surcharge, 4% cess. Okay, this time Raju got deeply hurt. Okay, negative impact is going on and all. He called all those yogis from different states and all. He did lot of pujas and all. Then again he continued his business. Okay, then again he's digging wherever he finds. Okay, just like as in faction movies, sumos will go, no? Like that JCBs are going. Okay. Okay, then the third one, sir. Again, this time he thought like, I'm doing foolish things and all. He realized like, Raju, he thought like, first time I kept my money in bank account. That's why they can found out easily. Second time I bought a land, for that there is land registration and all. That's why this department people came to find out that. So now I'll take the money wholly in cash. Okay, and keep everything in my bedroom. I mean, under the bedroom, like underground, he has kept a place where locker, bunker kind of. There he is keeping the money under. Okay, but Bhargav is not getting any information this time. Okay, year passed. Now Bhargav only called. Raju, how are you? What are you doing? These days you are not meeting me also. Then one day, Bhargav is with Raju only. He is going wherever he goes, he is also following. Then at one time Raju said like, nowadays like I'm not putting the money in bank account nor into the land or any other assets also. I'm keeping everything in cash and gold only. Okay. Then he is curiously asking, cash and gold na, like thieves will come, how you are storing all these things and all na? For that I had a brilliant idea. I had one bunker in my bedroom and all. Okay, then he said, fourth day again. Went there, called again to the income tax officer. This time income tax officer directly came with hammer. Like in Mallana movie, he came with hammer. They found out the cash, gold, everything. Okay, again this is called what? Again they'll ask the same thing. What is the source of this income? Provide explanation. He cannot provide explanation, or the explanation is not satisfactory. Again what? Undisclosed source of income. So this is what? Unexplained money, jewelry, bullions. So these things. 3 points I said, sir. One is what? Cash credits. Second one is unexplained investments. Third one, unexplained money, jewelry, bullions, all those things. 3 points. Fourth one, sir. So he was fed up with the income tax people, Raju. So he's thinking like, only if I have money, the problem is coming. I'll spend everything. If I get 5 crores, I'll spend 5 crores, that he thought. Okay, so Raju's son birthday is coming. Okay, so he's celebrating birthday grandly, his son's birthday. He thought anyhow if I save somewhere, income tax people will come and they'll take away. So that's why he thought of spending whole 4 crores only and called Bhargav for that function. Okay, Bhargav went for the function and he absorbed everything. Okay, Raju giving for all the guests who are coming, he is giving gold coins as gift. Is giving gold coin for all the guests who are coming. He is giving a gold coin. Bhargav taken 3 gold coins, but still that fire didn't stop. Okay, he called income tax people also to the function. Okay, income tax people also came to the function. Raji is in shock, but they wished his son and all. They went. Next day again they came back with all the records. Okay, what they did? They went to the catering guy and asked, how much you charge for catering? He said like 40 lakhs. Note it down. Okay, they went to these gold coins and all. They weighed everything. How many gold coins, everything. And they written all those things. So all the expenditure he has made now, that listed out. Okay, and next day they came to his house and asking like, you have spent 4 crores for your son's birthday. What is the source of this income? Okay, again, there is no explanation or the explanation is not satisfactory. So this is called as unexplained expenditure. That also will be treated as what? Undisclosed source of income, and again chargeable to tax at 60% plus 25% surcharge plus 4% cess. 4 points. And the fifth one, sir, this time Raju has hired a semi-qualified chartered accountant. Not qualified. Qualified na he'll give good idea only. Semi-qualified yet. Okay, CRCM. Then he said like, you are doing something wrong. This time you buy properties only, but some extent or some value you use legally earned money. Some amount you use the other source of money and all. So he has purchased a property which is actually worth 3 crores. But in books he has recorded it for only 50 lakhs. The 50 lakhs which he paid is legal money only. On the tax everything paid. But the other 2.5 crores is from an illegal source which he cannot explain the source and all. Okay. This is also known to Bhargav. Again same thing. They asked, okay, you purchased a property for 50 lakhs. Fine. But the property value is 3 crores. How you got the other 2.5 crores and all? Again, there is no explanation, nor the explanation is not satisfactory. The balance, that amount also will be treated as what? Unexplained source of income. So here also, there are unexplained investments, but not to the full value, sir. A part with respect to investments, only a certain part is recorded in books of accounts, where the balance is not recorded in books of accounts. The last one, sir. This time, Raju earned money. He kept in the locker only, openly. Income tax people came. He only saying like, come sir, here only. See, this is the 5 lakhs I earned. When they are asking source, na, this time he is saying like, I got this 5 crores as loan from Vishnu. Vishnu, my friend, given this 5 crores as loan. Okay. They'll ask simply, how you got this loan under? Okay. It's simply like, see, this is the promissory note we have. Okay. This is the promissory note. Previously, sir, there used to be something called hundi document also. Hundi na, not this temple's hundi and all. In ancient, like in Maharashtra, Bombay province and all, it's an earlier version of promissory note. Just like as promissory note, there used to be a document called hundi document. On the note only, they'll agree. Okay, so I have given you 10 lakhs as loan. Like that, they'll written there and they agree as it loan. So that promissory note or hundi document is there with the Raju, and he's saying like, I have taken this 5 crores from Vishnu. Okay, then they'll not believe him, because if it is 5 crores as loan, now why you didn't take it from the bank transfer? Again, they'll call it as what? Undisclosed source of income. So all these are treated as what? Undisclosed source of incomes. Cash credits, unexplained investments, unexplained money, jewelry, bullions, unexplained expenditure, and investments declared in books of accounts at a lower value. Investments declared in books of accounts at a lower value, and amount borrowed or repaid through promissory note or hundi documents. All these are called as undisclosed source of incomes. Okay. So we'll write down, sir, quickly. Explanations and all not needed, sir. If you have these things, the problem is what? Department will ask you source, nature and source of that income. If you explain that properly, no problem. If you cannot explain, nor the explanation is not satisfactory, then it is treated as undisclosed source of income. Cash credits. Second one, sir. Unexplained investments. Unexplained investments. Then unexplained money. Unexplained money, bullion, So bullion na the gold bars and all. Jewelry. Unexplained expenditure. Unexplained expenditure. Then amount of investments not fully disclosed in books of accounts. Amount of investments not fully disclosed in books of accounts. Unexplained investments, unexplained money, bullion, jewelry, unexplained expenditure. Amount of investment not fully disclosed in books of accounts. Amount borrowed or repaid on hundi. Amount borrowed or repaid on hundi. For all this, the problem is what, sir? SSE offers no explanation, nor the explanation is not satisfactory. SSE offers no explanation, or the explanation is not satisfactory. Or the explanation is not satisfactory. SSE offers no explanation or the explanation is not satisfactory. Sir, on all this, what is the tax rate, sir? Tax rate 60%. Surcharge flats are here. How much? 25%. Plus 4%. So effectively it comes to how much, sir? 78%. Effectively it comes to 78%. So then here, when compared to old versus new regime, we understood like new regime, the tax rates are comparatively better because the slabs are higher, slabs are there. Basic exemption limit is also higher compared to the old regime. So in any way, which is beneficial, sir? New regime is only beneficial. But the problem is certain exemptions, certain deductions are not allowed under the new regime. Okay. So write down, sir, certain exemptions and deductions are not allowed. Certain exemptions and deductions are not allowed when a person chooses default brackets new regime. Sir, majorly for tax computation and all, we have how many heads? 5 heads. Salaries, house property, PGBP, capital gains, IFOS. Then there we are having a chapter called deductions. Okay, you need not to refer to exemptions chapter. Why? Because the income which is exempted, first of all, it might have covered under any of these 5 heads. Then it would be exempted. Let's say there is an exemption related to salary. First of all, the income is under which head? Salary. Then again, exemption. Business related exemption. The income will be under PGBP head. Then there will be exemption. So incomes are there under the 5 heads and related exemptions. And then there are deductions. So total 6 chapters will have an impact regarding this old regime versus new regime. Salaries, house property, PGBP, capital gains, IFOS, then deductions chapter. Okay. So now, if you look at these 6 chapters, the problem is like, we are going to discuss separately PGBP chapter here. So whatever are the changes that impact versus old versus new related to PGBP, we'll discuss in the PGBP chapter only. And the next immediate chapter we are starting is deductions only. So with respect to deductions chapter also, in that chapter only we will understand. But coming to salaries chapter, we will not discuss at final level. House property will not discuss at final level. But we should know at least what exemptions or deductions are allowed in old regime but not allowed in the new regime. So first we are starting with salaries chapter, sir. Quickly we'll write down salaries alone. Income from salaries. Income from salaries. Taking columns, sir, like old regime, new regime. So for you to just to recall you the salaries chapter, sir, the salaries chapter, there will be basic salary, dearness allowance, bonus and commission, that we will take. Then there will be lot many allowances in the salaries chapter, like HRA allowance, children school fee allowance, hostel allowance, leave travel allowance, okay, and then conveyance allowance, travel allowance, transport allowance. So like that there are so many allowances will be there. The second part is about perquisites. There will be so many perquisites there. Rent-free accommodation, motor car perquisite, servant facility, telephone facility. So those perquisites will be there. And the third segment there is like retirement related. Leave encashment, gratuity, provident fund, PF fund, pension, commuted pension, uncommuted pension. So those retirement related. And at last we'll find out gross salary. From there gross salary there will be 3 deductions. Standard deduction, professional tax, entertainment allowance. Okay. So that is the basic salary chapter, right? So now if you remember, sir, HRA there will be exemption there. For all the retirement related gratuity there will be exemption, pension related exemptions. Okay. So now we'll be listing out quickly whether those exemptions are available in the new regime or not. Okay. If in this list we didn't mention now, okay, some items which we mention here also will not have any change or any impact. But if anything we don't cover also, simply understand like it doesn't have any impact whether it is old regime or new regime. Okay. First one, sir, we'll start with HRA. Some major allowances we will cover, sir. Allowances majorly. HRA. Sir, HRA related there is exemption in the old regime. So old regime it is exempted. New regime it is not applicable. So HRA exemption is not available in the new regime. Then leave travel concession. Leave travel concession. If you remember, sir, in a block of 4 years, twice the leave travel related concession can be availed to the extent of the freight charges incurred. So like if it is to the air route, economy class ticket related freight for employee, his spouse and maximum 2 children, those things are allowed, right? So leave travel concession is exempted in the old regime. whereas in new regime it is not available. Third one, sir, children education allowance. 100 per child will be exempted under the old regime. Maximum 2 children. But whereas such exemption is not available in the new regime. Hostel fee allowance. Again, 300 per month will be exempted in the old regime. But whereas in the new regime, if you opt, that is also not available. Then fifth one, sir, travel allowance to the disabled. 3,200 will be given as exemption to the disabled. If he is blind, deaf, dumb, or handicapped, for all those there will be a travel allowance which is exempted up to 3,200 per month. That is exempted even under the new regime also. So this is important. So the travel allowance is exempted even under what? New regime. All the others and all here taxable only. But with respect to a disabled person, travel allowance 3,200 per month is exempted. Let's say the company is paying 5,000. How much is exempted? 3,200. The balance 1,800 is taxable. Such exemption can be availed even in the new regime as well. Then sixth one, sir, I am combining 3 points here. Travel allowance on transfer. Daily allowance. Travel allowance on transfer, daily allowance, uniform allowance. Travel allowance on transfer, daily allowance. These are exempted in the old regime, sir, to the extent of actual expenditure. See, for transferring your residence on account of transfer of your job, or with respect to daily allowance, daily to go to your office, or with respect to that if any travel expenditure is incurring, for that if any daily allowance is given or uniform allowance is given, they are exempted to the extent of actual expenditure. Extent of actual expenditure. The same is even exempted under the new regime as well. This is exempted even in the new regime as well. Then retirement related, sir. Retirement related, now what are those? Gratuity, pension, leave encashment, VRS, all those are VRS, retrenchment, PF. All these are exempted in both the regimes. All these are exempted in both the regimes. Then perquisites, sir. Sir, perquisitely, majorly, they are taxable only, sir. There is only one exempted perquisite. What is that perquisite? Na? Food coupons up to rupees 50. If the meal is provided up to rupees 50, it is not treated as a perquisite. Above 50 rupees and all, it will be treated as a taxable perquisite only. That exemption is there even in the new regime also. So perquisites related also, all perquisites, all perquisites related, the treatment is same under both the regimes. Treatment same under both the regimes. Treatment same under both the regimes. So we have covered allowances, we have covered retirement related, we have covered perquisites. Then there are deductions under section 16. First one is like standard deduction, sir. Under old regime, it is very important, sir. This has been asked so many times. Standard deduction 50,000 are under old regime. Whereas under the new regime, it was updated. It is how much? 75,000 is allowed. Under new regime, there is more standard deduction. Sir, under old regime compared to new regime, two places the government is clearly promoting the new regime, sir. Okay, they are promoting only new regime. So they don't want you to take all those deductions and all. But they thought like two things are very much keen and important. Everybody are focusing. One is salaried people. They are much focused on standard deduction. So to get their favorable thing from them, standard deduction they hiked in new regime 50,000 to 75,000. And then rebate also, many people are curious about rebate. That's why old regime they remained it as like how much? The same, 12,500 only. But in new regime they made it 25,000 and the limit is also up to 7 lakhs. Okay. Entertainment allowance to government employees. Entertainment allowance and to government employees. Here it is available. Here it is not available. Then professional tax. Sir, available government allowance. How much is maximum, sir? 5,000. But that is not available. Professional tax. That is available as deduction under the old regime, but under the new regime, it is not available. How much available also? Up to rupees 2,500. Okay. So next class, sir, will be starting with deductions chapter. But here there will be some 5 minutes discussion like house property related, what can be availed or not. IFRS, there will be only one point related. Capital gains later, there won't be any changes. New regime or old regime. PGBP anyhow will discuss separately chapter. There will discuss elaborately. So next class, some 5 minutes discussion will be there in this particular topic. Then we'll be starting with the deductions chapter. Okay. Sir, all these chapters like basics, we cannot find out the separate weightage for basics chapter or even for deductions chapter. But in every question, almost like out of 13 questions being asked in exam, descriptive questions, around some 5-6 questions will have impact of this tax rate, tax calculations and deductions. So that's why these are the base for us. So once we complete deductions, then we'll go straight away into the PGBP chapter. Hi all, good morning. See, we are on the basics chapter. Under the optional regime, we are discussing like which deductions are allowed or which exemptions are allowed and not allowed. So that comparison we are discussing. The other part and all we have discussed everything. So just to sum up, like what are important things in the first chapter, sir? I've been saying once again saying tax rates are important, surcharge rates are important. You cannot forget them at any point of time. You should be able to recall the tax rates and surcharge rates both under the normal regime, optional regime for individuals as well as for companies also. The last class, sir, we have discussed this maximum amount not chargeable to tax, rounding off, average rate of tax, maximum marginal rate, then revenue receipts versus capital receipts, then the general rule. What is the general rule? Previous year income is assessable to tax in the assessment year. Previous year income is assessable to tax in the assessment year. Whereas and then we discussed about undisclosed source of incomes. Undisclosed source of incomes na like cash credits. Cash credits na if any amount is if any cash receipts you are recorded in our books of accounts, then that is called as cash credits. Unexplained investments. You have purchased a land, you have purchased a property, but for which you don't have any explanation for the source. Then unexplained money, bullion, jewelry. You are in possession of money, gold or bullions, but when the department asked you the source for such money and gold, you couldn't provide any explanation, then that is called as unexplained money, bullion, jewelry. Unexplained expenditure. You incurred certain expenditure. Again, for incurring such expenditure, they asked what is the source. You couldn't provide the explanation, then that is unexplained expenditure. Amount of investments not fully disclosed in books of accounts. You have purchased for 5 crores, but in books you recorded only for 2 crores. So there is a difference of that 3 crores. So that 3 crores you didn't record it anywhere. So they came and asked about for the 3 crores, what is the source? So you couldn't again explain the source. Unexplained an amount of investments which is not fully disclosed. Then amount borrowed or repaid or through hundi. You are simply saying like whatever the money you are in possession of, that money you are saying like you have borrowed from some of your friend through a promissory note or through a hundi document. So that also will not be considered as a valid explanation. So that would be also treated as undisclosed source of income. On all these undisclosed source of incomes, the tax rate would be 60%, surcharge rate would be 25%, and cess at a rate of 4%. And then this is very important, sir, especially for two sums I have been saying. One is like DTA sum, and the second one, I mean the whole first chapter is important with respect to two sums. One question is being asked under, see, I've been saying this multiple times. Again, like before, by the time we complete batch, I'll be saying this another 5-6 times. Question number 2 will be having a PGBP question, 14 marks. For that, the basics chapter may not have much relevance. Okay, because majorly, okay, in an, I mean, like out of 5 attempts, 4 attempts they ask only related to PGBP. When they ask only related to PGBP, the question is like compute the total income. Okay, compute the total income. So major adjustments will be from PGBP. So something like inter-level total income sum. Some IFOS 1 or 2 adjustments or capital gain 1 adjustment might come, but majorly related to PGBP, that would be a 14 marks question. But once in 5 attempts, they'll ask a question related to MAT as well. MAT na minimum alternative tax. When a company is into, sorry, you know all these things, the book profits and the income tax profits would be different. I mean, accounting profit and income tax profit would not be or shall not be, need not to be same. Why? Because the depreciation, expenses, allowances, all these things will differ there. So that's why they gave another alternative taxation policy also, which is called MAT. If that question comes, then you need to calculate taxation and all. So once in 5 attempts, you'll have relevance with the first chapter to answer question number 2. Okay. Otherwise, in the other 4 attempts, basics you learned or not, you could attempt question number 2. Then coming to question number 3A and 3B. So question number 3A and 3B, those questions are simple questions in exam, But the problem is you should have overall understanding of the subject. It's not like specifically I know this chapter, then you could attempt the questions. Questions will be easy, but you should have overall understanding. If a student selectively studies like 5 or 6 chapters or some 10 chapters, then you couldn't attempt question number 3. So you should have overall understanding. When you have an overall understanding, then the questions will be easy. The basic level questions only they'll ask. Like they'll give various incomes. They'll ask you to calculate tax under both old regime, new regime. So such kind of questions they'll be asking. So to answer that question, again you should know tax rates and all. So everything this is relevant. So under 3, there is a chance of 7 marks question, which is purely linked to basics relevant tax rates and all. What is under old, what is under new regime, all those things. Then question number 4. So question number 4, sir, they are asking like one question. The first part is from appeals. Question number 4, the first part they are asking from appeals chapter. Okay. And question number 4b, again they are asking from advanced tax chapter. 4a is from appeals chapter, 4b is from advanced tax chapter. Okay. Then again, appeals chapter you don't require first chapter knowledge, because with respect to appeals and all, you should not calculate any tax calculations and all. But again, to calculate the advanced tax, you should know tax, surcharge, all these relevances is needed. So tax, surcharge, and again sometimes you will be calculating the 234A, B, C interest. So all these again linked to inter level only. So for that chapter again, first chapter is needed. So question number 2, less relevance. Question number 3 has much relevance with the first chapter. And again question number 4, especially 4b, has much relevance with the first chapter. Then when you go to question number 5, there are 2 questions again. 5a is from business restructuring. Okay, majorly in capital gains in inter level you might have learned slump sale. Okay, so such kind of concepts majorly related to capital gains only, the whole chapter. Like when there is amalgamation, what are the tax implications? When there is demerger, what are the tax implications? So such kind of questions, again majorly not related to first chapter. Okay, completely related to capital gains or depreciation part only, not much linked with the first chapter. But again they are 5b, non-resident taxation, non-resident individual related taxation. So they'll give incomes of a non-resident and they'll ask you to calculate what are the tax to be calculated, or if TDS to be deducted, now what is the TDS to be deducted. Some slight relevance is there with the first chapter, not majorly also. Then question number 2, 3, 4, 5 done. Question number 6. Question number 6a is always a theory question. Okay, there are 2 chapters, 6, 7 are standardly from 2 chapters, sir. International taxation. One is double taxation, second one is like transfer pricing. Okay, 6a will always be a theory question, either it will be from transfer pricing or from DTA. 6b is from the DTA chapter. The basic sums are again completely you should have knowledge of first chapter and the deductions chapter. Okay, so there again there is much relevance with the first chapter. Then if you go to 7a and 7b, completely there is a single chapter called transfer pricing, one of the easiest chapter where we could score out of 12 marks out of 14 marks, 7a and 7b. The last one 8a, 8b, sir. 8b again is from the chapter transfer pricing only. 8a we couldn't predict, it could be from any of those chapters. Okay, somewhat more relevant to appeals and assessment chapters, but it could be even twisted as well. Okay, so this is our paper pattern. So you may have so many doubts in your brain like, will this happen again in the December attempt? Will this happen again in the June 2025 attempt? Trust me, it will happen. Okay, I already said like I have seen. Okay, I joined my CMA foundation in like 2011. Okay, 2012 I have joined. I completed my intermediate, then I have joined CMA foundation. That time there is 2008 syllabus. See, even though it is like 2012 came, but the syllabus in existence is like 2008 syllabus. So I cleared foundation in like 2008 syllabus. Then I wrote like the CMA inter and all in somewhere in like 2013 or 14, that range I have written. So that time again 2012 syllabus has came into picture. So I have seen 2012 syllabus, and final also I completed in the 12 syllabus only, in 16 or something, but 16 syllabus not it came, I completed in 2012 syllabus. So I have seen 2008 syllabus, 12 syllabus, then I started teaching from 2017, from there again I have seen 2016 syllabus, now currently we are into 2022 syllabus, so I know it happens like that only. It's okay, so you don't need not to worry about whether this happens or not. So it always happens like that only. For the first 3 or 4 attempts, it would be so tough, because we couldn't have I mean, when the syllabus introduced, for the 3 or 4 attempts, we cannot have any patterns. We couldn't expect like which questions will come, which chapters are of focus. That would be tough. But once it settles, then they will not change again. Because in the 1 year or 1.5 year, again they'll come up with the new syllabus. 2026 is the expected year of new syllabus. Okay, for you anyhow, there will be another 3 or 4 attempts. So, okay, so you need not to get panic about the new syllabus and all, but it will come. So then if again, okay, if, because of all these faculties are saying like this, then if they feel like course is becoming predictable and all, maybe they'll change again in 2026 syllabus. So for us, you could be certain and clear. Okay. Even in worst case also, so we'll be planning like for all the 7 questions, right? 5 will go minimum in our way. I mean, 5 will go as per our expectations only. Maybe 2 questions may change as per our expectations. That anyhow, that risk will be there. If 5 questions will go on our way, you write 3 questions properly, you got 50 plus. Okay, because minimum of 10 MCQs we could do, 10 into 2, 20 marks. And 3 14 marks questions you could do properly. Out of 3 14 marks questions, take an average of 10 or 11 marks only. 32, 33 marks and 10 MCQs you could do easily. So 50 marks is better. Okay, in DT 50 is equal to 60. 60 is equal to 75. Okay, it's, I mean, considering the voluminous of subject or toughness of the subject. Okay. Sir, in last class, like I said, like under income from salaries, HRA exemption is available only under the old regime. Under new regime, you cannot avail HRA exemption, leave travel concession exemption, children education allowance, hostel fee allowance. Okay, these all are not given. Okay, in another way, we'll remember what will be allowed under the new regime. Okay, except these points, all others are not given as exemptions. So what will be given as exemptions are under new regime also? Travel allowance to disabled. It would be given as like 3,200 per month. That would be given as exemption even under the new regime as well. Then travel allowance on transfer, daily allowance, uniform allowance. Sir, this daily allowance is something like, this is usually given to marketing people. So, okay, people who have to go to, sales people, marketing people, they need to go to different places every day. So, to cover their travel costs, they will be giving daily allowance. So, such daily allowance, travel allowance on account of transfer, or if any uniform allowance is given, those are exempted to the extent of amount spent. See, for me, uniform allowance 10,000 given, but I purchased only for 5,000 uniform. Other 5,000 I saved and I used for other purposes. Now the exemption is available only to the extent of 5,000 only. So that exemption is available even under the new regime as well. Then retirement related are same. They were retirement, all the retirement related are exempted even under the new regime as well. Retirement related na leave encashment, gratuity, pension, okay, provident fund related. So all these retirement related are exempted under new regime or even under old regime. Okay, we need not to bother about them also. They will not ask again that part. Okay, into final level. Then perquisites, all the perquisites, whatever is the treatment in the new regime, the same treatment even in the old regime as well. Then deductions. So 2 important points are where they will twist now. One is like allowances related, travel allowance you should remember. Then deductions part you should remember. So deductions related, standard deduction under normal regime is only 50,000, whereas under new regime it is 75,000. Then entertainment allowance, professional tax, these deductions will be there under section 16, but those are not allowed in the new regime. Then income from house property. Income from house property. So the basic format, I hope you guys remember the basic format. It's basic format now. We need not to recall everything like fair rent, municipal rent, standard rent. All these is not required. First we'll take GAV. Okay, for calculating GAV also there are already three steps like fair rent or municipal rent, whichever is higher. Again you will be compared with the standard rent, and then again you will compare it with the actual rent. So those steps are right, like okay, expected rent or annual rent, whichever is higher you will be taking as GAV. So take that GAV. Okay, again we need not to bother about let out property, self-occupied, partly let out, partly self-occupied. All those permutations are not needed here. First just GAV. From GAV what we should do? Subtract property taxes, then you will be arriving what? NAV. From NAV there are two standard deductions. One is like 30% of NAV, and the next one is like interest. Okay, interest even includes two types of interest: pre-construction period interest and post-construction period interest. So this alone is needed for us. Okay, very rarely they'll touch house property points. That time also this property tax related point will come, or this interest point will come. Standard deduction anyhow it's a common thing, right? That's why. Okay, so old regime, new regime. Take the two columns, sir. Old regime, new regime. Old regime, new regime. Municipal taxes paid. Municipal taxes paid allowed under both the regimes, sir. Under old regime as well as under new regime, both the places municipal taxes paid can be taken as deduction. So we'll arrive at NAV. So after NAV we'll take what? 30% standard deduction. %% of NAV, which is the deduction under 24 subsection A. This is also allowed under both the regimes. This is also allowed under both the regimes. Then third one, sir. Interest under section 24B. Interest under section 24B. So there under 2 points are there. First one I am taking like pre-construction period interest. Sir, here whether it is pre-construction period interest or post-construction period interest, altogether for self-occupied property it is 2 lakhs only. Okay, but old regime it is allowed. I mean the interest can even include pre-construction period interest, whereas under new regime pre-construction period interest is not allowed if it is a self-occupied property. Not allowed self-occupied property. Then post-construction. Post-construction interest. Allowed. Again this differs from self-occupied and let out, sir. For self-occupied the maximum interest is like 2 lakhs. Sir, this is together, sir. Not just for the post-construction, pre-construction and post-construction together. For a self-occupied property the maximum interest allowed as deduction is 2 lakhs. But for a let out property there is no limit. But for a let out property there is no limit. For a let out property there is no limit. Then under new regime, sir, it is again not allowed. It is not allowed. But it differs from self-occupied and let out. self-occupied na completely no. Let out property, sir, it is allowed to the extent of income they are having. If house property has income of 1 lakh, then interest is also allowable to the extent of 1 lakh only. Allowed to the extent of house property income, not income from other heads, sir, only from house property income. House property head, whatever is the income they had, to that extent only interest allowed. The next, loss allowed or not. Sir, house property head loss, usually it can be set off with any other head, okay, up to a maximum of 2 lakhs. But that is under the old regime. Whereas under the new regime, you cannot set off house property loss with any other head. Okay, the carry forward option is there. Both under old regime or new regime, you can carry forward it for 8 assessment years. Okay, but set off with other heads is possible only under the old regime, that also to the maximum of 2 lakhs. Whereas under new regime, it is not possible. So, okay, let me write down that one as house property loss eligible for set off with other heads, eligible for set off with other heads, max 2 lakhs. Set off possible within the head only. Set off possible within the head. Set off possible within the head only. Set off possible within the head only. Then carry forward of loss. In both the cases allowed 8 assessment years. Here also 8 assessment years. Then PGBP head, sir, there will be certain differences under PGBP, but PGBP anyhow will discuss elaborately. So there, towards the end of PGBP chapter, we can write down which are allowed under the new regime, which are not allowed, which are allowed and not allowed under the new regime. So PGBP will discuss separately. Capital gains. With respect to capital gains chapter, no differences at all. Either under the normal regime or under the default regime. Old regime or new or default regime, under both the regimes it is same. Then IFOS. Again, we'll take 2 columns, sir, old regime, new regime. But there is only one point, but still. Family pension. Sir, family pension means when the employee expired and the pension is being received by the widow of or the wife of employee, then it is called as what? Family pension. Okay, so family pension related, sir, under old regime there is an exemption, sir. Deduction is 15,000 or actual, whichever is lower. Whereas under the new regime, sir, instead of 15,000 it was became 25,000. Or actual, whichever is lower. Others and also other incomes, there is no difference. For other incomes, there is no difference. Then in first chapter, sir, so we have covered everything from the basics chapter. Only one point which I missed there is, sir, if you remember individual HUF, AOP, BOI, AJP, the surcharge rates are like under the new regime up to 50 lakhs nil. 50 lakhs to 1 crore 10 percentage. 1 crore to 2 crores 15 percentage. Above 2 crores 25 percentage. Whereas under the old regime, up to 50 lakhs again, no surcharge. 50 lakhs to 1 crore, 10 percentage. Above 1 crore to 2 crores. 1 crore to 2 crores, 15 percentage. 2 crores to 5 crores, 25 percentage. Above 5 crores, 37 percentage. Okay. Write down, sir. For an AOP, under old and new regimes, for an AOP under old and new regimes, for which considering only companies as members, sorry, not considering, consisting only companies as members. Sir, as I already said, in AOP any person can be a member. Any person, it can be even company. So for an AOP for which all the members are what? Companies only. For which consisting only companies as members. Consisting only companies as members. In such cases, the surcharge rate is like total income up to 50 lakhs nil. Total income up to 50 lakhs nil. Whereas total income greater than 50 lakhs but less than or equal to 1 crore, it is like 10 percentage. If it is greater than 1 crore, then it is 15 percentage. For an AOP under both old and new regimes, for which consisting only companies as members. So all the members are companies only. Then the surcharge rates are like up to 50 lakhs nil, 50 lakhs to 1 crore, 10 percentage. Above 1 crore, it is like 15 percentage. There is no 25% and 37 percentage anymore. Within the head, there is no limit with us. Within the head you can set off house property loss, within the head you can set off to any extent, there is no limit. So with this we completed the first chapter, sir. Then we are moving on to deductions chapter. So whichever the chapters you felt tough at inter level and you left, like PGPP, deductions, TDS, okay, so they are only important from the inter level at the final level. So okay, so we'll talk something like karma won't leave us, na? The same thing. Sir, understand those things, like even if you learn now, so there were many people will be studying like select to study from the beginning itself. So I'm saying this thing. So I have tried all those things throughout my CA career. I mean CA preparation, CMA preparation and all. Towards the time I clear, I realized one thing. So I'm saying to you also, at any point, I mean life will not leave us. Even the same way like ICMAI or board also will not leave us. So at one point of time you will say like I learned everything, I know everything, pass me. That time only they'll make you clear. So even if you some chapters you leave at inter level and you think like final also those are not required and all, no, you'll again, it's okay, attempt. If it takes like 3 or 4 attempts, now what you will do? You learn from basics because you wanted to clear. So first attempt you will be like, okay, if you, I mean I'm saying like in a general perspective, sir, first attempt the pain will be comparatively little less. But when the attempt takes and you don't clear, na, the pain will be increasing more, the pressure will increase. So what you will do, you will go to the basics, inter-level book also you will open then. Because you want it perfect and you don't want to lose even a single mark also. So okay, that will happen also. I mean, instead of happening all those things, what you should do from now only, if you start preparing, it would be smooth. But even my faculties also said the same thing to me, but I never listened. Karikapati says, na, so like, ఓకే, చెప్పినట్టు వినే వాళ్ళని కొడుకు అంటారు, విన్నట్టు నటించే వాళ్ళని కూతురు అంటారు అని చెప్పి ఒకటి ఉంటుంది. సేమ్ అదే దాన్ని భార్యకి భర్తకు కూడా లింక్ చేసి ఒకటి చెప్తాడు ఇందులో. సో లైక్ అన్నీ ఇదే సర్కాస్టిక్ ఫన్ వేలో చెప్తాడు ఆయన. ఓకేనా? సో మీరు కూడా అంతే, సో అన్నీ విన్నట్టు నటించే వాళ్ళని. Sir, understand again, deductions is not a full-fledged chapter which we have in our syllabus. So there will be so many points you learnt at inter-level. I mean, even though you don't learn, at least you might have listened to the classes. Like it's a big chapter only. There will be so many points here. But we cannot spend like 4 or 5 classes only on deductions chapter. So we should be little quick here. It's okay. So I'll be discussing also little faster only. So to the extent you understand, it's fine. Because hardly, since we have started chapter, all the deductions will be discussing. But towards the end of the chapter, I'll tell the important deductions also. There will be 10-12 deductions. Those are only mostly repeating in our exams. You can focus on them as well. Okay? Clear. So there will be some complicated deductions like 80 CCD. Okay? So those kind of deductions also I'll be discussing little fast only. So you be alert. Chapter 6A deductions, these deductions are also called as Chapter 6A deductions. The first point, sir. The aggregate, I mean total of all deductions. Aggregate of all deductions aggregate of all deductions shall not exceed. Aggregate of all deductions shall not exceed gross total income. Aggregate of all deductions shall not exceed gross total income. It means you have total income of 5 lakhs, whereas under different sections like ATC, ATD and all, you have total of deductions 6 lakhs. Your income is only 5 lakhs. So now the deductions are also restricted to 5 lakhs only. Okay, you cannot claim 6 lakhs and make it as loss. Okay, so to the extent of total income only the deductions are restricted. Second one. No deduction under chapter 6A. No deduction under chapter 6A allowed from the gross total income. No deduction under chapter 6A allowed from the gross total income to the extent allowed from the gross total income to the extent it includes capital gains under section 112A, 111A and casual income. Casual income. Sir, casual income means what? Betting, gambling, lottery, card games, puzzles, those things. I mean, without much effort, if you are earning income, then that is called as the, I mean, because of a chance you are earning, then they are called casual incomes. So on this 112A, 111A and casual incomes, you cannot claim deductions. So, okay, let me give you an example here. You have long-term capital gain under section 112A. $3 lakhs. Your salary income 2,50,000. Salary income 2,50,000 and your lottery income of 1 lakh. So this 3 lakhs again I am taking it as like after exemption. So under 112A we have an exemption of 1,25,000. So I am taking it as like after exemption. So what is the total income here, sir? Gross total income is like 5,50,000 plus 1 lakh. 6,50,000 is the gross total income. Let's say you have ATC deductions to the extent of 1,50,000. You have ATD another 1 lakh. Your ATEAA another 1 lakh. Okay, let it be. So total how much, sir, you are having? 3,50,000. But you cannot claim 3,50,000 as deductions here. The problem is like out of your gross total income you should exclude the special rate incomes. LTCG you should exclude, lottery income you should exclude. So the salary you are having is how much? Only to the extent of 2,50,000. So the deduction is restricted only to the extent of 2,50,000. So the income would be here, net total income will be here 4 lakhs. Net total income equals to 4 lakhs. మీరు రాశారండి అప్పుడే నోట్స్. ఓకే, దెన్ a basic point, sir. Deductions, the word deduction, sir, deduct means what? Subtract. So these points you will be subtracting. Okay, the points which you are discussing, you should be the relevant amounts you will be subtracting. Okay, But deductions can be classified fundamentally into two types, which are like in respect of certain payments. Deductions in respect of certain payments. Deductions in respect of certain payments. The second one is like deductions in respect of certain incomes. Deductions in respect of certain payments in respect of certain incomes. So deduction in respect of certain payments means, sir, if it is already a payment, is it our income? If you are paying, is it our income? Then why you are claiming it as deduction? Deduction means what? So first of all, what is our understanding? If it's something is already included, then we are subtracting. Then that is called as deduction. Here, deductions they are giving with respect to certain payments. I mean something, these are something like our expenses. There is outflow only here. There is no payment you are making. I cannot use the word expenser because certain cases these would be savings also. Okay, but these are in respect of our certain payments. So when you made a payment, you have cash outflow only. There is no inflow. So it's not included in the above total income. So okay, let's say take it the above example, sir. I have paid LIC premium, sir. 1,50,000 I am having LIC premium which I can claim as deduction under ATC. Now I am having long-term capital gain, salary income, lottery income. So these are the incomes I am having. Now I paid LIC premium. So LIC premium I paid, it's what? It's a payment nature. But they are saying what? You can claim it as deduction. So why they are giving such thing? Now first understand the basic thing, sir. Here there are so many payments, but still you could subtract them. The reason is like government want to encourage you to do those do those kind of payments or those kind of investments. If government wants you to take LIC, that's why out of your income 1,50,000 they are reducing. They are not taxing 1,50,000. Why? Because you invested in LIC that 1,50,000. To that extent they don't want to tax. Okay, or else mutual funds. You invest in mutual funds, so they again to that extent they don't want to tax you. That's why they are allowing you the deduction there. Okay, or medical insurance premium they want you to take. Sir, why government is encouraging these things? Sir, understand very basic common understanding, sir. If a person didn't take policy, he suddenly kicked the bucket. Family has no other income, security and all, so they will fall below poverty line. I mean, maybe they were good economically till that point of time, but when the income generating person, the sole income generating person was expired, the family went into a below poverty line situation. Then who is the one to take care? Obviously, okay, relatives and all don't tell. So some cases it might happen, sometimes it not happen. So then obviously the burden is on whom? Government only. Okay, so that's why if at all that family has an insurance policy, then they have that sum insured. With that they might have lived properly. Okay, so that's why the point is like the government wants to encourage taking insurance policies. Second one, medical insurance policy. If you don't take medical insurance policy, what's the problem to government? If you don't have medical insurance now, then you'll go and use our Arigishri in Telugu states means. Okay, then again cost to whom? Government. If you are having medical insurance premium, then the medical insurance you will claim. Okay, again government wants to encourage what? Medical insurance premium. Again, housing loan principal repayments. Again the same thing, sir. If you take a housing loan and you are constructing your own house, then government don't want to construct a house for you. Otherwise government is constructing houses for the poor and all. So that's why government wants to encourage, encouraging you to do certain savings or certain payments or certain expenditures. Since you are doing them, they are giving you some kind of benefit. Okay, an incentive they are giving in the form of what? To the extent you spent in the ways they said, they are not taxing. Let's say you spend 3 lakhs, then the 3 lakhs will be given to you as deductions. So understand, these payments you are making are not incomes, but still to the extent of income you earn. You 10 lakhs, but you spend for 3 lakhs. So this 3 lakhs they will not be taxing, the balance 7 lakhs only they want to tax. Understood na sir this point? Then there is other type of things also, sir. The other one is like in respect of certain incomes. So the deduction will be allowed with respect to incomes as well. First of all, income, it should have been included already in the any of those 5 heads. Okay, one best example is there is savings bank interest deduction under 80 TTA. Savings bank interest deduction under 80 TTA. So if at all you are having money in your savings bank account and from that you earn interest, then you will be getting deduction under 80 TTA to the extent of 10,000. Senior citizen TTB 50,000, otherwise you will be getting 10,000. Sir, these incomes, first they will be included under IFOS head or capital gains, whatever is the relevant head, they will be included in income, and afterwards again they can be claimed as what? Deductions. Okay, so payments related na straight away deduction. Income related na first you should include it as a income, and then again you will be claiming it as a deduction. Another example also I'll see. 80 CCDs are their contribution to NPS. So NPS is a retirement related, you are making like just like as pension fund, gratuity fund, NPS is there. For that NPS, employee will contribute as well as employer will contribute. So your money you are contributing na, it's like a payment one, employee contribution. Whereas employer contribution na, you are not contributing. Who is contributing? Employer contributing for whose benefit? Employee's benefit. So for your benefit he is giving na, first it is your income. You don't receive it directly, but still it is your for your benefit na, so it is your income. And again, since it is for a good cause, for securing your retirement, they want to give deduction as well. Okay, so first you will treat it as income. Under which head, sir? Employer-employee relationship. Salary side you will treat it as income, and again the relevant amount you will claim it as deductions. If it is like income related na, first include it as income and then again claim deduction. Payment related na, straight away you will claim deduction. Will reduce from GTA to the extent allowed. To the extent allowed. In respect of certain incomes, sir, first include such income in respect to head. First include such income in respective head. Unclaimed deduction and unclaimed deduction to the extent allowed. First include such income in respective head. First include such income in respective head. Unclaimed deduction to the extent allowed. So this is the fundamental mistakes people will do, sir. So that's why I am focusing here only. You know 80 TTB, but you will overlook what? Will not include it in the IFOS set, but straight away will take 50,000 as deductions. Okay, you think it is correct only, but you will not get the marks which you decide. Sir, then again, another way, so like here it is not needed. I hope like you know this much level clarity. The deductions at a basic level, if at all you are listening for the first time income tax, then we'll classify them into two types, like general deductions, specific deductions. General deductions na, these chapter 6A deductions. Specific deductions na, which come under that particular head. Like under house property head we discussed like the municipal tax or the standard deductions. In PGBP there are so many deductions. Every expense we call there is as deduction only. Depreciation will reduce there, deduction only. Rent, repairs, whatever you pay, that we call it as deduction only. Okay, so what we are discussing are like general deductions. These are not relevant to a particular head, or only for particular head income only these are allowed, not like that. So these are called as what? General deductions. Okay, then next fourth point, sir. the following deductions can be made only when the return of income is filed. Following deductions can be made only when the return of income is filed on or before the due date. Only when the return of income is filed on or before the due date. Following deductions can be made only when the return of income is filed on or before the due date. Sir, ROI not return on investment. So then, first one, sir, 80I series. 80I series. Within the 80I only, like there will be 80I, 80IA, 80IAB, IAC, IB, IBA, IE. So these sections doesn't have much relevance. Back then in 2016-17 only they were losing their relevance. Okay, so I mean they used to give deductions, sir. So like 80, IA, IAB, these are like certain companies where under one section there will be startup companies. For startup companies, their profits would be given as whole profits, whole income would be given as deduction, or 50% would be given as deductions. Or which were into these real estate projects and all, they used to give 100% deductions or 50% deductions. So like that, so based on certain sectors, they used to provide those kind of deductions. But now there is an equivalent section called section 35AD under PGBP. So then these sections lost their relevance. Now these sections doesn't have much significance, but if at all, if they refer any section also, these deductions you can claim only when return of income is filed on or before the due date. When you are filing a belated return, what is called belated return, sir? Same. We'll tell belated happy birthday, na? When belated happy birthday, when the birthday is over, then we'll call it as like, I mean, after 2 days, 3 days, if you remember, then you will tell belated happy birthday. So here also, after the due date, you file return of income, belated return. So with belated return, you cannot claim 80 I series deductions. Then, so just write down the section number, sir. Don't ask all these explanations. We'll be anyhow discussing afterwards. 80 JJA, 80 JJA, 80 LA, 80M, 80P, 80QQB, 80 RRB. JJAA, LA, ATM, ATP, ATP, 80QQB, 80 RRB. The only reason why you might have felt deductions chapter stuff now because of these section numbers. They don't have names. Section numbers are there, names. It's okay. So why the PGBP TDS deductions chapter are only tough now? There only will use more section numbers. There is no something like format kind of. Okay, so you should memory, sir. This is purely based on your memory retention power only. Okay, so how many ever times you revise? That many, I mean, that fast you could remember. Okay, and the next thing is like if you have already did your articleship, then these things would have been easy. TDS, deductions, PGBP. If you didn't did articleship, because you will know, sir, if you are into articleship, you will file individual returns. Obviously, you will go through all these deductions. Okay, if you file for business, any business client or for a company and all, then you will do PGBP related, and then their TDS workings will be there. There will be a separate computation sheet we will do for only TDS. So then you will understand those things. But the problem is like, we might not did at many cases, like so other states maybe they are doing. Maybe if they are doing, if you are doing industrial training and only into a specific area, then also you might not understand these things. So there is no other option, sir. In any corner of the world, if you need to remember these things, now you need to by heart only. There is no other capsules here. Just to take and go to exam. Sir, again, there is a question like return of income is filed, but audit report is not provided. So when there is a tax audit applicable, it's not just filing the return of income. After filing return of income, a tax audit report also has to be submitted. So this fellow, within the time, he's filed the return of income, but he didn't submitted the audit report. So then there is no problem, sir. You can avail deductions because the section clearly says like return of income has to be filed before the due date, not the audit report. So write down audit report can be filed belatedly. Audit report can be filed belatedly, but return of income should be on or before return of income shall be filed on or before due date. Return of income shall be filed on or before due date. Then section 80 CCE. Okay, what this section says means 80 CCE. Okay, this section is a head of a group, sir. Under this group, small gully letter, 80C, 80CCC, ETCCD, subsection 1. Okay, for these three people, 80CCE is the leader. Okay, and it says like all these three sections together, the maximum deduction allowed is all these three sections together, the maximum deduction allowed is 1,50,000. So first I am starting with 80C, sir. Here 80C. Deductions with respect to specified investments. So here the payments you are making are like not just expenditures, they are like investments. The government want you to do such kind of investments, that's why they are giving you deductions. The first one, I mean, ETC is the eligible persons here is like eligible or like eligible SSEs are like individual HUF. Need not to be resident also. Individual and HUF can avail ETC deductions. And the maximum deduction allowed under this section is like 1,50,000. Maximum 1,50,000. So first we are starting with under this, like sir, there are so many investments that can be made. First one is like life insurance premium. So you have taken a life insurance policy, and for the life insurance policy you are paying premium. For the life insurance policy, premium has been paid. Life insurance premium. So individual can pay this premium for himself, spouse, children. So children, sir, they don't use the word dependent or independent, they just said it as like major or minor. They didn't use the word dependent or independent. If they use the word major also, right? So that's why irrespective of dependent or independent, you could claim the deduction for child, himself, spouse and child. And if it is like a HUF, then the policy can be, the premium can be paid with respect to any member. The policy may be related to any member. Life insurance premium, individual, he can pay for himself, spouse, a child, and HUF can pay it with respect to any member. Then, so let us take the policy tenure. Policy tenure like year 1, year 2, year 3, so on. Let's say the policy is for 30 years. This is the whole policy tenure. Year 1, year 2, year 3, like that it goes till 30. So all these years what you will do, you pay premium. Yearly some amount you will be paying as premium. This premium you paid here is right. So that premium is allowed as deduction. The premium you pay here is allowed as deduction. Allowed as deduction. The premium you paid is allowed as deduction. But at the end of the policy, that means in the 30th year, you will be receiving the maturity value. Okay, the matured amount would be maturity value. So this maturity value is a total of sum insured plus some cases they will give bonus, some cases they may give interest. Sir, bonus, interest are not like mandatory things. They may be there, may not be there. Okay, sum insured will be a must in the maturity value. Sir, let's say what insurance companies will do, sir, out of the money you pay as premium, they will be investing them in somewhere. Okay, if they earn more returns than the promised sum insured to you, then out of the profits they earn, they'll give you some amount to you as like bonus only, or else some cases it would be given as like interest. So the sum insured, let's say, sir, you need to pay every year like 30,000 as premium amount. After 30 years, the amount, the sum insured they said is like 50 lakhs. But every year when they invested their 30,000 and all, they made so much, like, assume like they have made 1 crore. LIC has made 1 crore. But they promised to pay you how much? 50 lakhs only. So they got 50 lakhs profit only on your policy rate. So out of the extra profit 50 lakhs they got, some amount they may give it to you only as bonus, maybe some 10 lakhs. Then sum insured you are getting, and even bonus 10 lakhs you are getting. The other way, sir, you paid like 30,000 every year. They promised sum insured like 50 lakhs. But when they invested, they got only 40 lakhs. They have lost now. But still, the insurance company only has to bear the loss. They will be paying a minimum of 50 lakhs. Okay. So when they get more profits, they may give you bonus or interest. Okay. So that amount also will be included in the maturity value. Sum insured, bonus, and interest. So this maturity value has exemption under section 10. Not relevant as for us. I'm just writing there is an exemption. It's not like straight away exemptions. There will be so many conditions here. Exemptions under section 10(10)(d), not relevant at all for us. For us, only the relevant thing is like this deduction. So we'll talk about this deduction. Okay. So deduction will be claiming every year because we are paying premium every year. But whereas the exemption is a one time. At the time of maturity, when you receive that lump sum amount, you can claim the exemption. So now we'll talk about the deduction available, sir. Policy issued. When the policy has been taken, we should check. Sir, with respect to this, there are amendments, sir. With respect, not current attempt related amendments. In between, like there were so many amendments. The problem is like, we cannot only read the recent thing. Okay, because a person might have taken policy in 2008. Now also he might be paying the premium because from 2008 the policy goes on for 30 years. 2018, 28, now also he is paying what? Premium only. That client came to you. You cannot say like, I only know the recent law and all, the past one I don't know, that we cannot say, right? So that's why in this particular point we should know the old provisions as well as the current ones also. So that's why policy issued before. So there will be 3 branches, sir. So adjust the place accordingly. Policy issued on or before. Policy issued on or before 31st March 2012. Policy issued on or before 31st March 2012. Then the deduction available is like premium paid. The premium paid or 20% of sum insured, not maturity value, sir. 20% of sum insured, whichever is lower. When the policy is issued before 31st March 2012, on or before 31st March 2012, then the reduction amount is like the premium you paid or 20% of the sum insured, whichever is lower. When it is like after April 2012, after 1st April, okay, on or after 1st April 2012, then in such cases it is like premium paid or 10% of sum insured. Premium paid or 10% of sum insured, whichever is lower, premium paid. So previously it used to be 20% or premium paid, whichever is lower. Now it is only 10%. The third one is like, sir, if such person is like disabled person. If he is a disabled person and the policy has taken on or after 1st April 2013. So now you will have a question. What is before 1st April 13? Before 1st April 13, there is no distinction between disabled person and normal person. It used to be the same limit. Only from the year 13 they have started like for disabled person we should give little more extra deduction. That's why from 1st April 13 only it is there. Okay. So before now it is same for both normal and disabled persons. On or after 1st April 13, then it is like premium paid or 15% of sum insured. Premium paid or 15% of sum insured, whichever is lower. Premium paid or 15% of sum insured, whichever is lower. So under 80C, the deduction is like premium for a normal individual, sir, who has paid, taken the policy after 2012, na, then it is like 10% of sum insured or premium paid, whichever is lower. After 2013, 1st April 2013, for a disabled person, it is like what? 15% or actual premium paid, whichever is lower. What is before 2012? Then it is 20% instead of 10%. Okay, so this is about the life insurance premium, sir. So we'll discuss the other ones. The others and all will be one-liners only, sir. Second one, so what other investments you can make? One investment is like life insurance policy or life insurance premium you can pay. The others are like you could pay contribution to unit linked insurance plan. Contribution to unit linked insurance plan. Sir, this is little bit similar to that of mutual funds. You will contribute every year premium. Okay, that premium amount will be invested. Okay, out of that invested amount, they'll find out like finally how much has been it became. Let's say it became 1 crore. They'll promise you a minimum amount as well. Minimum amount, let's say they said like 50 lakhs. But whereas the amount, there is like high rate of returns or high incomes has been generated based on those investments. The insurance company has made it as like 1 crore, but the promise they made to give you is like sum insured is only 50 lakhs. Now you have both the options. You can take 1 crore also. If at all the actual amount has become only 40 lakhs, then you will take what? 50 lakhs. Okay, so this is like unit linked insurance plan. In this, what the insurance company is having benefit means, the benefit is like out of the premium amount, they will not invest fully. They will take certain part for the risk. If you remember like GST, value of supply, there will segregate. From the premium paid, will segregate like the risk part will segregate and the investment part also will segregate. Investment part is not taxed, risk part is only taxed. Rule 32, it will come. Okay. So here also, the risk part relevant only, risk part relevant and all, they will not invest. So that they will be taking as their money. The savings part relevant only, they will be investing. That amount they will be comparing. Okay, minimum amount and the total amount. Okay. Then premium paid. Premium paid for contract of deferred annuity. Premium paid for contract of deferred annuity. So deferred annuity na, you will be paying policy premium now. You will not take lump sum at the time of retirement. You will be taking it like pension, monthly, in installments you will be taking, then that is called as what? Annuity. Premium paid for contract of deferred annuity. Then fourth one, sir, contribution to PPF. PPF means Public Provident Fund. Then SPF, Statutory Provident Fund. Then RPF, Recognized Provident Fund. Contribution. Sir, contribution here it's like employee contribution. Employees contribution to PPF, SPF, RPF. Contribution to PPF, SPF, RPF. But whereas under the PPF, sir, so Public Provident Fund and all, you need not to be an employee also. Even a self-employee can contribute to the Public Provident Fund. You are a self-employed, sir, but still self-employed also will retire, right? At some point of time, he cannot generate income that time. But still, his retirement has to be secured. So that's why they have introduced something called Public Provident Fund. So now Public Provident Fund related, the contributions can be made to yourself, or for your spouse, or even for your children. Whereas under SPF, RPF, those things are not possible, because SPF is for government employees. Recognized Provident Fund is for employees like private employees. Whereas Public Provident Fund can be, in Public Provident Fund, the employees can also participate and even self-employed can also participate. So under PPF, it can be on the name of, the PPF can be on the name of individual na himself, spouse, child. HUF na, it can be under any member name. So you can make PPF contributions with respect to your spouse as well. Still you can claim it as like ATC deduction. Then contribution to approved superannuity fund. This is also a retirement fund only, sir. Contribution to approved superannuity fund. I'll share, Tejasvi, I'll share the notes like immediately after the class in the WhatsApp group. Contribution to approved superannuity fund. Sir, you write notes along with me. If you don't write along with me notes, forget about subject, you will get sleep. Okay, so the only reason majorly why we are writing notes na, to make you attentive. It's okay, so I could write the notes before, like before itself I could write notes and come to the class. Then again another 15-20 hours time also will get saved for me. But the problem is like you'll not be engaged along with me, you'll be going into the sleep mode only. Contribution to approved superannuity fund. Then any sum paid or deposited to Sukanya Samruddhi account. Any sum paid or deposited to Sukanya Samruddhi account. To secure the girl child's future, sir, this Sukanya Samruddhi scheme has been launched. Till 18 years, the parent or guardian of girl child will be depositing into this Sukanya Samruddhi account. The amount can be withdrawn once she attains the age of 18, can be used for her studies or for marriage, so like that. Okay. Then subscription to National Savings Certificate. Government will issue, sir, these certificates. Subscription to National Savings Certificate. Nothing but government will borrow from us, they'll take money from us and they'll issue a certificate. On that certificate they'll mention something like debenture only. This is subscriptions to National Savings Certificate. Then 8th one, contribution to approved annuity plan of LIC. Contribution to approved annuity plan of LIC. Approved annuity plan of LIC. If you go in detail, sir, like there certain LIC will have different policy names and all. They'll notify which policy is covered here and all. Okay. The 9th one, contribution to notified units of mutual funds. Contribution to notified units of mutual funds. Contribution to notified units of mutual funds. Then payment of tuition fee. This is important, sir, will be asking many times in the questions. Payment of tuition fee. So tuition, not school tuition. For the purpose of education, the college fee, all those will come. The problem is like, see, I mean, when you went to a normal kind of schools and all, so there much differentiation will not show. So if you go to this like big multinational schools kind of, there will be building fund, they'll put separately. Then books related they'll give separately. Corpus fund again they'll say like something separately. Okay, books they'll keep separately, van fee they'll keep separately. So out of all those fees, maybe together for a year it might be some 2.5-3 lakhs. But in that, the tuition fee na, what they are charging for providing education, not for the amenities and facilities. Only for education, whatever they are charging is called as tuition fee. That might be somewhere like some 45,000 to 70,000, that range. That alone is eligible for deduction. The other deposits, other fees and all they'll collect will not be eligible for deduction. Only the tuition fee, I mean the related to education relevant element. Payment of tuition fee. In a university, it can be an university related, college related, school related. University, college or school. Okay. You'll have a question like, sir, I paid to CMA coaching fee, can it be claimed as deduction here? It should be a full-time education. Sir, we are coming to classes full time now, but still ours is part time only. Full time education, and then many people will go outside India for doing masters. So there they will be doing in like different universities, and they'll be paying so much of fees. That can be claimed as deduction or no? Full time education in India. In India. Bhargav might have 6 children, but still the deduction is allowed only up to 2 children. Don't ask those silly interlevel doubts, sir. What if I am having twins and all? That time it's allowed. Like first, I mean, when in the second time, if you are, I mean, if they are having twins, then for 3 children it is allowed. Maximum 2 child. So payment of tuition fees, sir, it will come most frequently. So the tuition fee should be for a university, college, or school. Okay, even preschool is also allowed. Okay, but it should be a full-time education in India and maximum 2 child. Then 11th one, sir, repayment of housing loan. Repayment of housing loan. So the loan is for what? The loan is for the total of house price. The total of house price plus stamp duty value house price na how should we take it the house price, sir? It's the stamp duty value plus registration charges together. That only will be taken as like the house. To that extent, whatever is the loan finance, that will only be considered. So the stamp duty value might be 50 lakhs, market value 2 crores. Understand, the stamp duty value is like only 50 lakhs, market value 2 crores. You got 70 lakhs loan. Then the loan amount will be considered as only to the extent of what? Stamp duty value and registration charges only. So house price will be taken to the extent of what? Stamp duty value and registration charges only. Okay. From where this housing loan should have been taken? You simply, sir, for the sake of deduction from your friend, you are writing a note simply and saying like, from my friend I have taken loan and I am paying installments and all. Can you claim deduction? No, sir. The housing loan should have been taken from government. Government, if they give. Then from a bank or from a society. The loan should have been taken from a government, bank, society, or from LIC, or from employer. If he is a government employer, only in those cases the principal repaid is allowed as deduction. Then subscription to certain equity shares and debentures. 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 Then investment in 5-year term deposits. So term deposit means till the completion of the term you cannot withdraw. 5-year term. So 5-year term deposits now, when you make that deposit till 5 years you cannot withdraw. So investment in 5-year term deposit, and this deposit also shall be made in a scheduled bank. In a scheduled bank. Then 14. Subscription to subscription to notified bonds issued by NABARD So if any bonds issued, notified bonds issued by NABARD, then contribution to National Housing Bank term deposit, contribution to National Housing Bank term deposit, contribution to National Housing Bank term deposit. Investment in 5-year post office term deposit. Investment in 5-year post office time deposit. Investment in 5-year post office time deposit. The last one, sir. Deposit in senior citizen savings rules. Senior citizen savings as per senior citizen savings rules. Deposit as per senior citizen savings rules. So out of this, like all those things will not, all these items will not come frequently. So like life insurance will be coming frequently. Then unit linked insurance from deferred annuity, those will not come frequently. Then contribution to PPF, SPF, RPF. So first one is like LIC, you should remember. Second one like contribution to SPF, PPF and RPF. Then which will, okay, this Sukanya Samriddhi account, which you will remember, sir, you need not to read that also again specifically. This tuition fee will come, third one. Housing loan will come frequently, fourth one. Then this 5-year term deposit will come frequently. Post office one. So total how many? 1, 2, 3, 4, 5, 6 points you should remember. LIC, SPF, PPF, RPF contributions, second one. Tuition fee, housing loan, 5-year term deposit and post office 5 years. Okay, the 6 points should remember here. ATC. Then we are moving on to ATCCC. ATCCC. Sir, many times we'll confuse like, because ATCC is like contribution to pension fund of LIC. But if you refer to the ATC points also, there will be like annuity plan of LIC, so unit linked insurance plan of LIC, so LIC will be coming. So we'll be confusing like whether it is under ATC or ATCC, so that's quite common, no problem. There it happens always like many times. So if it is like LIC na, always go to take under the 80CCC only. 90% of the time LIC if they are referring, other than life insurance. Life insurance you live. Life insurance na, it need not to be from LIC. From any insurance company you can take life insurance. If they refer the word LIC, then most probably it will be under what? 80CCC only. Okay, 80CCC contribution to pension fund of LIC. Contribution to pension fund of LIC. So here eligible SSC is individual, sir. For eligible SSC, individual only can claim deduction under 80CCC, and the maximum amount allowed is how much? Rupees 1,50,000. Maximum amount is rupees 1,50,000. Sir, under 80C 1,50,000 and again under 80CCC 1,50,000. So total 3 lakhs we can claim. CC will come and says like overall you can claim how much? 1,50,000. Okay. So another 10 minutes, sir. Then only I'll be leaving. 80CCD. Deductions. With respect to contribution deduction with respect to contribution in pension scheme NPS. Deduction with respect to contribution in pension scheme or NPS. Sir, 80CCD has 3 subsections. 80CCD subsection 1, 1B, 80CCD subsection 2. First, we have started with 80CCE limit, maximum of 1,50,000. That limit of 1,50,000 is applicable together for 80C, CCC and CCD subsection 1 alone. Okay, so I mean the deduction which we refer in 1B and 2 are in addition to that of 1,50,000. Okay, be clear there. Deductions with respect to contribution in pension scheme or NPS. Okay, so let me take 3 branches. Three branches, sir. So under the first branch, 80CCD subsection 1. Second branch, 80CCD 1B. Third branch, 80CCD subsection 2. Third branch is 80CCD subsection 2. Sir, 80CCD 1 and 1B, this is related to employees' contribution. Employee contribution. Sir, when employee is contributing, there is a payment. Okay, it's a straight away deduction only. So like when we have classified deductions into 2 types. One is like the payment type, the other one is like income kind of. So this is like employee contribution, so this is like payment kind. Whereas 80CCD subsection 2 is like employer contribution. Employer contribution. Sir, on behalf of you, if employer is paying, then that is a perquisite for you. Okay, if any cost which you need to incur, if it was met by some other person, so it's something like a perquisite for you. Okay, so perquisite, you are directly getting the benefit, not in monetary form. You are directly getting the benefit, then we call it as like perquisite. Okay, understood, sir? When the employer gives you a car, It is not giving you money. Straight away is giving you a benefit or facility. Then that is called as perquisite. Same here also, when employer is contributing directly for your benefit. Okay, so you are not getting money into your hand, but the benefit you only will be enjoying. So it's like what? Perquisite only. So perquisite now it is also an income taxable under that salary. So first, whatever is the employer contribution, you should include it in the salary set. Then again, to the extent allowed here, you can claim it as deduction. Sir, you got 10 lakhs as employer contribution. 10 lakhs first you include it as what? Income in the salary side. But then again you will check here how much is allowed as deduction. So to that extent only you will be subtracting. You will be reducing. So 80 CCD subsection 1, 1B, 80 CCD subsection 2. See, first we will discuss 80 CCD 1. Two types of employees, sir. One is like salaried employee, others na self-employed. Salaried employee. To NPS also, non-salaried employees also can contribute. I mean self-employed also. That's why salaried employee, and here there is even others as well. For salaried employee, the deduction allowed is like actual contribution. Sir, contribution na, which contribution we are referring, like employee's contribution na, employer contribution here? Employee contribution, because we are under the employee contribution there. So actual contribution or 10% of salary. %% of salary. Salary means basic plus DA farming part. Salary means basic plus DA farming part. So actual contribution or 20%, 10% of salary out of these two, whichever is lower. Actual contribution or 10% of salary, whichever is lower than others. With respect to others, sir, again, it is like actual contribution actual or 20% of gross total income. Actual or 20% of gross total income. %% of gross total income. So salaried na 10% of salary or actual, whichever is lower. Self-employed na 20% of gross total income or actual, whichever is lower. Then 80 CCD subsection 1B. Okay, 80 CCD 1B. Here additionally another 5,000 is given, sir, as deduction. Additionally, sorry, 50,000, not 5,000. Additionally 50,000. Additionally 50,000. What is this additional? So this explanation will make it, will help you in understanding properly. Where deduction under section 80 CCD subsection 1 is restricted because of 1.5 lakhs cap or percentage cap. So because of this percentage cap or because of this 1.5 lakhs cap, if any case you cannot avail an amount, then that amount, the balance can be taken as 50,000. Sir, I'll give you an example. So bracket right also, refer example. Refer example also. where deduction under 80 CCD 1 is restricted because of 1.5 lakhs cap or percentage cap. It's okay. So let me go to the example, sir. So take like salary, we'll take it as like 25 lakhs, sir. Salary 25 lakhs. Employer contribution to NPS is like 1,80,000. His employer contribution is like 1,80,000. No other ETC, ETCCC deductions. So in this case, so we need to calculate how much is allowed under 80 CCD subsection 1 first. So under 80 CCD subsection 1, how much is allowed, sir? Actual contribution. How much is the actual contribution? 1,50,000 or 10% of salary. Salary given straight away na. How much is the salary, sir? 25 lakhs. So 10% of 1 lakh, sorry, 180 CCD subsection 1, sir. The actual is how much? 1,80,000 or 10% of how much? 25 lakhs. So total, whichever is lower now, how much is lower, sir? 1,80,000. But can we claim 1,80,000? No. Why? Because the 80 CCE comes into picture and says like how much? 1,50,000 only. Can claim 1,50,000 only because of 80 CCE. So how much you are losing here? The benefit, how much you are losing here? 30,000. This 30,000 you can claim under 80 CCD 1B. Balance 30,000 claim under 80 CCD 1B. Balance 30,000 claim under 80 CCD 1B. Clear this one? Sir, one more point here. If at all they have actually contributed 2.2 lakhs, then what is the lower amount? 2.2 lakhs only. 1,50,000 they claimed under 80 CCD subsection 1. Balance how much is there? 70. Can they claim 70 under 1B? No, again restricted to 50,000. What the other 20,000? What we can do? That other 20,000 is gone only. There is no carry forward option, sir. You should remember that one also. If any deduction amount which you cannot claim in the current year, there is no option of carry forwarding and claiming it. Okay. This is one way, sir. The other thing is also there here also. Okay. Another example also I am going to give. Salary 15 lakhs. Employer contribution 1,30,000. Sorry, fine. 1,30,000 is also fine. No other ATC, ATCCC deductions. So now tell sir, how much is the deduction allowed under 80 CCD 1? No sir, I should take here, not 1,30,000 here I should take. So salary make it as like only 10 lakhs, sir. Salary make it as only 10 lakhs. Salary make it as 10 lakhs. How much we wrote as employer contribution, sir? That can be same. Salary will write as only 10 lakhs. Now if you see, sir, under 80 CCD subsection 1, how much is allowed? Like actual. Actual is how much? 1,30,000 or 10 percentage of 10 lakhs. That means 10 lakhs. That equals to how much? 1 lakh. But actually how much you contributed? 1,30,000. But it is restricted to how much? 1 lakh only. The other 30,000, because of this percentage cap, you cannot claim. Whereas in the previous thing, percentage wise, there is no problem. Because of the overall monetary cap, you are losing the 50,000. But here you are losing because of this percentage cap. So whatever, okay, this 1 lakh you can claim under 1 lakh can be claimed under 80 CCD subsection 1, no problem. But whereas the other 30,000 which you cannot claim under 80 CCD subsection 1 can be claimed under 80 CCD 1B. Here 1 lakh can be claimed under 80 CCD subsection 1. Whereas other 30,000 which is actually contributed can be claimed under 80 CCD 1B. Can be claimed under 80 CCD 1B. Okay. So it was disallowed under 80 CCD 1, but still that part can be claimed under 80 CCD 1B to the extent of how much, sir? 50,000. Okay. Then 80 CCD subsection 2 related, sir. So first we'll treat it as what, sir? First it is an income. So we'll take it under salary set, employer contribution. First. Take it as income under salaries. First the employer contribution will take it as income under that salaries. Then deduction. How much is the deduction allowed, sir? For allowing the deduction, we should write again government employer or non-government employer here. This 80 CCD subsection 1B 2 is very important, sir, because this has a difference in like new regime and old regime. Government employer and if he is other employer. This is other employer contribution. So we are talking about who is the employer? Government employer, other private employers. If he is government employer, then the deduction allowed to him is, allowed to the, sir, contribution made by employer. Deduction will be claimed by whom? Employee only. Okay. So employer, to the employee, how much is deduction allowed? Actual. The actual amount contributed or 14% of salary. Actual or 14% of salary, whichever is lower, if he is a government employer. If he is others, then actual or 10% is there and even 14% is also there, whichever is lower. When 10%, when 14%, 10% is under old regime. 14% is under the new regime. I mean, if at all you opt for new regime, then for employer contribution, they can avail deduction up to how much percentage, sir? 14%. So deductions are government employer or others. Government employer, na, then how much is that? I need to zoom it. Okay. Actual or 14% of salary. If it is like other employer, actual or 10% of salary. If you have chosen the old regime. New regime, if you have been chosen, then actual or 14% of salary. Okay. Okay, sorry. Yes, correct only. I have written wrongly. It's employee only. Sir, here this is not employer, this is employee only. Because employee is only covered under 80 CCD subsection 1, not employer, employee. Okay. So that's all for today, sir. Tomorrow we'll be discussing most of the deductions chapter part, because the other sections will be simple sections only. We could cover a little quicker. Good morning, all. So in last class we have started discussing the deductions. So quick recap of what you have discussed. So the total of deductions amount cannot exceed the gross total income. And then when a person is having special rate incomes such as like long-term capital gains, short-term capital gains, casual incomes, then to the extent of such income we cannot claim deductions. Okay. So we have did an example as well. So if you look at the example there, he is having long-term capital gain under 112A lottery income. On that we cannot claim deductions. That's why even though he is having total 3,50,000 amount, it is restricted to the extent of 2,50,000 only, because out of all those incomes, the incomes which are eligible to reduce with the deductions is like only salary income. Then deductions can be classified into two types. One is like payment linked, payment based or payment related. The second one is like income related. So if it is payment based, there is no income for you. You are just making an expense or you are making an investment. So then you are claiming deduction. Okay. So straight away you will claim them as deductions. The second type is like you are having income and then again claiming deductions. Savings bank interest. Yesterday we have discussed about 80 CCD subsection 2, employer contribution to the NPS. So when employer is contributing for the benefit of employee, it's an income to the employee. So first it should be included as income in the head salary, and then again it will be claimed as deduction. Okay. Then out of these following deductions can be claimed only when the return of income is filed on or before the due date. What are those deductions? Are 80I series. Under 80I there are so many sections. Then 80 JJA, JJAA, LA, M, P, QQB, RRB. These deductions can be claimed only when the return of income is filed on or before the due date. There is no condition regarding the audit report. So for you need not to worry about audit report whether it is filed or not. Then 80 CCE. 80 CCE says like it gives a overall combined limit for 80C, CCC, CCD subsection 1. So what is the overall combined limit, sir? 1,50,000 you can claim as deduction together under all these three sections. Then first we have started discussing with 80C. 80C, it gives deduction with respect to certain investments made. Who are eligible to claim this deduction? individual and HUF, resident or non-resident, sir, because we didn't specify it there as resident. So that it could be individual and HUF, resident or non-resident. Then maximum deduction that can be claimed under ATC is how much? 1,50,000. Okay. The first one is like the first investment is like life insurance premium. So life insurance premium paid, the policy should be taken by individual for himself or spouse. If it is himself, spouse or child can be minor or major. Okay, that means it could be dependent or independent. Then HUF means any member. Then throughout the policy tenure, sir, every year you will be paying premium. So every year you will be claiming the deduction. But towards the end of the policy tenure, you will be getting a maturity amount from the policy. So that amount will be exempted under section 10, subsection 10D. 1010D. Okay, so that exemption is not relevant for us, but this deduction part is relevant. Okay, so every year you will be making the premium payment and it is eligible for deduction. So how much is actually eligible for deduction means, see, we need to check when the policy has been taken. If the policy is taken on or before 1st April 2012, on or before 31st March 2012, then the deduction available is like premium paid or 20% of the sum insured. Okay, sir, sum insured and maturity value are not same. Some cases it might be same, some cases it may not be same, because the maturity value includes sum insured plus bonus if any given and if any interest has been given. Okay, then if it is on or after 1st April 2012, then premium paid or 10% of sum insured. For a disabled person, it is like premium paid or 15% of sum insured, that is from on or after 1st April 2013. The others are like contribution to unit linked LIC, premium paid for deferred annuity, contribution to PPF, SPF and RPF. Sir, SPF and RPF now only for employee contributions only. Employee contributing to SPF fund or RPF fund. Whereas PPF, Public Provident Fund, there you can contribute to yourself or for spouse or for even children. HUF na can be for any member. Then contribution to any superannuity fund, amount paid or deposited to Sukanya Samriddhi account, subscription to National Savings Certificate, contribution to annuity plan of LIC, contribution to notified units of mutual funds, then payment of tuition fees for an university, college or school. Okay, for education, if any fees is paid, then that should be what? Full-time education, and that should be in India, maximum 2 children. Then repayment of housing loan. The housing loan should be taken from government, bank, society, LIC or from a government employer. And the house price plus, the loan amount should be within the stamp duty value plus registration charges together. Then the principal repaid can be taken as deduction here. Then subscription to certain equity shares and debentures, investment in 5-year term deposits, subscription to notified bonds issued by NABARD, contribution to National Housing Bank term deposit, 5 years post office time deposits and deposit in senior citizen rules. We have even identified which are of more importance also. Hardly like 6 points are there. Then 80CCC. 80CCC deduction when it will come? When the contribution is made to pension fund of LIC. Sir, for 80C, individual and HUF both are eligible. For 80CCC, only individual. That also only one investment is there. Pension fund of LIC. The deduction amount is 1,50,000. ATC 1,50,000 is there. CCC 1,50,000 is there. But still 80CC says what? Overall you can claim how much? 1,50,000 only. Then 80CCD. Deductions with respect to contribution in pension scheme or NPS, National Pension Scheme. Okay. So under this particular section there will be 3 subsections. What are those? 80CCD subsection 1, 1B, 80CCD subsection 2. 80CCD 1 and 1B both are related to employees' contribution to NPS. Whereas 80CCD subsection 2 is related to employer's contribution. Okay. So you think yourself as an employee, your contribution is eligible to be deduction under the 80CCD subsection 1 and 80CCD 1B. Whereas your employer contribution can be claimed under 80CCD subsection 2. Now you should understand here. Your contribution means it's like a investment or it's like an investment to you. Okay. There is only outflow. Okay. So you can directly take it as what? Deduction. Whereas employer contributing on behalf of you to the NPS, see, employer contributing to the NPS for whose benefit? Employee, your benefit only. Since for your benefit is contributing, first it is an income to you. So you should include it in the salary set. And again, you can claim it as deduction under the deductions chapter here. Okay. So first, with respect to 80CCD, sir, employee contribution only we are discussing. That also specifically 80CCD subsection 1. For a salaried employee, how much is the deduction that can be availed? Actual contribution or 10% of salary. Salary means what here? Basic plus DA forming part. Okay. Like inter level, we should not to do more research about what is forming part, not forming part and all. Straight away question they'll say what is forming part and all. So salary, basic plus DA forming part, on that we should do 10%, whichever is lower. If it is other than salaried person, I mean maybe self-employed, in such cases actual or 20% of gross total income, whichever is lower, that can be claimed as deduction. However, here also there is a maximum cap of 1,50,000. Okay. Sir, here 80CCD 1B, you can avail additionally how much as deduction? 50,000. When this 50,000 will come? Because of this 1,50,000 cap in 80CCD subsection 1, or because of this percentages caps, 10% of salary or 20% of salary, because of these caps, if any amount actually contributed, but you cannot avail it as deduction because of these caps or because of these limits, 20% limit, 10% limit, or because of that 1,50,000 limit. So that amount which you cannot claim as deduction there can be claimed under 80CCD 1B to the maximum of how much? 50,000. We have did 2 examples to understand that as well. Then 80CCD subsection 2. It is regarding what, sir? Employer contribution. First take it as income, then again we'll be claiming it as what? Deduction. Okay. Then quantum of deduction. If he is a government employee, is he a government employer or the employer? We should check. Government employer, then the deduction available is actual or 14% of salary. Salary means same, basic plus DA forming part. Others na, actual or 10% in case of old regime. Actual or 14% of salary in case of new regime, whichever is lower. So now we'll be starting with the sections are 80CCH, contribution to Agnipath scheme. Contribution to so Agnipath means it's not like a Bollywood movie. Chikni Chameli. So it's not about that. Here Agnipath scheme was designed for Agniveers. For army people. Okay, so it is Agnipath scheme is designed for Agniveers for army. So in this scheme, these Agniveers will contribute. Agniveer is nothing but is an SSC individual working in army. Okay, so now he'll be contributing 30% of his salary towards the Agnipath scheme. The same equal amount will be contributed even by the central government. Okay, so that is the contributions they will be made to the Agnipath scheme. So they brought a special scheme for them, sir, because their interest rate they'll put little high, and the government contribution is also more. Employee will contribute 30%. Employer is government only there. They will also contribute 30%. So which is like a high amount. They want to create a big corpus fund for them because their life will be at a high risk. That's why they want to have a more corpus fund. Okay, contribution to Agnipath scheme. Here there will be two contributions, sir. I mean two subsections, 80 CCH subsection 1, 80 CCH subsection 2. So first we'll discuss about 80 CCH subsection 1. Sir, under 80 CCH subsection 1, SSE is an individual. The eligible SSE is an individual enrolled in Agnipath scheme. Individual enrolled in Agnipath scheme. Enrolled in Agnipath scheme. The deduction equals to amount contributed. There is no amount monetary capture here. The deduction amount is like how much is the amount contributed. Since general people cannot be there, sir, here they will be contributing 30% like fixedly. So irrespective of like how much it is, like whether it is 1 lakh, 2 lakhs, they will be getting the deduction. There is no monetary cap here. Then 80 CCH subsection 2. This is what, this is central, the amount contributed by central government, sir. The contribution made by central government on behalf of SSE. So think and tell whether it is income or not. So if, sir, here this Agnipath scheme, Agnivir is nothing but an employee of central government. For him, his employer is contributing to the pension fund kind of. So it is for his benefit only, na? So it is also what first income. So you should treat it as income under the head salaries first. Okay, I am writing that one as well first. Treat as income under the head salaries. Then claim will be claiming deductions. Then deduction to the extent of amount contributed. Then deduction is to the extent of amount contributed. Deduction is like to the extent of amount contributed. Sir, one more thing, sir. This 80 CCH deduction is available in both the regimes. Available in both the regimes. 80 CCD subsection 2 available in both the regimes. Then 80 CCH subsection 2 is also available in both the regimes. Whereas all the deductions, all the other deductions which we have discussed till now are available only under the old regime. 80C, 80 CCC, CCD subsection 1, 1B, 80 CCH subsection 1. These are available only under the old regime. Whereas CCD 2, CCH 2, these are available under the both old regime as well as new regime. Then we are going towards, sir, 80D, section 80D. Sir, again saying in this chapter will not have a straight away sum. Will not be doing any questions also from this chapter. The only reason is like there will not be any straight question. Straight away like they'll give like 2 or 3 points in a PGPP sum or in a different tax computation sum. So you should just be identifying like whether deduction is available or not, what is the amount of deduction. Okay, so like in interlevel, there may not be a sum like where 6 or 7 deductions will be given at like one place. You will be finding out the total deductions available. Like that, there will not be any question here. Okay, deduction in respect of medical insurance premium paid, deduction in respect of medical insurance premium paid, or contribution to national health scheme. Contribution to national health scheme. So eligible SSE. Individual and then HEF. So individual can take medical insurance premium with respect to himself, spouse, dependent child, parents. With respect to parents are dependent or not. So they need not to be dependent. Child need to be dependent. Himself, spouse, dependent children, parents, dependent or not. And HUFs are any member. For the purpose of this section, sir, there will be something like micro family. Parents will be given, will be specified separately, and they will be referring family separately. So family means here himself, spouse, and dependent children is called as family. For parents again, they are also eligible for deduction, but they will be specified separately. Okay, why means, sir, here they will say like you could take medical insurance premium, and let's say the amount paid is like 20,000. The 20,000 can be claimed as deduction. But for parents also you taken medical insurance premium. For parents also there will be, you paid another 20,000. That also can be claimed as deduction. The limits given are here separately. For the individual, spouse, children, there is a separate limit, and for parents there is a separate limit. That's why. Okay. So let us take 3 columns, sir. For individual and family, parents, and in case of HUF, parents of home, individual. So first one, sir, contribution to NHS na National Health Scheme, sir, or medical insurance premium, medical or health insurance, medical or health insurance premium, contribution to NHS or medical or health insurance premium. So then what is the quantum of deduction available, sir? For individual and family, as we said, like there is a separate limit. For parents there is a separate limit. For individual and family, sir, the limit is like here 25,000. For parents, if for parents also he has taken, there is another separate limit of 25,000. Sir, understand here, 25,000 means you cannot take straight away flat 25,000 as deduction. Actual premium paid or 25,000, whichever is lower. So here we are discussing about the maximum cap. The maximum is like 25,000, 25,000, and if it is like for HUF, for the total of all the members together, it is 25,000. That means for an individual, overall he is getting 50,000. For himself, spouse, children, and 125,000. For parents, another 25,000. So overall he is getting 50,000 here. If they are senior citizens, if any member, senior citizen, if any member like out of family, they could be anyone, could be senior citizen, out of parents or from HUF, then these limits will be enhanced to 50,000, sir. Let's say if individual and his wife are not senior citizens, but whereas parents are senior citizens, then what is the total limit is available? For individual and his family, 25,000, parents another 50,000, so overall 75,000. So let's say individual is senior citizen, obviously his parents are also senior citizens, except in Manam movie. Okay, so like except in Manam movie, so where like the child will be, the parents will again reborn as children, right? So here if you take like for parent, for individual 50,000, again for children 50, for parents 50,000, for individual 50,000, if all of them are like senior citizens, then in that case the overall deduction available is like 1 lakh maximum. Okay, for HUF, sir, all together, like for all the members together 25,000, if all of them are like not senior citizens. Okay, if any one of them is like senior citizen with respect to whom the policy has been taken, then the deduction available is like up to 50,000. Then here, sir, not only for this medical insurance here, preventive health checkup is also covered. Okay, if at all the amount is spent for preventive health checkup. Amount spent on preventive health checkup. How much are this also like 5,000, 5,000, 5,000. But this 5,000 is not an additional limit. Within the 25,000 or 50,000, whatever is applicable, this is the sublimit. So, okay, let's say you have preventive health checkup as well as medical insurance premium. So, medical insurance 25,000 and again preventive health checkup 5,000, total 30,000 you will not get. Overall, you will be getting how much? 25,000 only. So, this preventive health checkup 5,000 is a sublimit of the overall 25,000 or 50,000. This 5,000 is not additional limit. It is within 25,000 or 50,000. It is within 25,000 or 50,000. It is within 25,000 or 50,000. Sir, here mode of payment is important, sir. Mode of payment, I mean how the insurance premium is paid, how the preventive health checkup amount is paid. Sir, here the mode of payment should be any mode other than cash, except for preventive health checkup. For preventive health checkup 5,000, you can pay it in cash as well, whereas for the other amounts like premium or contribution for national health scheme, it should be paid through any mode other than cash. Any mode other than cash. Except for preventive health checkup. Except for preventive health checkup. Any mode other than cash except for preventive health checkup. Sir, in some cases, the insurance companies will not be providing insurance policies to the senior citizens. Okay, if at all they are started taking policies at the age of like 30, 40, that time itself if they start taking policies, then it can be continued. if they want to start a policy at an age of 64, 65, that kind of situations, the insurance companies may not be providing insurance policies considering the high risk involved. So in such cases, okay, to cover them also or to provide a benefit to them also, the section is saying like, for a senior citizen, if no insurance company is offering policy, then they can take actual medical expenditure also as deduction to the extent of 50,000. Actual medical expenditure they incurred also can be claimed as deduction, but to the extent of 50,000. So let us write, sir, for senior citizens, unable to get medical insurance, for senior citizens unable to get medical insurance, for senior citizens unable to get medical insurance up to rupees 1 lakh, sorry, 50,000. For senior citizens unable to get medical insurance up to rupees 50,000, actual medical expenditure can be claimed as deduction. For senior citizens unable to get medical insurance up to rupees 50,000, actual medical expenditure can be claimed as deduction. Can be claimed as deduction. Can be claimed as deduction. Then the next one, so the insurance premium paid is in lump sum. Instead of paying it like yearly, he has paid it like a lump sum payment. So for the coming 10 years, he has paid, at once itself, he has paid like 5 lakhs as the medical insurance premium, which covers for the coming 10 years. So in such cases, like if you want to claim deduction, even though he is a senior citizen, in a single year he can maximum avail 50,000 only. The other 4,50,000, he cannot, he cannot avail deduction. But actually the policy is not for a single year, it covers 10 years. So that's why when the premium is paid in lump sum, which covers more than 1 year, then you simply take the lump sum amount paid, divide it by the policy tenure. Let's say 10 years, divided by 5 lakhs. How much it is? 50,000 for each year. You can claim it as deduction, provided if it is within the limits, to the extent of limits. Okay. So where lump sum, where premium paid in lump sum, where premium paid in lump sum, then total premium divided by number of years. Can be taken as deduction. Can be taken as deduction each year. Subject to 25,000, 50,000 limits. So this amount, total premium divided by number of years, or the 25,000 or 50,000, whichever is limit applicable, should be compared, and whichever is lower can be claimed as deduction. So 80D, medical insurance premium deduction is available to both individual and HUF. Where an individual has taken medical insurance policy for himself or spouse and children, then the deduction available is 25,000. If he or his spouse or senior citizens, then the deduction available is 50,000. Maximum deduction available is like 50,000. For parents, if he has taken, If he has taken medical insurance, then for parents another 25,000. If any of the parent is senior citizen, then it is like 50,000. Okay, if it is for HUF, if the members are like not senior citizens, then it is like 25,000. If any of the member are like senior citizen, then it is like 50,000. And in this section, it covers even the expenditure incurred on preventive health checkup. To an extent of 5,000 can be claimed as deduction, but that 5,000 is within the limits of 25,000 and 50,000. So here the expenditure should be met or should be paid in any mode other than cash except for preventive health checkup. Okay, then if the parent is, or if the individual or his parent is senior citizen, and for them medical insurance cannot be taken or no insurer is providing policies, then you can claim the actual medical expenditure also as deduction to an extent of 50,000. Then the last one, sir, where the premium is paid in lump sum. Lump sum means what? The policy benefits extends for more than 1 year. Then it should be, the policy value should be divided by policy amount divided by number of years. So that amount can be taken as deduction in each year. Okay, provided it should be compared with the 25,000 and 50,000 limits. Then we are moving on to section 80DD. Section 80DD, medical treatment of Section 80DD, medical treatment of disabled dependent. Medical treatment of disabled dependent. So 80DD is applicable for medical treatment of disabled who is a dependent. Sir, if SSC himself is disabled, then 80U. If only dependent is disabled, then 80DD. Understand, sir? If SSC himself is disabled person and he want to claim deduction, then not under this section. He'll be claiming under 80U. If his brother, sister, or his parents or his children, someone of any one of them is like disabled, then he will be claiming deduction with under section 80DD. Okay, so eligible SSC who can claim deduction? Resident individual or resident HUF. So here, sir, first time we are using the word resident in this chapter. Till now we didn't use the word resident, sir, but 80DD is applicable only when a person is resident. So now for individual who are called as dependents, sir, it could be spouse, children, parents, brothers and sisters. For HUF, sir, it could be any member. For HUF, it could be any member. For individual, spouse, child, parents, brothers and sisters. For HUF, he could be any member. So those are like eligible SSCs. Then the payment. I mean, for what the payment should be made? Sir, the payments can be made towards the treatment only, actual treatment. The second one is like, now he doesn't require any treatment, but they are contributing or they are making payments with respect to a insurance scheme, with respect to an insurance scheme where such scheme amount will be taking care of the dependent afterwards. So the problem is like, so parent is having a disabled child. So what's the problem of this parent? Till the time they were alive, they can look after the disabled child. But once they expire, so there will be no one to look after this disabled child. So they will not be having their own earnings as well. So that's why they'll be taking an insurance policy now itself. Once this parent expires also, the disabled child at least will be having some income at least, so that he can appoint a caretaker or someone. Okay, so for that reason, one is directly for the medical treatment, the second one is like a contribution for an insurance scheme. The payment will be made for payment is for medical treatment payment is for medical treatment or for a insurance scheme or for an insurance scheme or for an insurance scheme for maintenance of dependent disabled. Then the deduction amount. The deduction amount is, sir, usually 75,000. This is the maximum amount. 75,000. If in case of severe disability, then it is like 1,25,000. In case of severe disability, the cap is like 1,25,000. In case of normal disability, it is like 75,000. Sir, the person here, SSC is contributing to an insurance scheme. Why is contributing? So like, sir, if the SSC has taken for the insurance scheme has been taken by the SSC to take care of the disabled dependent or disabled child even after his expiry. But the problem is here, disabled person only expired before the SSC. Where the disabled person only expired before the disabled person only expired before the SSC, in such cases, the policy amount will be received by SSC, whereas there is no dependent child or dependent person to take care of the or to provide treatment or to take care of the maintenance and all. So in such cases, the total premium amount received will be, the total sum insured received will be treated as the deemed income of SSC, and it is taxable in his hands only. So write down, disabled dies before SSC, then in such case amount received disabled dies before SSC In such cases, amount received on insurance scheme taxed as disabled dies before SSE, amount received on insurance scheme taxed as deemed income to SSE. Disabled dies before SSE, then amount received on insurance scheme taxed as deemed income to SSE. So this is about 80DD, sir. So again, to revise it quickly. So 80DD is with respect to what? Medical treatment of a disabled person. It is available only to whom? Resident, individual and HUF. Individual himself shall not be disabled. His dependent like spouse, child, parents, brothers and sisters, any one of them could be disabled and they are dependent as well. HUF now it could be any member. Then the amount here, the payment should be made for actual medical treatment or for a insurance scheme as well, which will look after the maintenance of the disabled afterwards. Then the deduction amount available is like here maximum 75,000. If in case of severe disability, then the amount available, maximum amount that can be claimed as deduction is 1,25,000. Whereas if the disabled dies before SSE, then the amount received on insurance scheme will be treated as deemed income to SSE. Okay, so this is our 80DD. Now we are discussing 80U, sir. 80U. Deduction for disabled SSE. So here eligible SSE. Who is the eligible SSE, sir? Here the eligible SSE is like resident individual with certified disability. With certified disability. So here the deduction amount is like same amount, sir, 75,000 normally, whereas in case of severe disability, 1,25,000. 1,25,000. There is a condition also here, sir, along with return of income. Such a disability certificate also has to be, that medical certificate also has to be attached. Along with return of income, add copy of medical certificate. Provide copy of medical certificate. Along with return of income, they will be providing even copy of medical certificate. No, Niranjan. It's not flat, maximum only. These are like maximum 1,25,000. That would be there like up to 40%, 39%, no deduction, 40 to like 60%. So that would be there, but not relevant for us, sir. Not detailedly relevant for us, because in the question itself they'll clearly say for us like whether they are like severely disabled or else like only just disabled and all. Okay, see, understand here, for us there will not be a specific question on deductions. It will come as like a point in a other question, so they will not be specifically focusing on this sums. So something like if you have solved total income sums in the inter level, you'll be getting 2 or 3 deductions also. So those deductions you could answer easily when you have an overall understanding of the deductions chapter. Okay, if at all there is a specific deductions question, then they'll go in depth and will ask. Okay, so what we are expecting here is like a overall knowledge, and just you need to remember the keychain. So then understand here, you cannot claim both together. 80DD and 80U, both you cannot claim together na. Like assume a person is having disability. On his capacity is claiming 80U, whereas his brother or his father is claiming again, considering him as a dependent disabled person, they are claiming again under 80DD. Okay, so both are not possible. You can claim deduction only either under 80DD or under 80U. Okay, for the same disabled person, for same disabled person, for same disabled person, 80DD and 80U not available. For same disabled person, 80DD and 80U not available. For same disabled person, 80DD and 80U not available. Only under one section they can claim. Only under one section they can claim. Then sir, the next one is about 80DDB. Yes, treatment for specified diseases. Deduction in respect of medical treatment for specified diseases. Deduction in respect of medical treatment for specified diseases. So here eligible SSE. Sir, here individual himself might be suffering with the specified disease, or his dependent might be suffering with the specified disease. With respect to HUF, any member might be suffering with the specified disease. So eligible SSE here, resident individual and resident HUF who might be suffering with the specified disease, sir, with respect to individual himself, spouse, children, individual, spouse, children, parents, brothers and sisters. They should be dependent, sir. All of this should be dependent. In case of HUF, the one suffering with this specified disease could be any member. The one suffering with specified disease could be any member. So resident individual, himself, spouse, child, parents, brothers and sisters being dependent. HUF, it could be any member eligible SSC. Then deduction, quantum of deduction. So here the one suffering with specified disease you should take, okay, or the treatment is for treatment other than senior citizen, whereas here it is like senior citizen. Treatment other than senior citizen, and the next category is like senior citizen. If it is like other than senior citizen, then the deduction is like 40,000 or actual amount, whichever is lower, or actual expenditure, whichever is lower. In case of senior citizen, 1 lakh or actual, whichever is lower. మీ పేరేంటి? మోహన్. వంశీ. వరుణ్. నీ పేరా? చెప్పరా. భరత్ అని చెప్పు, స్టార్ట్ చేయి. Bharat, I usually go to coffee shop. మీ పేరు సార్? వరుణ్. వరుణ్. మీ పేరు? సాయిరామ్ విక్రాంత్. దర్శిని. యువర్ శివాని. శ్రీలేఖ. ఓకే. మిగతా వాళ్ళు ముందు నుంచి ఉన్నారమ్మా, అందుకని అడగలేదు. ఏంటండి? రాజు నిన్న సో బేసిక్గా క్లాస్లో కొన్ని రూల్స్ ఉన్నాయమ్మా ఇక్కడ. ఏంటంటే రెగ్యులర్గా రాకుండా లైక్ ఎవరన్నా ఒక క్లాస్ ఆబ్సెంట్ అయితే వాళ్ళు నెక్స్ట్ డే వచ్చి సాంగ్ పాడాలి. అదే ఈరోజు నుంచే స్టార్ట్ చేద్దాం. జూలై 1 కదా, ఈరోజు నుంచి స్టార్ట్ చేద్దాం. ఓకే. సాంగ్ స్కిట్ లాంటివి వాళ్ళు సాంగ్కే వాళ్ళు చేయట్లేదు, స్కిట్ వాళ్ళు చేసినాం ఆగోగే. ఓకే, ఇది ఫస్ట్ది. ఎలా పాడాలో పాడి చూపిస్తాడా, ఎలా పాడకూడదో పాడి చూపిస్తాడా? ఓకే. సో యూజువల్గా మార్నింగ్ క్లాస్ ఉండేది. ఒకవేళ మార్నింగ్ క్లాస్ అంటే ఫస్ట్ క్లాస్ అయ్యి ఉంటే అప్పుడు లేట్ కమర్స్కి కూడా అదే ఇంప్లిమెంట్ చేసేవాళ్ళం. బట్ నాది సెకండ్ క్లాసే అవుతుంది మ్యాక్సిమం. సో ప్రాబ్లం ఇఫ్ ఇన్ కేస్ ఎప్పుడైనా నాది ఫస్ట్ క్లాస్ అయ్యి ఉంటే 9 o'clockకి అప్పుడు అది కూడా ఇంప్లిమెంట్ చేద్దాం. ఓకే. ఇవన్నీ రూల్ క్రియేట్ చేసిన వాళ్ళకి అప్లికబుల్ కావు. So live people, you can just enjoy. If these people are singing songs and all, they'll sing through mic only. They'll come here in front of camera only, they'll sing. Okay. For you guys, like we don't have that possibility to let you guys sing here. So that's why. So but still you guys also come regularly. లిరిక్స్ చూసా అంతే. లిరిక్స్ చూసి పాడచ్చు. అందరు సింగర్లే. సో ఆల్మోస్ట్ లైక్ క్లాస్లో అందరూ సాంగ్స్ పాడే ఉన్నారు ఇప్పటిదాకా. లైక్ ఆ సాంగ్ పాడిన వాళ్ళు ఎవరైనా ఉన్నారంటే బాయ్స్లోనే దే విల్ బి 2-3 people. బాయ్స్ అందరూ మ్యాక్సిమం అంటే సో దే మేడ్ ఇట్ యాజ్ లైక్ ఏ గ్రూప్ సాంగ్. లైక్ సిన్స్ దే కెనాట్ సింగ్ ఇండివిజువల్లీ, దే మేడ్ ఇట్ యాజ్ ఏ గ్రూప్ సాంగ్. ప్రవీల్కి ఏమైపోయిందమ్మా? మొత్తం ఆల్బమ్ నేర్చుకున్నాడు మనం. ఎగ్జామ్ రాశారండి నిన్న? రాయన వాళ్ళు ఎవరైనా ఉన్నారా? భార్గవ్ రాసావు ఎగ్జామ్ నిన్న? కూర్చో. నేను జస్ట్ క్వశ్చన్ అడిగాను అంతే. రోడ్ ఎగ్జామ్ వేస్తాడే? నీ గురించి అడిగాను. ఓకే. టుగెదర్ యూ డోంట్ రైట్ ఎగ్జామ్. మీరు రాయలే? అసలు రాసింది ఎవరు? ఓకే. మీరు ఫస్ట్ బెంచ్ ముగ్గురు రాశారమ్మా. ఓకే. మీరు కోమలి, శిరీష, ప్రమద అండ్ గ్యాంగ్. మీరు రాశారు సార్ ముగ్గురు ఎగ్జామ్ రాసావు నువ్వు నేను క్లాస్కి వచ్చినట్లేవు నువ్వు ఓకే మీరు రాశారు యూ రోట్ ఎగ్జామ్ మీ పేరు అడగలేదు నేను ప్రణవ్ ఓకే రాశారు ఎగ్జామ్ దినేష్ మీరు ఒకసారి పాడి వినిపిస్తే పాడతాను నిరంజన్ ఆర్ యూ like 2 years back inter batch student that Niranjan only you are Niranjan okay thanks for confirmation that guy only that's why he's asking in between like first COVID and second COVID he attended classes inter So then the next section, sir, will start with 80E. Deduction on loan taken for higher studies. Deduction on loan taken for higher studies. So take 3 branches. So eligible SSE is here individual. Eligible SSE is like individual. So then the education or studies should be related to himself, spouse, yes, taken loan and sent his wife for higher education. Just like in Surya Vamsam, Venkatesh will send Meena. Okay, by the song complete, she'll become IAS and come back. Huh? Train number. ఆ ట్రైన్ నెంబరా నాకు గుర్తులేదు నాకు అంత నాలెడ్జ్ లేదు అయ్యా ఓకే స్టడీస్ ఆఫ్ హిమ్సెల్ఫ్ స్పౌస్ సర్ ఈవెన్ ఫర్ నాన్ తెలుగు స్టూడెంట్స్ ఆల్సో యూ కెన్ అండర్స్టాండ్ సూర్యవంశం మూవీ ఇన్ హిందీ ఇట్ ఈస్ దేర్ పాన్ ఇండియన్ మూవీ ఓన్లీ ఇట్ ఈస్ యాక్టెడ్ బై అమితాబ్ బచ్చన్ ఇన్ తమిళ్ ఆల్సో ఇట్ ఈస్ దేర్ యాక్టెడ్ బై శరత్ కుమార్ సో ఇట్ ఈస్ దేర్ ఇన్ ఆల్ ద లాంగ్వేజెస్ దేర్ studies for himself, spouse, or for children. And even, sir, with respect to a student, to whom he acts as, to whom SSE acts as legal guardian. Eligible SSE is like individual, for the studies of himself, spouse, children, or for a student for whom he is acting as legal guardian. Sir, here loan and all shall not be taken for LKG, UKG. It should be taken for higher studies. Higher studies means above 12th. Higher studies means above 12th. So, and the loan should be taken from charitable institution or from a financial institution. Loan from a charitable institution or for a financial institution. Loan from a charitable institution or from a financial institution, it might have been taken. Then, how long the deduction can be availed? Because here, sir, eligible SSE, individual, the deduction can be taken with respect to interest paid. Okay, let me write down that one as well. Deduction can be taken with respect to interest paid. So suppose after 12th he has joined CA or CMA. We don't know how long it takes. So that's why they are saying here how many years they can take deduction also. In the current year they can take deduction. I mean in the year of commence, in the year in which they have taken loan, that is the first year they can start taking deduction for interest, and after that another 7 assessment years they can take deduction. So overall 8 assessment years. Deduction available for 8 assessment years. So it would be like initial year plus 7 assessment years. So total 8 assessment years. Then, sir, we'll be going on to 80EE and EAA. Parallelly, we'll be discussing 80EE and 80EAA. So both are with respect to interest, deduction on interest on housing loan. Deduction with respect to interest on housing loan. Deduction with respect to interest on housing loan. First one, sir, here eligibility. Eligible SC. Under 80E also the eligible SSC is individual. Under 80EAA also the eligible SSC is like individual. Under 80E the eligible SSC is individual. Under 80EAA also the eligible SSC is like individual. Deduction amount. Deduction, sir, we are referring here maximum. The maximum amount of deduction available under 80E also 80E is 50,000, whereas under 80EA is like 1,50,000. 1,50,000. So with respect to housing loan, if there are 2 sections available and under one section 50,000 and another section 1,50,000, then everybody will choose 80EA only. But the problem is like there is a applicability. So like when you have taken the housing loan is relevant here. Okay, 80E is applicable to only for a particular financial year 16-17, whereas 80EA is for different years. So that we need to understand, and other conditions also we need to understand. So here other conditions. Other conditions, sir. First one, loan sanction in financial year 16-17. I mean only for the persons who has taken, only for the individuals who has taken loan in 16-17 alone, 80E is applicable. Whereas under 80EA, the loan sanctioned between loan sanctioned between 1st April 2019 to 31st March 2022. That means how many financial years are there, sir? 19-20, 20-21, 21-22. So total 3 financial years are there. 19-20, 20-21, 21-22 financial years. The loan should be in these 3 years. So from where the loan should have been taken? The loan should have been taken from banks or financial institutions. Both the cases same, sir. Loan taken from banks or financial institution. Loan taken from bank or financial institutions. So the next condition, sir, under 80, they are talking about the purchase price. I mean the house property purchase should be like within 50 lakhs. The purchase price less than or equal to 50 lakhs. Whereas under 80 EAA, they didn't mention the purchase price, sir. They mentioned stamp duty value. The stamp duty value should be less than or equal to 45 lakhs. Stamp duty value should be less than or equal to 45 lakhs. Here, purchase price should be less than 50 lakhs, whereas there, purchase price would be somewhere 60 lakhs also. But the stamp duty value should be how much? Less than 45 lakhs. Then, loan amount, loan sanction. Less than or equal to 35 lakhs here. Here there is no such limit. Loan could be even 45 lakhs also. Obviously it would be less than stamp duty value. So up to stamp duty value it could be like 40 lakhs, 41 lakhs, 42 lakhs also. But shouldn't be, but there is no such limit like only within 35 lakhs or like that. No such limit. So these conditions are important, sir. This will also come frequently in different points. Because under 80E there is no maximum cap. You can avail how much ever as the deduction. Interest amount, if it is 3 lakhs, you can avail 3 lakhs. There is no maximum cap for 80E. Okay, 80EE and 80EAA. The maximum caps are like how much? 80E 50,000, 80EAA 1,50,000. The conditions are like what? Loan sanctioned between in the year 16-17 in case of 80E. Whereas in case of 80EAA, the loan should be sanctioned in between 1st April 2019 to 31st March 2022. The loan should have been taken from banks and financial institutions. The purchase price in case of 80E should be within 50 lakhs. Whereas under 80EAA, the stamp duty value should be within 45 lakhs. The loan sanction limit should be within 35 lakhs in case of 80E. Under EAA, there is no such kind of loan sanction related limit and all. Then they should not own any other residential house property at the time of taking this loan. Okay, no other. SSE does not own any other residential house property. SSE, sorry, here, this is the last point anyhow, so I am writing it together. SSE does not own any other residential house property on the date of sanction of loan. On the date of sanction of loan. On the date he has taken loan, he should not have any other residential house property. Sir, if you remember little house property related points which you have discussed yesterday, under house property there is 24B where we can claim interest as deduction. Here this section is also saying what? Interest as deduction. See, when we'll come to this section means, let's say you are having a self-occupied property. If you are having a self-occupied property, the maximum interest deduction that can be availed is how much? 2 lakhs only. So, but you are actually paying 2,75,000 as interest. Then, but still how much you can claim as deduction there? 2 lakhs only. So, you have another extra 75,000 as interest which you cannot claim as deduction there. That 75,000 you can bring here. Okay. If at all your loan is taken between financial year 16-17 and all the other conditions are satisfied, then under 80E you can claim maximum up to another 50,000. If at all you satisfy 80EAA, then you could avail the total 75,000. So first you should take the deduction under house property head, the 2 lakhs. If it is a let out property, sir, then there is no limit actually. Okay, to the extent. Okay, the full amount you can claim as deduction. Okay, sir, default regime you need not to bother also because under the default regime these two deductions are not available. Sir, till now out of all the deductions we have discussed, only 80CCD subsection 2, 80CCH subsection 2 are only available under the default regime. Okay, default regime, the new regime. All the others are only available under the old regime only. So these deductions you need not to worry about new regime. Okay, so only under old regime. So under old regime, first you should avail the deduction under the house property head, self-occupied 2 lakhs. Let out property, there is no limit at all. Since there is no limit at all, full interest you will claim there only. So technically you will not come to 80E or 80EAA. Okay, you will not come to these sections because there only you will claim full interest as deduction. So even though they didn't mention it as like only for self-occupied, but actually this section will help only with respect to self-occupied properties only. And that also you have more interest more than that of 2 lakhs. 2 lakhs you will claim under house property head. The balance you will bring to 80E or 80EAA. Okay, whichever is applicable. So let us take an example. Example. We'll take a self-occupied property and a let-out property. Let us take straight away, sir, the NAV as for self-occupied property. What will be the NAV, sir? Net annual value. Will there be any income from self-occupied property? No, nil. So for let-out property, let us take here somewhere some 5 lakhs. Then first we should subtract what's our 24 subsection A standard deduction. Here it is like nil only. Here it is how much? 5 lakhs into 30% now 1 lakh 50,000. 24B interest then. So I'm giving in brackets, sir, the actual interest. The actual interest is like 3,60,000. The actual interest is like 3,60,000. For self-occupied property, sir, how much interest you can avail as deduction? 2 lakhs only you can reduce here. You can reduce only maximum of how much? 2 lakhs. Whereas for a let out property, what you can do? Total 3,60,000 you can subtract. Okay. So assuming there is only house property income he has, nothing he has. Okay, no other income he is having. So then we'll take like income from house property. How much are here? Negative 2 lakhs. Whereas here how much? Negative 10,000. Okay. Sir, since he is having loss, he cannot again avail 80 EAA or 80 EEB if he is having losses. Why? Because in the first point only we said the the deductions cannot exceed the total income. So here total income itself is in loss. So in this case you are not eligible to claim again deductions and cannot make the loss much more higher. Okay. Let's say he has even salaries income. Income from salaries he is having 8 lakhs in both the cases. 8 lakhs, sir, I am taking it as like computed. Computed now after standard deductions only. 8 lakhs. Sir, house property loss can be adjusted with salaries income or not? So, okay, with the salaries and income, the only loss that can be adjusted is house property loss. Okay. So, if you adjust here, how much, sir? The total income. Total income is 6 lakhs, 7 lakh 90,000. Now, out of this income, sir, if 80 deduction can be availed, how much is the 80? Sir, for let out anyhow, there is no chance of 80 deduction because there is no other interest. All the interest they have already claimed in the house property head only. The total 3,60,000 they claimed in the house property head only as deduction 24B. Whereas for self-occupied only 1,60,000 interest they cannot claim as deduction there. Assuming this property satisfies 80 EE conditions, then how much they can avail, sir, here? 50,000 they can avail. Assume if it satisfies 80 EAA, 1,50,000. The other 10,000 will go. Okay. Write down, sir, I am writing here. Assuming 80 EA condition satisfied. So how much is the deduction, sir? 80 EA. Assuming 80 EA satisfied. So 80 EA, how much here? 1,50,000. Here it is like not available. Then the net total income will be 4,50,000, 7,90,000. Sir, the other 10,000 interest can we carry forward? No other things like carry forwarding and claiming in the next year. Okay, so total interest related you are claiming deduction how much, sir? 2 lakhs under the 24B for a self-occupied property only. If at all 80 EA conditions are satisfied, another 1,50,000. The principal part repaid can be again claimed as deduction under 80C. If at all, okay, I didn't mention about 80C. If at all they have any principal repayment, that part can be claimed as deduction under 80C as well. Okay. You're having again second class, sir? Afternoon. 2 to 4. Okay. ATCCH subsection 2. What is the contribution or deduction available? Deduction available first before deduction. First, it is also a benefit because on his behalf, government is contributing or employer is contributing. That is also a benefit. So recognize it as income. Then afterwards, deduction can be availed to the extent of amount contributed, which is available in both the regimes. Then 80D, medical insurance premium. Sir, 80D is again eligible for individuals and HUF. For individuals, for him, spouse, children, okay, they are called as like family. Whereas like children are dependent. Parents, again separate limit has been given. For his family na here micro family or we are referring. Micro family means himself, spouse and children, dependent children. So then that is called as micro family. So with respect to micro family, 25,000 is available. With respect to parents, another 25,000 is available. If from his family any of them are senior citizens, then 50,000. Okay, from parents any one of them are senior citizens, then they are also 50,000. For HUF also 25. If any member is like senior citizen, 50,000. Then here there is even 5,000 sublimit is there for preventive health checkup. Why I am referring sublimit? Because this 5,000 is not an extra limit to that of 25 or 50. Within the 25 only this 5,000. Then one more point. Other than preventive health checkup, all the other medical insurance, insurance premium payment should be in other than cash. Okay. Then if the payment or if the insurance premium has been paid in lump sum, the policy benefits extends to more than 1 year. Okay. Then in such case, the premium paid has to be divided by number of years for which the policy will be continuing. So then you will be getting the yearly premium amount. So then check whether it is within the 25,000 or 50,000 limits. So to that extent you can avail deduction. Okay. Then for senior citizens, if insurance companies are not providing any medical insurance, then for them, instead of insurance premium, actual medical expenditure also can be claimed as deduction to the extent of 50,000. Then 80D we have covered. Then 80DD. Medical treatment for disabled. Okay, dependent should be disabled. If SSC himself is disabled, 80U. If dependent is disabled, then 80DD. Okay, eligible SC, resident individual and resident HUF. Spouse, children, parents, brothers and sisters. Okay, the treatment can be for dependent spouse, children, parents, brothers and sisters. In case of HUF, any member. So payment could be for medical treatment or for contribution to an insurance scheme which will look after the maintenance of dependent disabled. So the reduction is 75,000 in case of normal disability, severe disability 1,25,000. Then if at all they have taken insurance for the maintenance of disabled and the disabled dies before the SSC, then whatever the premium amount or the insurance amount comes to the SSC shall be treated as income of SSC and it is taxable. Then deduction under 80U. Under 80U when it comes, sir, where the SSC himself is disabled. You should remember for a same disabled person, you cannot claim under 80U on his capacity and dependent capacity you cannot claim again under the 80DD. So only under one section deduction can be availed. So here also the same kind of amount, sir. If it is normal disability 75,000, severe 1,25,000. But in case of disability, sir, proof of disability, a certificate issued by competent medical authorities has to be attached along with the return of income. Then 80DDB. Deduction in respect of medical treatment of specified diseases. Sir, specified disease usually chronic in nature. Chronic means, so it's not like fever, okay, these kind of things like typhoid, malaria, COVID, these things are like, they'll come and they can be cured in 10 days, 15 days, 1 month. But chronic diseases, the impact will be there for several years. Then the cancer, TB, paralysis, these things will come here. Okay. Eligible SSCs are here also resident individual and HUF. Individual means same family like spouse, children, brothers and sisters, parents if they are dependent. Quantum of deduction. the actual amount incurred for treatment or 40,000, whichever is lower. If the the patient is like a senior citizen, then the amount spent are 1 lakh, whichever is lower. ETEs are then deduction on education loan. So education should be for himself, spouse, and even for children, and for a student for whom he is acting as a guardian. The loan should be taken from a charitable institution or from a financial institution. Okay, so what is the deduction available, sir? With respect to the interest paid, deduction is available. Who is eligible for deduction? Only individual is eligible for this deduction. How long the deduction can be taken, sir? For 8 assessment years. Then 80E and 80E and 80EAA. Okay, both are with respect to interest paid on housing loans only. Understand, this deduction on interest is over and above the 24B interest deduction. Under house property, we can claim 24B interest, maximum of 2 lakhs. This is over and above 24B. Okay, sir, and one more thing, even though in this provision they didn't said like for let out properties this deduction is not available, but if you see logically, if it is a let out property, he will claim the whole interest as deduction under the 24B only. So there is no requirement of this. So practically 80E and 80EAA are applicable only for a self-occupied house property. What is the deduction available, sir, here? For eligible SSE being individual, the deduction is like under 80EE maximum 50,000, whereas 80EAA 1,50,000. Then condition, sir. Under 80EE, the loan should be taken only in the financial year 16-17, whereas EAA, the loan should be taken in financial year 19-20, 20-21 or 21-22. If you take loan now, there is no deduction available, sir. So you will be just getting the 24B interest deduction alone. Then loan should be taken from financial institutions only. The purchase price of the under 80EE, the purchase price of that house should be less than or equal to 50 lakhs, and the loan sanctioned amount should be less than or equal to 35 lakhs. Whereas under 80EAA, there is no limit with respect to sanction limit, but the stamp duty value of the property should be within 45 lakhs. And then the person to avail deduction under 80E or 80EAA, he shouldn't have any other residential house property. I mean, first time he is buying a residential house, then he will be eligible for this deduction. Okay, so now we'll start with, sir. Okay, A, B, C, D, E. Till E we have completed, then F. On F there is no deduction, sir, which is currently in force. So that's why we'll be moving on to, in 80E only, sir, there is one more thing. 80EEB is there. Once we'll complete that, then we'll go on to next sections. 80EEB. EEB. Interest on loan taken for purchase of EV vehicle. Interest on loan taken for purchase of EV. Interest on loan taken for purchase of EV. We need not refer again EV vehicle. EV itself is what? Electronic vehicle. Okay, interest on loan taken for purchase of EV. So why, sir, all the deductions, if you see, there is a purpose for giving a deduction. They want to encourage such investments. So previous section, if you see, they want to encourage everybody buying their own houses. Then the cost on government will come down. The government need not to spend money on constructing houses if they are buying on their own. Then, so they want to encourage that. Here EV vehicles, because to come down or to bring down the pollution, that is one thing. And major thing is like we are highly relied on imports of what? Petrol. The major import we do is like crude oil. Okay, because of that we are spending so much of our foreign currency. If at all we shift to EV vehicles, a lot of our spendings will come down. So there are two advantages on shifting to EV vehicles, because electricity we can produce within the country. Interest on loan taken for purchase of EV vehicle. So who is eligible SSE? So this is applicable only to individuals, sir. This deduction is applicable only to individual. So how much is the deduction available? Quantum. Quantum of deduction. The quantum of deduction is like 1,50,000. The quantum of deduction is 1,50,000. So this 1,50,000 is with respect to what, sir? Interest. Interest. Then conditions. What are those conditions? First one, loan sanctioned from financial institution. Loan sanctioned from financial institution. Then loan sanction between the period, loan sanction between the period 1st April 2019 to 31st March 2023. And then, sir, the benefit continues till the loan is completely repaid. Okay, the benefit continues till the loan is repaid. The deduction, the benefit of deduction continues. So there is no limit like 3 years, 4 years like that. The benefit of deduction continues till the loan repaid. Eligible SSC should be individual. Quantum of deduction is 1,50,000 with respect to interest paid. Sir, this is maximum, sir. So it's not like straight away 1,50,000. It's like maximum 1,50,000. If the interest paid is only 90,000, then the deduction is 90,000 only. Then we are moving on to section 80G, sir. ATG. Donation to certain funds, charitable institutions, donations to certain funds, charitable institutions, etc. Donation to certain funds, charitable institutions, etc. The donation is being made to certain funds and charitable institutions. Sir, here under this there will be 4 categories, sir. There will be a category 1, category 2, category 3, and there is even a category 4. Category 1, category 2, category 3, category 4. Sir, here category 1, there's a big list which we cannot write actually. So that's why we'll start from category 2, category 3, category 4. Then the others will come under the category 1. So under the category 2, the deduction available is like 50% of amount contributed. %50 of amount contributed equals to deduction. For what the amount should have been contributed if it is under category 2, PM drought relief fund. PM drought relief fund. For PM drought relief fund, if any amount is contributed, 50% of the amount contributed can be straight away taken as deduction. Then category 3. Then under category 3, sir, the deduction available is like 100% of amount contributed. But here there is a condition, sir, subject to qualifying limit. There is something called qualifying limit which we need to calculate. So 100% is eligible, but that should be within the qualifying limit. But that should be within the qualifying limit. First one. So what are the contributions that can be made under this section? The first one is like, sir, contribution to government or local authority for promotion of family planning. For promotion of family planning. Then donation by a company to Olympic Association or for any other sports authority. So two things are covered, sir, under category 3. One is for that promotion of family planning. The second one is like the sports related. So okay, for these associations, if any amount is contributed, 100% of the amount contributed can be claimed as deduction. But the condition is like what? Subject to qualifying limit. Okay. Then category 4. Sir, it will have a category 4 will have a detailed explanation also afterwards. So I'm putting a star mark also there. So currently write down 50% of amount contributed. 50% of amount contributed. %% of amount contributed. Here also subject to qualifying limit. Subject to qualifying limit. So for what the contribution should be made? That's the next question, sir. So there are 4 points here. The contribution should be made for charity. It could be for the purpose of charity. It could be to temples. It could be to temples, repairs and renovation. And it's for housing, accommodation. I mean for providing housing to that of poor and the underprivileged. Housing, accommodation. The contributions are made to provide what? Charity. To do charity, to do for temples and for housing and accommodation and for minority. For protecting minority interest. To protect minority interest. To protect minority interest. 4 people. You contribute to an association which is a charitable association. You contributed to a temple for what? For renovation or repairs of those temples. You provided to an association or any other person for what? They will be in providing the housing accommodation to the poor. And you contributed to an association which works for the protection of minority interest. Minority interest now, let's say like for tribal groups. Okay. Or for some backward people. So like that for minority interest. Minority interest, so here you understand minority interest means like which were having less population, which cannot impact politically and all. So for these people will come under the minority interest. So for these 4 people, the contributions, I mean, they are working for those 4 people or 4 categories of people's benefits. Then 50% is available subject to qualifying limit. Whereas under category 1, sir, the deduction available is like 100% of amount contributed. %% of amount contributed. So here also, sir, mainly if you see whenever there is any flood comes or any earthquake comes, all these actors will be contributing monies and all will be seeing. So majorly for what they will be contributing? PM relief fund, CM relief fund. So those are covered under category 1. How do we identify category 1 means? Either they will be PM relief fund or CM relief fund, or they will be covered with some disaster name. Okay, they will be covering some disaster like Gujarat earthquake. Okay, so like that it would be there. So for that funds, if any contributed, it would be how much? 100% of the amount contributed. PM, CM relief funds. So now we understand like under category 1, there is no qualifying limit and all. You contributed 30 lakhs, you can take deduction of how much? 30 lakhs. Category 2, you contributed 30 lakhs, but how much deduction is available? 15 lakhs is only available because there is a 50% is only available. But whereas for category 3, they are saying 100%. That means if you contribute 30 lakhs, you could avail deduction of how much? 30 lakhs. But there is a restriction with respect to qualifying limit. So we should calculate now what? Qualifying limit. Okay. Now what is called qualifying limit? Qualifying limit equals to 10% of adjusted total income. Qualifying limit is what? 10% of adjusted total income. Qualifying limit equals to 10% of adjusted total income. Qualifying limit equals to 10% of adjusted gross total income. So how do we calculate this qualifying limit? Take gross total income as this minus, sir, capital gains with special rates. Sir, short term capital gains only 111A is special rate, whereas long term both are special rates only. Okay, so that's why capital gains under which sections will come? 112, 112A, and short term related 111A. So all these you should subtract. Okay, capital gains under 112, 112A and 111A you should subtract, minus all other deductions. All other deductions under chapter 6A except ATG. All other deductions under chapter 6A except ATG. So you should take gross total income. From there you should subtract what? Capital gains. From there you should subtract all other deductions under chapter 6A except ATG. Except ATG. Then they'll say even exempt income also, if any is there, to be subtract. But understand, sir, exempt income will not even part of total income. They'll mention there, but logically you should understand exempt income will not even bring to total income. If you may not recall, but the name of the chapter exemptions is itself incomes which do not form part of total income. The chapter name of exemptions itself is incomes which do not form part of total income. So if a income is exempted, will not even bring to total income, will straight away exempt it. So that's why we need not to do this actually, but there in the format. Okay. So if you do all this, then you'll be getting what? The total income adjusted. Okay, the adjusted total income. After all this, you'll be getting what? Adjusted total income. adjusted total income. So let me write down one more point, sir, here. Deduction under category 4 equals to deduction under category 4. How much is the deduction means, sir? We should calculate to how much. What is the first one? Amount contributed into 50%. Or B. Sir, actually what we are wrote above, 50% of amount contributed subject to qualifying limit. The very usual mistake which people will do is like, let's say for example I am writing qualifying limit equals to 3 lakhs. Qualifying limit equals to 3 lakhs. Then amount contributed to government for promotion of family planning. Amount contributed to government for promotion of family planning. Amount contributed to government for promotion of family planning. Amount contributed to government for promotion of family planning is like 2 lakhs. Is like 2 lakhs. Then, sir, amount contributed for promotion of family planning, na, it is covered under which category? Category 1 or 2 or 3 or 4? Check and tell. Category 3 only it is covered. Okay, then I am writing contribution to temple. Contribution to temple for renovation 2 lakhs. So now tell me how much is the deduction available under category 3 and category 4. So the first point comes under category 3, second point comes under category 4. So first category 3, what will be doing? 100%, so 2 lakhs. What is the qualifying limit available? 3 lakhs. So within the limits only, na? So we'll take 2 lakhs. Then under category 4, how much is available? 2 lakhs into 50%. How much? 1 lakh. Within the qualifying limit. How much is the total qualifying limit available? Okay, 3 lakhs, right? So that's what which we usually understand. But the actual interpretation it is like balance qualifying limit. I mean, so B you should write, sir, qualifying limit minus category 3 deductions, the amount which is already availed under category 3 deductions into 50%, whichever is lower. Whichever is lower. It's okay, the amount qualifying limit minus category 3 deductions also you should subtract. Then you will arrive a balance. Such balance into 50%. So in this example, sir, how much is the deduction under category 3? Deduction so we have two categories. Category 3. Under category 3, sir, 2 lakhs, right? So 2 lakhs is allowed because 100%. Category 4. Under category 4 related, how much, sir? What is the actual, sir? 2 lakhs. Actual 2 lakhs into 50%. Then another thing also we should calculate. Sir, out of the qualifying limit, what is the total qualifying limit? 3 lakhs. 3 lakhs is the qualifying limit minus already adjusted for category 3 how much? 2 lakhs, because we are claiming how much? 2 lakhs here. So if you subtract 2 lakhs, Then balance into 50 percentage also you should do. How much it would be? Only 50,000. So now you should take whichever is lower. So the category for deduction is how much, sir? 50,000 only. But we usually take, sir, it's a common mistake which we'll do. We'll take how much? 1 lakh. So this part till now it is clear, right? How many categories are there? So total 4 categories are there. Okay. So but again, since even though we discussed at final levels, are they'll not be focusing much on this qualifying limits and all also. But for you to have an understanding, like qualifying limit is what? 10% of adjusted adjusted total income. How do we calculate adjusted? Take total income, subtract all the capital gain special rate incomes, then subtract all the deductions except ATG. You will be arriving the adjusted total income into 10%. Category 3 related, no problem. 100% subject to qualifying limit. Okay. But category 4 only there is a problem. Okay. The balance in qualifying limit into 50% and actual contribution into 50%, whichever is lower has to be taken. Okay. So now this section we have discussed, sir, but we didn't cover for whom this exemption, this deduction is available. Till now for all the sections we are referring like for individual or for individual and HF. So we didn't mention like for whom the ATG is actually applicable. Sir, eligible SSE is like all the SSEs. All SSEs, but all SSEs means, sir, this can be whom? All SSE means this could be, SSE means nothing but first he will be again fitting into which definition? Person definition. So the difference between person and SSE is what? You all are persons, but may not be SSEs. If you have the liability to pay tax, then you will become SSE. Individual, HUF, AOP, BOI, AJP, whereas company, cooperative society. The next one is like firm, local authority. So these are the company and cooperative. Sir, to get deduction for individual and HF, AOP, BOI, AJP, they should opt which regime? Na? They should opt old regime. For firm and local authority, sir, there is no problem at all. They have only one regime. There is no old and new. Okay, only one regime is available. Then for company and cooperative society, sir, again they have the normal rates and the optional rates. So they should have opted for normal rates only, normal tax rates. Normal tax rates, na, like for company, what, sir, like up to 400 crores na, in previous year 22-23, then it is like 25%. Above 400 crores, na, it is like 30%. That rate should have been opted. Then for cooperative societies, now up to 10,000, 10%, 10,000 to 20,000, 20%, above 20,000, 30%. That should have been opted. So this is about 80G. So then we are, okay, here, sir, two more conditions. Let me write down here only. If the donation is made in kind, it's okay. So if you watched Kubera movie, the villain father is praying like, I'll give you Vajrala Kiritam. Okay, so something like if something the donations are given in like kind form, then those are not eligible for deductions here. Second one, they should, if the donation amount is more than 2000, it should be in any mode other than cash. Donation in kind, and then donation greater than 2000 other than cash. It should be other than cash. Then sir, we are going to 80GG. 80GG is about rent paid. ATGG, donation with respect to rent paid. Donation with respect to rent paid. ATGG is like the donation with respect to rent paid. So first of all, again, who is the one eligible? Sir, eligible assessee is here also individual only. Who is not in receipt of HRA? If he is receiving HRA and claiming exemption under the salaries chapter, he is not eligible for deduction here. Nothing but they are referring to self-employed. They are referring to self-employed. Even okay. Okay. Individual deduction with respect to rent paid. Eligible assessee, individual not in receipt of HRA. So he should not be receiving what? HRA. Okay then. So not in receipt of HRA, na, if he is a salaried employee, if he is receiving HRA, it doesn't mean all the salaried employees shall receive HRA. If he is receiving HRA and if he has claimed exemption for HRA, so for HRA there will be exemption in salaries chapter, metros, non-metros. It's okay, so that exemption, sir. So if he is claiming that particular exemption, then he is not eligible for 80GG deduction. Okay, individual not in receipt of deduction. Then the quantum of deduction. Quantum of deduction. Quantum of deduction. So what is the quantum of deductions are here? Actual rent minus 10% of total income. Actual rent minus 10% of total income. So rent paid minus 10% of total income. Then the second one is like 25% of total income. 25% of total income. Or third one is like rupees 5,000 per month. rupees 5,000 per month. Okay, into multiply it with the number of months he has taken on rent. So out of all these three, we should take what, whichever is lower. So the problem is here, what is called total income? Okay, so here the total income means, no, total income here means take gross total income minus all capital gains under 112, 112A, 111A. Subtract minus, you should even subtract deductions. Except this one. Sir, if both 80G and 80GG both are there, then how to calculate? So we are saying here also, like, except 80G you should subtract. Here we are saying like what? Except 80GG, all the other deductions we should subtract. Then, sir, first for 80G only we will do. So that's why for 80G when you are doing, subtract even, exclude even 80GG and you do. Because you cannot find out even how much is the 80GG deduction. Because in the order, first 80G will come, right? So for first we'll start with 80G. So then 80GG deduction also we cannot find out. So we'll leave 80GG deduction also and we'll subtract all the other deductions. But by the time you come to 80GG, you already calculated 80G now, so you'll subtract 80G and then you'll come to 80GG. Okay? This and all just for listening in class only. You'll anyhow forget afterwards. You need not to write also. It's not such important thing also. So now here there are certain conditions, sir. What are those conditions? Accommodation should be occupied by SSE or spouse SSE or his or her spouse. Bhargav only spouse, not girlfriend. Accommodation should be occupied by SSE, spouse or minor children or in case of HUF na family. And all these people, sir, who are those people like this SSE, spouse, minor, children or HUF shall not own any other property. So these people shall not even own, any other accommodation. So either by SSE, spouse, minor child or HUF shall not own any other accommodation. Shall not own any other accommodation. And shall even file a declaration. That paid rent, that he has paid rent, for the payment of rent he should file a declaration. For simple section only, sir. Here there is an deduction available with respect to rent paid. For this, the SSC should be an individual and he is not getting HRA exemption. Then the deduction available is how much? Actual rent, maybe 30,000 per month he is paying. 30,000 you should take. 30,000 into 12 you will take, and they will take 3,60,000 minus. You will calculate his total income out of that 10%. Let's say 10 lakhs is total income. Then 10 lakhs into 10% na 1 lakh. So 3,60,000 minus 1 lakh you will do, you will get 2,60,000. Second one, 25% of total income na 10 lakhs into 25%, 2,50,000. First one 2,60,000 it came. Second one 2,50,000 it came. Third one 5,000 per month. That means 5,000 into 12, 60,000. So whichever is lower na 60,000 can be claimed as what? Deduction. Okay. So we have discussed now 80GG, right? So now we are moving on to 80GGA. So there are three sections are here: 80GGA, GGB, GGC. So all small sections only we can do quickly. (80GGA). So I know it would be frustrating to learn this many sections and all, but still we don't have any other chance. That's why they kept all this in the final level as important. If at all they kept in the foundation level, na, there itself. Inter-level, you have the chance of relying on GST. You could leave deductions chapter. You could only focus on residential income, residential status, house property, salaries. 3 chapters if you do properly, na. Set off, carry forward, clubbing. Done. Tata bye bye to inter. Sir, in new syllabus, if at all a student need to clear inter-level, na, 3 small chapters he learn also fine. Clubbing, set off, carry forward, residential income, residential status, IFOS. Okay, out of these 4 chapters, 3 7 marks questions will come. He'll get 21 marks. Okay. GST, first basics chapter itself, 2 7 marks will come. Okay, you should by heart some 8 or 9 theory questions. By hearting only, there is no other thing. Because if you write conceptually, you are not getting marks. There, whatever in the side answers that you should by heart. Then customs valuation problem, you should by heart. Format. Okay, here 21, there 21. 42 marks already done. Okay, 8 or 9 MCQs anyhow will work. But the problem is like, we'll do whole residential status, we'll leave only one problem. That one problem is the exam problem. Here also same thing, sir. Like, you learn like 3 or 4 chapters, but the problem is like, the first 2 chapters, why deductions we are discussing now only means, these are being connected to all those chapters. Like hardly if you learn like the basic tax computations, then you can do advanced tax, you can do all the international taxation. International taxation itself is there are like 4 into 7 marks questions, 28 marks are there. You could do advanced tax sum, 5 questions are there, 35 marks there. And then you could do one, under question number 3, there is one basic tax rates calculation sum. Okay, 3 or 3B. So 6 questions you could easily do. Okay, these 6 are only actually the points. Okay, where you could score. PGBP, the other chapters and all will do, but the point is like we cannot expect perfection there. Okay, to a 60% level, 70% level, it depends. But whereas like sometimes we'll do the first step itself is mistake. Okay, and we'll ask for stepwise marking. When first step is wrong, no, all the steps will be going wrong only. It's okay, so understand there is no procedural related marks, only step related marks are there. So they'll check step 1 correct or not, wrong, gone. Step 2 correct or not, wrong. So because you might have did one simple mistake in the step 1 or one adjustment mistake in the step 1, so it impacts the whole answer. Okay, so sir, I did the procedure and all properly, correct only. Why he is not giving marks now? You did correctly, but if I am evaluating the paper, do you think I have that much patience to think of your paper, like whether the procedure is correct or not, all those things? Or will they write any in the key sheet? Will they write like procedure will be like this? So check whether procedure is proper or not. They will not give like that. So they'll just think of the stepwise markings. Or if there are 3-4 working notes, they'll think of working note, whether this working note is there or not, working note correct or not. So you'll be getting marks there only. Okay, so usually the problem in tax is like, we'll do in the beginning only 1 or 2 steps if you think wrong only. What we'll think of like, okay, it's an average answer, maybe there will be 1 or 2 mistakes, but still I'll get some 4 marks or 5 marks, you'll think, out of 7 marks question. But he'll be giving just half mark or 1 mark for that question, so which will impact. Okay, so again, why I am stressing this now? There is no other way other than revising it number of times. Okay, so you should revise only. If you don't revise now, you'll never, okay, the first attempt only you could spend so much of time on this. So spend time on this, revise as many times as possible. If you properly revise now, sir, your group 3 income tax itself, you can get 60 marks here only. If you revise, revision only. The problem is like revision. But you guys are like used to watching marathons, watching EO classes. See, regular classes you will listen. You will not revise properly. Then again, you'll ask for, okay, if you look at the YouTube, go to BCCA channel and look at the comments. For every video, they'll put like when the marathon will be released, when the marathon will be released, when the marathon. Oh, if at all we release one marathon, they'll ask like, where is the part 2, part 2, part 2? Okay, then for other subjects and all, they'll be asking. Okay, when you ask like marathons also, they'll be doing only one thing. Watching marathons, simple, watching only doing. So watching will not work for you. Reading, recalling, reading, recalling. The problem again is like, you never try to recall in, okay, only in exam is the one place where you will recall. So just try to recall. So deductions chapter, even if you read as a whole, then try to think of one particular, give some 5 or 10 minutes and ask yourself like, can I recall 80 GG or 80 GGB or 80 ATC? If then you are recalling, then you understand yourself that you have learned that particular chapter. If you didn't remember or recall then itself, then how in exam you could recall? So think of them, do recalling. For the usual actual preparation plan should be, for every 30 minutes of study, you should give 5 to 10 minutes break. So in that 5 to 10 minutes break, you should not again watch Insta Reels and all. 5 to 10 minutes, like what you should do. So whatever you have already studied, then try to recall. How many you are actually remembered, what you didn't remember. Then your mind will have some kind of clarity. Okay, whether this chapter I understood fully, 30% or 40% or 50% and all. It takes time, but still that is the only approach which works. Okay, it's like you need not to like write everything, and so some people will be there like who will write the section numbers on a paper or charts and they'll be sticking onto walls and all, but they never look at that wall again. So okay, instead of writing it on walls, write it in book only. But it's morning time, including me, now what we are doing, if you wake up at 6 a.m. or 6:30 or whatever the time you wake up, the first thing you will check for is like your mobile. Then you look for notifications. Then already some 5 useless people will be there who might have shared already reels to us. Okay, we'll open that reels and we need to react, otherwise they'll cry. Okay, some reaction we need to put. Okay, either we should, okay, even if you have seen also, okay, again you need to react something, laugh or something you should do. Okay, in that time again you will scroll for other reels also. So okay, instead of okay, those days like in back then when there are no smartphones, people used to say forward messages, good morning and all. So now it's not actually good morning also not needed. You need to share a reel saying that you are alive. You open Instagram wishing good morning, good morning reel you should have been, and not good morning, some kind of post you should have been shared saying like good morning only. So instead of that, so okay, open the sections which you want to remember, read them first 5 or 10 minutes, then it will work. Okay, I don't know how many of you will do. I realized that after writing inter group 2 6-7 attempts, then okay, CA inter group 2 I wrote for 6 times consecutively. 6th time only I cleared. Okay, so by the time I come to 6th time, I quit believing in God. Okay, so till that point of time in between, like I used to go to temples and all, I used to pray for the result time and all. Then 4th or 5th attempt, I realized like this is not working. Okay, because I'll calculate for every exam. I'll be getting somewhere like 144, 145. Then I'll pray. 4 or 5 marks, give me something and all. Okay, it never worked. It comes there only. 144 or else like 3-4 marks minus only it will come. So this is only the advantage I'm expecting from you or not doing that to me. So why I need to trust you? So I started trusting me instead of God. That happened. Then I thought like something like, okay, in my CPT only, like I studied in an institute called Supervision. Okay, there itself, like the founder always like he'll be coming like regularly to the classes. He'll keep on motivating us, saying like you do this kind of techniques, whatever I said, recalling these things and all. He used to say. So I thought just like as you, who will do all those things and all. Okay, so there they'll be doing it like much more systematically also. They'll record stories also. So they'll tell this kind of techniques to students. Maybe out of 100 students, some 5 or 10 students might have actually implemented them. And they might got succeeded as well. So then again they'll record their whole story, how they did and all. Okay, and they play here also in project and all. Then also we'll see like overaction only they are doing. Who will do? It's okay, but those things and all again came to me like when I'm writing like 4th or 5th attempt. It's okay. Then we started writing things. Okay, where is my problem? So what I cannot do? So that time we used to have a subject like ISCA or ITSM. There's a subject there. Okay, that's the problem for us. Completely about systems only. Okay, systems, cloud computing, grid computing, systems architecture, systems audit, all those things. So those related things and all I couldn't remember at all. So I used to read, but I could not remember. So then we started writing short notes for them. Then every day morning, that's the thing. So I'll take one chapter short notes, I'll prepare that, then only I'll go for other things and all. So again for Companies Act section numbers, in income tax also like the PGBP important related disallowances and their sections. So all those things we used to write, I used to write on paper, then revising it number of times. Then afternoon or evening time, I'll test myself. Could I remember any of those sections or not? Okay, if I'm not remembering now, then again tomorrow I need to read it once again. So like that it works. Okay, but this realization came to me after 5-6 attempts. Inter. Okay, so inter I didn't last time. Group 1 I cleared first attempt, so I enrolled for articles. Group 2 even if I write 6 times also, by the time it comes to the final attempt I cleared Group 2. So there I have understood the situation and all. But the many people, the problem is like they never realize their problem or they never understand like what's actually lacking for them. So you realize fast what's your problem, where you are lacking. Okay, that no faculty can tell. So I'll be telling like many students also. So since they are asking for some kind of help, we'll tell something, but actually it should be self-learnt. Because I don't know what's your mistake. It's not like I give you a general prescription like you do this thing, you do this thing. Okay, you only know your strength, your weakness. That self-study you should have been done actually. So you should understand, do I have problem with memory? Okay, some people will have good memory, sir. They'll remember it like for 1 or 2 times only. So otherwise you need to read it for 5 times, 6 times, 10 times. There is no limit for it. You should do as many times as possible. Okay. Okay, just like as like when you have your fight with your boyfriend, so you'll remember dates like, right? Okay, like that day that happened, you talked to that girl in school. Okay, if they're from school days, it is carrying on. Now also they'll start with what? School days fight only. Raju, all those you know, right? Donation for scientific research and rural development. Donation for scientific research and rural development. So you have made a donation, sir. For what you have made this donation? Either to carry out scientific research or to rural development. So who is the SSC eligible for deduction, sir? Eligible SSC. Eligible SSC means any SSC who shouldn't have PGBP income. If he has PGBP income, sir, these already claimed as deductions under the PGBP chapter only, under section 35. Eligible SSC. Any SSC who is having no PGBP income. Then what is the deduction, sir? How much ever they contribute, that would be eligible for as deduction. 100% of amount contributed. %% of donation. Here also, sir, same as like ATG, more than 2000 should be paid in any other mode, should be in any mode other than cash. Should be paid in any mode other than cash. Should be paid in any mode other than cash. Then 80 GGB. Deduction with respect to contribution given by companies to political parties. Contribution given by companies to political parties. So many companies, sir, will be contributing to the political parties, okay, irrespective of their personal interest, they'll be doing because of the favors they need. Okay, or else like this political party will also threaten. Okay, either it is a local party or the regional parties or the national parties. Okay, simply they'll go like, so how do they'll get this election funding and all, sir? So to get the election funding and all, so everybody will not contribute voluntarily. So they'll go to the companies and they'll talk, okay, if you don't contribute this much means, next year will be into the power, you're gone. So then they'll be contributing. So that's why many companies will be contributing. So since they are contributing, they need to provide some kind of benefit to them, at least the tax relief. That's why it has been allowed as deduction here. Okay, so understand, this was not allowed as deduction under PGBP. If you contribute to political parties, it's not, cannot be treated as a business expense, not allowed under PGBP, but it is allowed under here, general deductions. Deduction with respect to contribution given by companies to political parties. Eligible SSE, sir. As in the heading only we said eligible SC is whom, sir? Company. But shouldn't have opted for optional. Nothing but company not opted optional rates. Company not opted optional. And the second point, sir, contribution should be in any mode other than cash. Contribution should be in any mode other than cash. Contribution should be in any mode other than cash. Contribution should be in any mode other than cash. Then the deduction is 100% of amount contributed. % of amount contributed. So here contributed means it need not to be given directly as a donation also. Okay, it can be spent for the benefit of political party. So okay, let's say a political gathering has been made, Siddham like. Okay, so last time in AP elections there used to be Siddham kind of political gatherings has been made, like big gatherings and all. So a company is sponsoring for that particular gathering. So whatever the expenditure incurred for that particular political gathering, that company only meets all the expenditure. So then they are not making any direct donation, but still that also will be covered under the 80 GGB. Okay, so contribution means it could be a donation, or payment likely to affect, or payment likely to affect public support, to political party, likely to affect public support to political party. It could be a direct donation or a payment made which could likely to affect public support to the political party. Or expenditure incurred on advertisement to political party, or expenditure incurred on advertisement to political party. So for a political party related, they are doing advertisement either in newspapers or any other place. So for that advertisement, whatever the expenditure they incur, that also can be claimed as deduction under 80 GGB. Then 80 GGC. Deduction in respect of contribution. Deduction in respect of contribution given by any person to political party. So in GGB it is like political party, here it is like any person to political party. Any person to political party or electoral trust. Or electoral trust. Sir, in the previous point, sir, we wrote company, right? So for company, even mention it as like it should be an Indian company. A company, even write in the previous point, Indian company. The company should be an Indian company. So deduction in respect of contribution given by any person to political party or electoral trust. Sir, if it is Indian company, already covered under 80 GGB. So here what we are covering, like any person other than Indian company. Okay. So again, they might be contributing to the political party as donation, or they might be doing advertisement, all those things. Okay. Any person other than Indian company. Any person other than Indian company. And the deduction amount eligible is like 100% of amount contributed. So till now, majorly all the sections, okay, there are another 2 sections also, let me complete them. So then we can say about income based. So there is like 80 JJA, next one, sir. Sir, we have started with 80C, 80D, 80E related one. F there are no section. G. H related, again there are no deductions. I related, sir, actually they are there, but not relevant for us, not important for us. 80 I series will be there, like IA, IAB. In the first introduction part, we have wrote a list of I related sections, but not related. Why they are not related means, actually, those sections related deductions are available for 10 years and all. Okay, starting from 2012, 2013, or 2011. So those 10 years also has been completed. So now if you look at like 80E, why we have discussed, even though loan might have been taken in financial year 16-17, but the relevant interest might be paying now. That's why still it has been relevant. But when it comes to 80I series, the business should have been set up somewhere in 2010-11, that period. Okay, and their deductions are available for 10 years, like whatever the profit they are, like 100% or 50%. But those 10 years, 5 years time also has been already lapsed. So it's like completely irrelevant for us to discuss. So 80I series we are not discussing. So since 80I is not there, after I, the next one is like what? 80J. So we are into J. 80JJ. Deduction with respect to profits or gains. Deductions with respect to profits or gains from businesses deduction with respect to profit or gains from businesses of collecting biodegradable waste. Deduction with respect to profit and gains from business of collecting biodegradable waste. So the eligible business, what business they should be doing? Eligible business, sir. SSE engaged in collecting. SSE engaged in collecting and processing biodegradable waste so okay, he collect this biodegradable waste and do what means he'll use it for generating power. He'll use it for generation of power. So the waste will be collected and this will be processed for generation of power. For generation of power or for production of biofertilizers. Biofertilizers or biogas or producing biogas or for producing any fuel or organic manure. So he should be into the business of collecting and treating or processing biodegradable waste. What he will do by collecting and treating it, he will generate power, electricity, he will generate biofertilizers or organic fertilizers or fuel or biogas. So any of this he should be generating. Sir, this business could have been started by any person. Eligible business could be any person. Any person should have started this kind of business. Then he is eligible for deduction. So deduction equals to how much, sir? What is the deduction available? 100% of their profits is like eligible for deduction. From this particular, sir, a company generates power through biodegradable waste and even thermal power. The profits earned from thermal power is taxable only. through this biodegradable waste processing and all, if they generate power, and through that whatever the profit they earn, that profit is completely eligible for deduction. 100% of profits. % of profits from this business of profits from this business. Okay, how long they can take deduction? They can take deduction for not for lifetime, sir, for consecutive 5 assessment years from the year in which they have started business. For consecutive 5 assessment years. For consecutive 5 assessment years, starting from year business commenced. Starting from the year in which business has been commenced. This is 80JJ, sir. So 80JJ is what? Eligible for this deduction is available for the persons who are engaged into the business of collecting and collecting, treating, or processing the biodegradable waste into what? For they are using it for what? For generation of power, for generation of biofertilizers, biogas, or fuel, or organic manure. Then 100% of their profits from this business is eligible for deduction for 5 years. Then 80JJAA, deduction with respect to additional employee cost. Deduction with respect to additional employee cost. Deduction with respect to additional employee cost. So eligible SSE. So who is the eligible SSE means, sir, here? SSE engaged in business SSE engaged in business plus for him 44AB tax audit shall be applicable. 44AB tax audit shall be applicable. So you should have been engaged in business, and for him tax audit under 44AB is applicable. Then amount of deduction. The quantum of deduction available is like 30% of employee cost. Thirty percentage of employee cost, that also, sir, additional employee cost. 30% of additional employee cost. And how long he can claim this deduction, sir? Sir, if you recruit an employee, you'll have some additional employee cost. So they are saying like out of the additional employee cost, since you are creating opportunities or employment for more employment to encourage you, they are giving you certain amount as deduction. So let's say you have taken newly 10 employees in a particular year. For each employee, 20,000 is the salary. 10 into 20,000 per month you are incurring 2 lakhs. In an year you are incurring 24 lakhs. Out of 24 lakhs you will take how much as deduction? 30% you can take. But for 1 year only you will recruit employees. They will be continuing only, right, usually. Okay, so that's why the deduction is not for one time. With respect to additional employee cost, you can take for 3 years. It's not like till the employee is there. For the first 3 years, you can take deduction. So let's say he is there in the first year. Second year, he has been, he has left the organization. Then in such cases, further employee, you cannot get again the deduction in the second year and third year. If he is continuing till the third year, then for all the 3 years, he will be getting. If he is there in first year, for first year, he will get. For first year, company will get the deduction. He is there till second year, then for first year, he will get, company will get, second year also, company will get. Now understand. How many years, sir? 3 years. Okay. So understand, sir, 3 years for a period of 3 assessment years. For a period of 3 assessment years, including in which employee joined or recruited. So now we should calculate what, sir? We should calculate here employee cost. What is the employee cost? So write down, sir, quickly, sir. 2 minutes only it will take. Additional employee cost. Additional employee cost. Additional employee cost. Additional employee cost equals to total emoluments. Sir, emoluments, now it means like, if you want, you could write salary, allowances plus perquisites all together. We call it as like emoluments. Salary, allowances, perquisites. The total emoluments paid to additional employees. The total emoluments paid to additional employees. So to call it as like additional employees, there should be an overall increase of employees. There should be overall increase of employees. What does it mean? I'll explain. There should be overall increase of employees. On last day of previous year. On last day of previous year. So let us for understand. 31st March 24, there are like 200 employees. Now in 24-25, 200 employees are there, right? On the 31st March 24-25. Now additionally 50 employees has been joined, but whereas 30 employees has been left. So how much is the overall employees, sir? So you should calculate like how much is there on 31st March 2025. How many are there, sir? 220. So how many are the additional employees, sir? 20 are only treated as additional employees. So additional employees here is like 20. Additional employees equals to 20. Then, sir, here, let's say, if at all like instead of 20, sir, we'll take it as like already they are having 2000 employees. Now additionally another 500 has been recruited and 300 has been left. So overall there is an increase of how many? 200 employees. Okay. So now out of these 200 employees, for all of those will be including in the additional employee cost, means no. So this section has been introduced with an intention to provide employment to semi-skilled or unskilled people. not to the highly skilled people like professionals and all. So high scale job related, like if a chartered accountant has been hired or a cost accountant has been hired, how much salary will be there as a minimum? A 50,000 has been there, right? So that means they are not covered here. So they'll come under the skilled category. These are cover only unskilled or semi-skilled employees. So that's why it excludes certain employees. Excludes, I mean, here we are having considering like 200 employees has been increased, but out of these employees you need to exclude certain people. Whom? Employee whose total emoluments greater than 25,000 per month. So if an employee is getting salary more than 25,000 per month, not covered for this additional employee cost deduction. So you should exclude them. See here, we took 20 additional employees, right? Out of them, 3 people are having 40,000 salary. So those 3 are not eligible for deduction. Exclude them. And second one, employees does not participate in PF. Does not participate in PF, RPF, recognized provident fund. So he is not participating in PF, then he is also not eligible. So out of the 20 additional employees, 3 people are having more than 25,000 salary, disqualified. 17 are there. Out of 17, 2 employees are not participating in PF. Those 2 also has been disqualified. So now how many are there? 15. The third one, sir. Employed for greater than 240 days. I mean, they should have worked in that year, in the previous year. Employed for greater than 240 days in previous year. So they should have been worked with the company for how many days? Minimum of 240 days in previous year. Employed for greater than 240 days in previous year. Sir, okay. Great. Okay. Employed for less than, I said greater than. Okay. Employed for less than 240 days in previous year. If it is like less than 150 days, in case of, if it is like less than 150 days in case of footwear, apparel and leather industries, because these are seasonal establishments, or they will not work throughout the year. Footwear, apparel, leather industries. So you should have been minimum worked there for 150 days in the previous year. See, out of 20 employees, 3 employees disqualified because their salary is more than 25,000. 2 employees disqualified because not participating in PF. So how many are there? 15 employees. Out of these 15 employees, like 4 employees has been joined very recently, only 90 days has been expired. Then in such case also, those 4 also ineligible. So how many will be there? 11 employees will only be there eligible. So one simple point, sir. Sir, this point, the problem is like, if an employee is hired in the last month of the financial year or last 2-3 months of the financial year, that means he has been worked for less than 240 days or 150 days, right? In such case, with respect to him, the company is not eligible to avail deduction. So will it be losing forever? No. For this year, the company cannot avail deduction. So in the next year, starting from next year, for the coming 3 years, they can claim deduction. Okay, let me write down that point so that this section will be completed. Employed in 24, examples are I am writing like, employed in previous year 24-25, worked less than 240 days or less than 150 days, whichever is the case. Okay, employed in previous year 24-25 worked less than 240 days or 150 days in previous year. Then 80JJA can be availed. Then can be availed from previous year 25-26. With respect to that employees, you can apply for, you can take from which year? 24-25 they worked for less than 240 and 150. So from 25-26 you take, and take 25-26 as the first year. Okay, can be availed from 25-26 for 3 years. Then 80JJA can be availed from previous year 25-26 for 3 years. Okay, sir.